Yo, what's good? I'm just gonna go in, gonna backtest the 2022 model. Then gonna be, then we're gonna tape read pretty much. So I just want to go into this contract code, just backtest 2022 model, just see where it forms. Oh, feels like I've already been on this contract. Let's see, like 2017. I haven't been there probably. Oh, I need to change my chat too. Good Monday. Like, gonna have a great stream today, and gonna have a great Monday. How's everyone doing? How y'all doing? How y'all doing, folks? Hello? It doesn't say I'm live. Hey, what's up with that? Hey, what's up with that? Come on. Hold up. Alright, whatever. We'll just roll with that. That should work. Okay. Let's have my chat closed. Okay. Probably have S and yeah. I want to pull up ES too. I want to see like SMT and stuff. All that stuff's important. All that stuff's important to see. Oh, this Nasdaq currently below true day open. Duh. I don't like this theme. Looks like we have SMT at the low currently. This could possibly be London low day here. Could have a classic buy day. Oh, that's why. That's why there's some late day volatility. Miss President Trump speaks. Just straight SMT manipulation. How many points is this? Like back in the day? Only 30. That's great. Like Nasdaq's only dropping 30 points back then. That's like what whole daily ranges were like. Whole like daily ranges were like 30 points, like 50 points. The amount of volatility we have is crazy. After he speaks, we get retracement, and then oh, that's gorgeous. Look at consequent encroachment. We get change say delivery, breakaway gap, and then we enter a buy program. That with this breaker. Just place above the breaker. Price reaccumulates within this inversion. Okay, so we're in a deep premium. Deep discount, my bad. So we just opened. So when we opened, we immediately displaced lower, and then we reaccumulate within that, or redistribute within that new day opening gap. This is pretty bearish. Let's see if we want to close some equal lows. Okay, yeah, we're probably and the buy side here. So we get a buy model here. After taking after taking sell side. Now we have a breaker. New week opening gap. It's got to be a daily imbalance there. Yeah. With this breaker. Is there a 2022 model? Well, I mean, I guess here. Sell side taken. Shift to market structure. And buy model. Kind of like the same type of profile yesterday. Volume balance. Volume imbalance there. And we're just in a buy model. Both these buy models like don't have much stop loss. Like there's not much manipulation to them. Okay, so draw on liquidity could be these highs. We could see some form of manipulation here. Friday, what's the news calendar? PPI. Wait, was that CPI yesterday then? Yeah. New day opening gap. Find support. Do we have SMT? I feel like we gotta have SMT somewhere. Friday the 13th. Ooh. Wait, am I even live right now? I need to make sure I'm live, bro, because it doesn't even say, like, usually I have a... Usually it tells me how long I've been live yet, and it doesn't have that up. Okay, I am. I don't know if I am, though. I need to make sure for real. Yo, what's good? Okay. Yeah, it should be good. We get manipulation below 130 in the PM session. Oh, yeah, we have a beautiful SMT here. And at 9:30 we just straight distribute. Buy side taken. That's the 2022 model right here. It fails. Near macro too. I want to finish some notes actually. Hey, low-key, like, there isn't that many notes here compared to the last one. I just put up me. Yeah, I just want to continue with the mentorship. That's just what I'm gonna do. I don't know why my charts got changed to this. So you have manipulation at 2. Wait, was this FOMC? Yeah, this was FOMC. And then we deliver to this current new week opening gap. At least on Nasdaq we do. Have to pull up FX replay to get 1 minute data. So we dig into a premium. So originally, kind of to buy side, then sell side. Notice here there isn't really an imbalance with this leg, except for this one. This is a breakaway gap. Okay, so we definitely have divergence at the highs. We have big divergence. Is there like an imbalance we close with it? Not really. Kind of just, we don't really have any major sell side. I'll say this is the only sell side I see. We failed to take that. AMD with time. All right, I think that's. $15-minute imbalance right there. There's a 2022 model. Buy side taken, market structure shift, imbalance. 5-minute 2022. How many points? Quick little 160. Wow, interesting profile there. Yeah. Just have straight melts here into this new week opening gap. Wait, did he do a review on it? No. All right.
I will be checking my Twitter. Good afternoon, folks. I will be checking my Twitter to see if you guys can hear me and if the audio is good enough. I have everything all the way up as far as I can get it. All you gotta do is send me a 5x5 on Twitter if everything's kosher. Volume level good. ES market here. All right, so I mentioned this morning with tweets that we had a opening range gap from yesterday's regular session hours close to today's electronic trading. I'm sorry, regular session open by looking at it like this. Okay, so here's that close from yesterday where we opened today. We rallied all the way up into that gap at 255. Mentioned that here, and I said extend that out, note that. Well, I told you it would hit this, act as resistance, trade down into this imbalance, which was the low to high lunchtime sell side liquidity. We have the market having returned back into this fair value gap there. I'll note it. I'm going to try to keep my annotations light. I already have a lot already on the chart, so we trade up into that. And we're looking for the market to trade back down into the sell side here and dig into this a little bit more. Okay, and we'll go back into electronic trading hours. And we have sell side here. Dollars firm. If you look at your 15-minute time frame on Dixie, DXY, 15-minute time frame, you can see we have relative equal highs from this morning. You might want to run up into that. And then we have actual gaps in the Wednesday 7:30 p.m. time window. So you might want to trade up into that 102.50, 102.55 for a dollar. That will be risk off for ES. So let's drop down to a 4-minute chart. 3-minute. 2-minute. 1. All right, so let's go back up to the 3-minute. See how we have this really nice, easy to see SIBI here, whereas it's not so clean when we drop down to the 2-minute. I mean, it's there, I guess, but I like the way it looks on the 3-minute. And then we have a volume imbalance up here as well. So we're at the opening range gap. That's what the shaded area is down here. I'm looking for the market to try to trade back down into this area here. That will be sell side and the old daily fair value gap SIBI low. And some of you are probably asking what that is. Let me see if I can pull it up here. It is this big down close candle here, using this candle's low as the high, that candle's high here as the daily fair value gap SIBI low. Okay, so that's what I'm looking at. Got a nice big wick here, so we'll drop back down. Lower time frame. We get animated on the downside, and we completely go back to yesterday's closing price for the opening range gap. Then we can maybe consider the new week opening gap that's current for this week. And I got a question from one of the students on Twitter. How do I make my lines like this? First of all, I'm using TradingView, obviously. But when you're dropping a horizontal ray, all the settings are this, okay? So you can see everything. And the text is set to middle and on the right. So that way, no matter what I do on my chart, it'll always be on the right side, okay? So let's throw that in there, next charge. So I'm looking at the Dow has relative equal lows on its hourly chart. I'll take a look at that real quick. Right here, that's too clean. And below that, if we drop down, we have this small little gap here for Dow traders, and then we have all the imbalance in here, all this back and forth in here. You want to look past that. If it's going to drop below here, it might dig into this area down here. And then we have these relative equal lows. Okay, see that? So back to ES. Let me do NASDAQ, because I know some of you'd like to trade that one too. Okay, so NASDAQ has, we have sell side here on the hourly. I mentioned the consequent encroachment of that wick earlier today. We had a little bit of wick past it, but so far it's been doing okay. And then let's go back to ES now. And 5-minute. 3-minute. So today is obviously the immediate day after FOMC. And whenever we had an FOMC event or a large range event, a lot of volatility and such, the very next morning session, you don't want to be doing too much of anything. Doesn't mean you can't paper trade, doesn't mean you can't study, obviously, but too many individuals want to go in here and try to chase it with their funded accounts or their live accounts. And it's many times proving more difficult for them, especially if they're not used to seeing the type of price action that's following a large range or high volatility event. So plenty of time, that last hour of trading, I'll commit to spending time past 3 o'clock until we get something that would be noteworthy. If something happens and I miss it and I wasn't able to call it out live, then it'll be just a missed opportunity. But my bias is bearish. I don't look at this as going higher. I have nothing in here that wants to see a buy side run. Now, when we have these opening range gaps, it's important for you to obviously treat them the same way I teach you to use all of the gaps that I like to use in technical analysis. They're not one and done, okay? So we extend them to the right. So right now what we just did, we've taken out sell side right below these two relative equal lows. Now I want to watch and see, does it come back up here and touch the top of that opening range gap? If it does, we would watch that to see if it wants to expand from that point. It may not do that. It may not do it at all. But I'd like to see it trade up to that level there, and which would also be what? Look to the left. What do you see? Consequent approach on that wick. So if it trades to that level here, hits it, then expands down, we would expect for sell side. We also have a gap in here, so we would like to see that trade down below it, come back up and act as what? Resistance, as I've outlined. This one would be this morning, or this afternoon rather, and we've seen it happen in the PM session and traded softer. And let's drop down to a 1 minute chart now. See the volume of bounce here at the top of that shaded area as well. All I've done is shown the range between previous day's close, regular session, to the opening price at 9:30. So that's this range here. That's what's being indicated. Okay. So watch the volume of bounce in here and the high. There really is no need for it to get up into here. Even though you see this here, I don't think that it needs to get up there. Sorry, I know those water bottles are noisy. So I'm looking at dollar, and I'm still favoring that run into the, let me actually give you a level. You can look at it on your chart. 102.45, and then the gaps in yesterday's opening when we started trading again around 6 p.m. There's a gap up in that area around the 102, what is that, 50? Yeah, 102.52, thereabouts, up to here, check it, let's try to show up. Yeah, 102.52 and 102.45. So in that range, there's an actual liquidity void for dollar. So that may act as a draw in addition to the buy side that's resting above 6 a.m. and 8:30 highs for dollar on the 15-minute time frame. So if we can get some kind of a run up into that, again, that would be risk off. So that would allow for price to trade softer. Okay, so we were able to get back up in this area. I didn't want to see it do that. Definitely don't want to see it up in here. I want to see it kind of stay heavy in here. We're in the 2 o'clock hour. NASDAQ looks heavy here. It has a fair value gap, discount fair value gap at, and this is going to be on your 5-minute chart for NASDAQ, the 9:25 a.m. for today. That's your fair value gap, buy side imbalance, sell side inefficiency. You want to draw a rectangle on that, extend to the right. That puts you around 12,837 for NASDAQ. The 9:25 a.m. for today. That's your fair value gap. Buy side imbalance, sell side inefficiency. You want to draw a rectangle on that, extend it to the right. That puts you around 12,837 for NASDAQ. All right, so now I would like to see this candle that's forming right now. We're on a 1-minute chart as a reminder. I'd like to see this candle close. leave this little bit of a gap here, trade up into it. It doesn't have to hit the high of that shaded area, but then I would want to see it go into that area and then sell off going into the sell side right in here, okay? Okay, so now we have the range. There, let me zoom in a little bit. I don't want to see it run away yet. I want to see it pop just above this candle's high. So we're trading at 95 even. If it trades 95 even or 95.25, we watch that with a hypothetical stop loss above here and look for sell side. Otherwise, it's probably just going to run away without me, and that's fine. Plenty of time still in the afternoon. So you guys got to see me earlier in the week show the doubters that buttons can get pushed with precision, huh? I have a whole lot of other things I'm going to do this year that a lot of people have said I would never ever do. It would never be seen. I have a lot of stuff like that for the rest of the year. All right, see how we're trading into that gap now? Okay, so you want to kind of screenshot your chart like right here. Right there, that's good, just like that. And then monitor how it trades from here. Again, we're looking at this level down here as the draw. So like imagine a magnet down below here and price being drawn down, and that's kind of like the analogy I use when I teach my students. Now, days after FOMC, we have a very large range. It's important to remember that there's a different degree of precision that is lacking in days like this. It doesn't mean that you can't find things to trade off of. It doesn't mean you can't find setups. It just means that the market tends to be a little bit more reluctant to just run away for you in your favor. Many times you'll get retracements farther than you want to see, a lot more consolidation than you want to endure, and it's very frustrating, especially if you're accustomed to seeing very quick, low resistance liquidity run conditions for your setups, which is what you should be looking for. You should be looking for that in price action and trying to get those types of setups predominantly in your studies or in your executions. Watch that wick here. Consequent encouragement there. We want to see this candle turn bearish. That will be a confirmation. So when you're watching price, these are types of things that I'm looking for. Their signatures that I like to see. It kind of keeps my mindset on if I'm bearish, like I'm holding that opinion here, and we're looking for, or I'm looking for, let me make sure I'm very clear about that. I believe that we're likely to draw down here. Because of that, I want to see what would be considered a premium array, things that would be acting like a classic resistance idea. My PD arrays, for instance, like these 3 consecutive up close candles, that's a bearish order block. Then you have the consequent encroachment of this wick, which is a gap. It trades just a little bit past it, but that's fine. And we also have the fair value gap here. We traded up into that. And we moved away from the high end of that opening range gap. So we're watching to see this price remain heavy, or if it retraces, we have to wait until we get closer to 3 o'clock hour. My suspicions is really lining up with, before we come to the close of today, I think we'll be down below here. At some point, I think we'll work this level here. But I kind of want to spread this mentorship experience across different times, and we're doing a lot of the AM session, which is convenient for a lot of folks, and less convenient for the folks across the pond for this time of day, because it's a little later in the day. A little bit more of a sacrifice for them. But I will be doing some London session things as well, so that way we'll be up and watching that time of day a few times before the close of this mentorship in November. So that way it gives you kind of like a comprehensive approach to looking at a full 24-hour market day. And that way you may not be all that thrilled about any one particular session right now, but that might change because you may want to do something in your personal life that allows you to make a change for you to trade in the London session, which is a very, very difficult one in the United States. You have to really be willing to change your sleep schedule many times. So far, I'm not seeing anything in dollar that is confirming that it wants to go up into that buy side, which is allowing ES to struggle with a run lower. There's a small little dollar 1 minute fair value gap. It's a buy side imbalance, sell side efficiency on the 146 candle for Dixie. Just now trading into that, so we can snap higher on dollar, preferably here, and that would lend well to lower prices on ES. Dow is still struggling with its sloppy little consolidation on its 1 minute chart. Volume imbalance, we've traded up into that here on ES, so you want to have that on your chart too. The volume imbalance is my PD array where there's a separation between 2 candles and their bodies are not touching, or at least overlapping, or I said it wrong. The bodies of 2 candles consecutively, right after one another, if they aren't touching at least, there creates this separation. Even though there's a wick here that goes down into this candle's body and there's a wick on this candle that goes up into this candle's body, that is a volume imbalance. And the market tends to go back up into those areas, revisit it, reprice it, and then move away either in your favor or against you. I don't mind the volume imbalances being traded through. That's one of the very flexible PD arrays, which makes it unfortunately difficult for students to learn because you want them to act like an order block or a breaker where it's very finite. It does this and nothing else, that type of thing. But you're also learning that all of my PD arrays have a inversion aspect to them. So when the narrative changes, what used to be a bearish PD array can be utilized as a bullish PD array. So it provides real context to the classic view of support and resistance. What I'm not doing in classic support and resistance, I'm showing you the actual underlying pinnings of the market that creates that buying or selling idea with support resistance theory without leaning on the classical find an old low, find an old high. I'm not doing that. I'm showing you within the context of price delivery. So now watch that volume bounce again here. We keep digging up into it, digging up into it. So now if I show aspect, very fine for balances being traded through. That's one of the very flexible PD arrays, which makes it unfortunately difficult for students to learn because you want them to act like an order block or a breaker where it's very finite. It does this and nothing else, that type of thing. But you're also learning that all of my PD arrays have a inversion aspect to them. So when the narrative changes, what used to be a bearish PD array can be utilized as a bullish PD array. So it provides real context to the classic view of support and resistance. What I'm not doing in classic support and resistance, I'm showing you the actual underlying pinnings of the market that creates that buying or selling idea with support resistance theory without leaning on the classical find an old low, find an old high. I'm not doing that. I'm showing you within the context of price delivery. So now watch that volume bounce again here. We keep digging up into it, digging up into it in here. Dollar just was not having any of that buy side balance. So it hasn't provided any kind of support yet. It's one more PD array in the form of a volume imbalance, and it overlaps with a last down close candle on the 1 minute chart. So we're in that now for dollar, but it doesn't look like it's going to do too much for us here. Now, because it's a little bit later into the 2 o'clock hour, almost 2:15, it's 2:13 now. Because we've been drifting lower, it's okay for this market to want to rally on the short term and revisit all of this area now because we've broken several lows. We've taken this low out with this low, with this run here. Went lower again, went lower again. Did we see any follow through on the downside? No. So it's short term oversold without an indicator. And if it's going to go up, is there any imbalance in here? There's this one. And we'd have to watch and see, does it want to respect the high end of that opening range gap, which is this shaded area? It can go there, have a little bit of a wick through that, and that's permissible, that's fine. But I would be, because of the time, I would be willing to allow for now that run above this short-term high here because we have relatively equal highs. Stop losses are going to be what? Trailed lower. So there's a small little pool of liquidity in here. And if the market trades up to that point, we'd want to watch and see, does it quickly reject that level and start going back down again? If it were to do something like that, then the next pass through this low here should be accelerated, and it would quickly want to get down into that liquidity down here. So it wouldn't be the opportunity to be pulled away from the marketplace. In other words, anyone that would have a stop loss down here in the form of a sell stop, whether to sell short on a breakout lower or trailing it or keeping it there from this morning because they're a long-term position trader, they are just waiting to be engaged. So when the liquidity gets taken, should it trade down here, all those sell stops become a market order to sell at the market, which would be a real good reason for the market to be covering shorts there because there's a plethora of willing sellers at a lower price where shorts can buy back their short positions from those willing lower sellers. This, again, is a reminder. This is the type of day where, yes, I can see setups. Yes, I can point them out to you on Twitter. But it's more meant for you to see how different, how much more difficult price delivery is in days like this, where it's right after FOMC. It kind of like is a recurring theme this year in this mentorship with you all, because obviously I've taught how to find the good setups in all the core content, the videos and lectures I've done on YouTube. But sitting with me over real-time price action and outlining what constitutes a low probability condition, what constitutes a high probability condition, and training yourself to understanding what it feels like while you're watching price when it's not a good, really easy low resistance run condition where the market just rips in your favor. You don't have any drawdown. It's quick and goes right to your targets. That's what I'm training you to look for. That's what I train my students to look for in price action. And we're back at the high of that opening range gap. High. And as I mentioned before, it could spike up through that and take out this high maybe in here. And then I want to see it reject that, not keep wanting to climb up. That's not what I want to see here. In fact, if it were to do something like that around and before 230, 240, that would be, in my opinion, reason to anticipate much more than just the opening range low as the last hour of trading opportunity. I think we could, again, revisit the new week opening gap of this present week here if it were to do this outline here, which would be spike up, clear this here, and that would give smart money the opportunity to sell these buy stops that are being trailed on short positions. And then by being short here, selling to those buyers, buying below here, buying down below here, and then buying at the new week opening gap high that's below, as I mentioned there. Okay, that's what I see as a possible scenario going into the close today, and the reason therefore why I would expect that. But the real hallmark to this year's mentorship is I'm spending my last year teaching in this capacity. I don't want to be doing this, once I get to the second week of November. It doesn't mean I'm going to fall off the planet and not communicate with anybody, but it just means that the level of engagement that you guys are used to now won't be so high. But it's important for you to be able to see what it looks like when the market is fickle. Okay, when I say it's fickle, it's very it's very hard for a new trader to trust in these environments, which is understandable. The mature students of mine that have been with me for a while and they know how to find low resistance liquidity run conditions where the market just runs real quick, has those explosive price moves, where they have the big ranges and they don't even come back and fill in the ranges, it just keeps on going and going and going and going. Those types of moves, you learn how to find them by looking at these types of days and these types of conditions. And yes, you can make a career out of trading in these environments, but my question is why would you want to do that when there's days where you can go in there and inside of 20 minutes your entire day's done? Whereas something like this here, you have to babysit it for a long period of time. It consolidates, it retraces, it does a lot of things you don't want it to do. And the whole time you're in these types of days, you're expecting the things that you learned in books to pan out. All these patterns and things, continuation patterns, and it is very frustrating if you don't know what you're looking at because you're trying to project your expectations about how the market is likely in your best favor to perform, but it's reluctant to do that because, hang on a second, these stupid batteries are rolling off my desk here. You have to submit to a lot more frustration in these days. So if it's your goal to look for days where you go in there and you do the least amount of time in front of the charts, which is always a good thing, especially if you know what your model is. In the beginning, you have to submit yourself to a lot of this. Okay, you're gonna have to be in front of the charts studying, looking at old price moves. That's my back testing. It's not going in there using market replay. That's something entirely different. But you have to take a lot of screenshots and study. And then when you look at the charts, you want to write on them how, if you could go back in time, being shorted an old high after it took out a previous high, and you classify that as a smart money entry on going short. And then you would look at the chart and say, okay, if that was the case and that smart money entity is going short there, where's the ideal scenario for them to look for an opportunity to get out of that trade, which would be below an old low where sell side resides, or a discount inefficiency. The next inefficiency, if you go on ES, on your 1 minute, I'm not going to move my chart because I want to keep it right where it is. If you look at your chart on the 1 minute, on the 910 candlestick, there's a small little fair value gap there, and it's in the form of buy side imbalance, sell side inefficiency. You want to draw a rectangle on that, extend it to the right. It's essentially 39.85-ish, thereabouts. So that's the next drawdown. Now that right there, what I told you about trading back up into the high end of that opening range gap, that stuff's not in books. Okay, that's not, nobody's teaching that. They're going to teach it now because I'm showing it to you. But that in itself right there, that's perfect for a 5-handle run right there, and that could be your entire model. Or you could wait for it to trade down to that 39.85 level I mentioned just a moment ago, which is the next inefficiency. Then the sell side is at 39.82.5. But high resistance liquidity runs like this, see how it moves a little bit and comes back, rebalances, moves a little bit, comes back, rebalances, moves a little bit. It's very, very, to me, I'm bored by this kind of stuff. Like I don't, and not in the sense like, I mean, all of it's boring to me because I know pretty much what's likely to do. But when it's like this to me, I'd rather do something else. I'd rather read, I'd rather go do something else with my family members, take my dogs for a walk, whatever, and not be in front of the charts. And you might not feel that is something you would want to do because you look at this and thinking, this is making perfect sense to me. It went up into that fair value gap you talked about here at 2 o'clock, here, traded up into the high end, the opening range gap high. It did that. It broke lower, came back up, and displacement to the downside. That in itself is 5 handles. You can literally replace your job with just that move. That by itself, it's all it requires. But unfortunately, you see me doing 100 handle moves, 50 handle moves, 30 handle moves, 20 handle moves, over and over and over, example after example, and you think that that's what you want to do. That's what you want to do because you see the hypothetical paper trade results in the monetary sense, and you think, if I could just do that. Whereas if I'm trying to teach the skill set to you, I want you to be able to feel confident that you can find the least of all things consistently every single day. Even in hard days like this, these types of setups form continuously. And when you sit with someone that can talk about it before it happens and explain the logic behind it, and you get to see it, experience it, that's mentorship. It's a very comforting feeling because there's no emotions behind it. There's no necessity for it to be profitable. There's no concern for it to be incorrect. You're studying it. You're learning how to submit yourself to it because the market's going to do what it's going to do. And you can't hide it. There's your 39.85. It's almost like a dog whistle, isn't it? Come to daddy. Go down the sell side. 82.50. That's where it's resting. And I want to see it. I would like to see it rather spike through 39.82.5 and get into that 39.78 1/4. At least touch that again. That would be cool. But how we trade, if at all, to or through 39.78 1/4, That is indicative of how we trade going into the close, in my opinion. Dollars found its wings here. I had to take out that short-term low right around that. In my opinion, 250, that's where it's resting. And I want to see it, but I would like to see it rather spike through 39.82 and a half and get into that 39.78 and a quarter, at least touch that again. That would be cool. But how we trade, if at all, to or through 39.78 and a quarter, that is indicative of how we trade going into the close, in my opinion. Dollars found its wings here. I had to take out that short-term low right around that. $143 time window. What is that? On a 1 minute chart, took out the low. Yeah, 142. So I'm back to wanting to see that 102.45, 102.52 for dollar. Should allow for that sell side on ES that you're looking at here to get tagged. Nasdaq's nice and heavy. I mentioned that buy side imbalance, sell side efficiency on its 5 minute chart. It's at 925 this morning. You should have that extended out to the right. And here is your sell side being delivered on ES right about now. So Dow has finally rolled over, gave up the ghost. It's now accelerating to the downside, which is good. You want to screenshot this, folks. Screenshot this, and then when it hits the daily fair value gap city low, screenshot that one as well. It's almost like it's pre-recorded, isn't it? Oh, you folks. It's boring, isn't it? It's like a Groundhog's Day event. You ever see that movie Groundhog's Day with Bill Murray, where it just repeats over and over and over again? That's what it's like in this community. We look for the same things to happen all the time, and it's fun. We don't get animated. We don't get crazy about it. We don't flip around and get all hopped up on goofballs. But it's just very relaxing. It's meditation for me, and I'm sure for you, it's like a thrill ride because you're seeing something being proven every single day. Every day. Precision, delivering consistently. There's no mumbo jumbo to it. It's based on real logic that the market's going to work off of and how they book. So that was the price run for this afternoon. I know I said I would try to stay with you until a little bit into 3, but that's about as much as I would want to have as an example, trying to push you into something. The remainder of our time here, I want you to think about what is more likely to occur here. Is it more likely for the bottom end of that shaded area, which is down here? Is it more likely for that to be traded to here next, or for it to come back up and take out this high? What do you think is more likely to occur? Don't be afraid to make a choice and be wrong, because this is what you're doing this year with me. You're watching price. You're supposed to be watching this without any kind of, and I know some of you already shorted this. I know some of you probably already tweeting to me saying, high five, woo, we're going to the club. I don't want to see that. That's why I don't look at Twitter while I'm talking to you, because I know invariably I'm going to see something that's going to get in my head, and I'm going to be worrying about you doing something based on what I'm saying, which is what you shouldn't be doing. Don't trade on this in place, because it's just me talking about price action. I'm teaching you how to submit to this process. I'm teaching you how to read price action, why it should do certain things, why it shouldn't do certain things. And because you're going to see example of this every single week, every single day, whether I'm doing it live or whether I'm talking about it in Twitter, where it's all time, date, stamps, and I'm taking your attention right to specific candles, you're getting a comprehensive learning experience that you can't really get anywhere else. Okay, it's one thing to listen to somebody talk about, okay, here's a signal, I'm buying here, I'm selling here, this is my target, but you don't really know why they're doing the trade, which begs the question, why are you even doing that? Like, how do you know what you're doing is going to pan out? You're basing your belief system, your religion revolves around the person that you're trusting that signal derives from. And to me, that makes no sense. Okay, so we traded down into that city low, which is what I want to see. So now it should have no difficulty at all trading down into the low end of that shaded area here. And it should remain heavy. Heavy is like where it just keeps wanting to go lower, having really no interest at all, wanting to go higher. Just for purposes of later on in reflection for me as the mentor, give me your feedback on what it feels like seeing this unfold like this, understanding where these turns could form, how much it could trade higher up, and if it was to do so, what that would indicate, how to anticipate where the market's going to gravitate to, draw to, which is the number one thing you're trying to learn first, and throughout the process of you discovering what your model is, and as a trader, what you're going to do, knowing where price is going to go. That's your number one goal, because everything else outside of that is going to get you in trouble. Order blocks, fair value gaps, all those things. If you don't have the direction right, and that doesn't mean bias. Okay, it doesn't mean bias. It means where's the next draw on liquidity, because you can trade without a bias. Okay, I saw a tweet, and for the life of me, I apologize, I can't remember. I believe the person's name on Twitter began with an F, F-E something, whatever. They asked, is it important to have a bias to trade intraday, or must you have an intraday bias to trade? Or can I trade just the internal intraday liquidity? Once you understand what you're looking for in the aspects of time of day, and when certain macros come in, and again, a macro is knowing where the market's likely to draw to next with liquidity, and you understand what you're looking for in the aspects of time of day, and when certain macros come in, and again, a macro is or can I trade just the internal intraday liquidity? Once you understand what you're looking for in the aspects of time of day and when certain macros come in, and again, a macro is knowing where the market's likely to draw to next with liquidity and the time. So you have to know really what you're looking for liquidity and who's been making money right now. That's essentially what the macros do. They roll again against who's in the money right now. That's what their function is. Because whatever movement in price action that's been unfolding as of recent, whether it be a 1 minute chart, 5 minute chart, 15-minute chart, whatever, at specific times of the day. And yes, I will teach you these macros, okay? I know it seems like I'm not trying to do it. I am, but I'm teaching you other things that will help you when I do the lecture. You're like, oh, yeah, okay, I understand what he means now. Because if I do it prematurely, all you're going to do is have 1,000 more questions that you're going to clamor to me on Twitter or send me emails that I'm not going to reply to or talk to me through TradingView. Because there's too many of you coming at me asking questions that I physically am one person. I can't do that. So you have to submit to the way I do things, which unfortunately, even my paid members, when they came to me, some of them were impatient. They thought they knew how to learn how to do this without even knowing how to do it. And they would get frustrated and quit and run away and think that it doesn't work because they don't have the patience to listen to somebody that knows what they're doing. You want to be mindful of certain things that I'm talking about in the daily range, the weekly range, and how these intermarket relationships tie together at certain times of the day. When you understand those things, and then I introduce the macros and explain to you what they are, why they form, what their purposes are, it will make perfect sense to you, and you'll anticipate shifts. And they would get frustrated and quit and run away and think that it doesn't work because they don't have the patience to listen to somebody that knows what they're doing. You want to be mindful of certain things that I'm talking about in the daily range, the weekly range, and how these intermarket relationships tie together at certain times of the day. When you understand those things, and then I introduce the macros and explain to you what they are, why they form, what their purposes are, it will make perfect sense to you, and you'll anticipate these things happening in the market. You'll know exactly what is going to most likely occur at that interval right now. In a 20-minute span, you know that there's going to be a setup forming. You could set your watch to it. You can sleep in and say, okay, I don't care about anything else. I'm going to go right in there. I'm going to trade based on what I see within that 20-minute window. And then find your 5-handle, 10-handle move, turn off your charts, and go back to doing whatever you want to do. And folks, nobody teaches like that. They want you to follow these moving average crossovers and trend lines and all this other stuff. See, we're below the opening range gaps low. See that? So now our attention goes to the new week opening gap high. If you look at the range from here to where we are right now, half of that is right in here, thereabouts. Okay. So if we looked at this high down to the new week opening gap high, that's also about halfway, which would be what? Like a measuring gap. So when I look at targets where I've already outlined, I said I think I'd like to see this level traded to. That's one part of it. Also, because we have left this gap here, this fair value gap here, I'd like to see that stay open. Why? Because it happens to fall about midpoint to where my next target would be, which I told you earlier when we were up here. I said I'd like to see it get through the bottom of this. If it does, we'll gravitate down to that new week opening gap high. But because we have this range high here, which is the opening range gap high, and I understand that this feels like 1,000 things swirling through your head. What gap is what? What are you talking? I have lectures for all of this. But it's important for you to see me discuss them real time because there is logic behind what it is I'm teaching you. That way, when I'm putting a video up that's pre-recorded and it's all the theory behind it, you'll remember, oh yeah, that's what he was talking about. And he has lots of examples of that. And you can go to these live streams because they're recorded. Click on my little live tab or go into the 2023 mentorship. That's where they're being added to as a playlist. You'll be able to go through and hear me talk about these things. And it was over live data. It wasn't pre-recorded. It's not cherry picked in hindsight moves. It's not market replay. Everything's here for you to see that was happening in front of everybody that's watching it. But if we have a target and we know where the inception of a price move should form, which was again at the high of this opening range gap high. Remember I was mentioning, I said it would be permissible for it to spike up into here. That would be fine. It would be better had it done that and then started to break lower because, in my opinion, we would have already been trading at the new week opening gaps high down here by now if it would have ran up and took that high. But it's not necessary. So if you were trading this, you have to trade with leverage going short at the opening range gap high, but allowing for a run above this high here and this high here, which can be scary. Or you would wait for it, had it done so, if it would have spiked up there and broke down, you would wait for the standard fair value gap that go short inside of, and then ride it down to the opening range gap low, and potentially if it goes lower down into the new week opening gaps high. So you don't see the benefit of doing that or even understanding that if I talk about it conceptually in a pre-recorded video. If I give you rules about this is what you can do, this is what you can expect, what's going to happen is because there's so much information on my YouTube channel and so many different videos, it feels overwhelming. Like, where do I go with all this? Like, this is a lot of stuff. You should be in these videos, the live sessions, because I'm literally holding your hand. And everybody that's watching all the older videos and not watching these and thinking they can come back to them later on, you're doing it incorrectly. You're doing it absolutely incorrectly. You don't want to push these later because this is what people paid me for. When I was teaching mentorship, I was doing this. And because like some of you are new, you want the give me the short sell entry, give me the stop loss, give me the target, get me into a trade. My first round of intake for mentorship was very frustrated. And I lost a lot of people going into month 2 because they wanted that spoon feeding, give me a trade type thing, even though they signed an agreement knowing it wasn't that. We were watching and studying price. You should hopefully, because you've seen many examples, and that's how everybody finds me. They see what my recordings are done, their executions. You want to see how I'm doing that. Well, I'm doing that right now, explaining it with real-time charts. I'm telling you where the logic is, what is in my head, what the algorithm should do, why it should do this and why it shouldn't do that, and where it should draw to. And I'm giving you the points of reference, how I get to that. This is the level I think it's going to go to. So if you don't watch these videos, or if you can't sit through them because it's a lot of talking, you think it's a lot of this, get to the point. The point is I'm teaching you. I want you to know how to do it correctly. I don't want you learning from somebody else on YouTube that doesn't know how they're doing it. They're getting lucky, and once in a while they have an event that makes them seem like they're consistent. You have to simply sit down with them every single day. If they're going to do it, be willing to do it for you. Do it every day. If I'm not here live on YouTube, I'm doing it live in Twitter. I'm constantly bombarding you with evidence that this stuff repeats over and over again. But you're not going to appreciate it unless you understand what the purpose is. The purpose is for you to desensitize yourself to the fluctuations in price. And trust me as the coach that's going to put you in conditions that's going to be favorable for you with a model that you don't really know that you're going to be using yet. Live on YouTube, I'm doing it live in Twitter. I'm constantly bombarding you with evidence that this stuff repeats over and over again. But you're not going to appreciate it unless you understand what the purpose is. And the purpose is for you to desensitize yourself to the fluctuations in price. And trust me as the coach that's going to put you in conditions that's going to be favorable for you with a model that you don't really know that you're going to be using yet. Because there's certain things that you probably want to do right now, like you want to trade fair value gaps, or you want to trade breakers, or you want to trade something else that I've taught. Many times my students have come through that because they watched my videos leaked on Telegram for years. They were out there and they're still out there. And they thought they understood what they wanted to learn when they finally said, I'm going to go right to the source. I'm going to sign up with ICT and join this private mentorship. And no, you can't do that. And no, I'm not doing future mentorships. And no, I don't want your money. And all. I'm teaching you right now. I'm actually teaching you better live like this than I did because I don't have any of you constantly asking me questions like I had when I had 865 people in my first class. They were asking tons of questions live. I can't focus. Nobody could. Nobody could do that. Nobody can do that, okay? And it was very frustrating for me. I was overwhelmed with all of the fever that everybody was asking because I want to answer everybody's question. And when you send me emails, I want to be able to do that, but it's impossible. Like, look at the comment sections of my videos when I open them up. I can't sit there and answer all those replies. I would never get anything done. I'd be divorced. My wife would be like, I don't even know you anymore. I already spend too much time with you as it is. So I try to do as much as I can, and I think I outperform everybody else out there in education, whether paid or someone that's charitable like I am now, giving it out for free. We're getting ready to hit that new week opening gap high. It's almost like it's written in the stars. But when I'm talking to you, I'm lecturing you because I want you to understand why it is that you should be submitting to some idea that I've taught or am teaching. Because if you don't know that, you won't know what to reach for when it's not moving in your favor. When we're here consolidating like this, some of you probably thought this dropped down here and said, oh, it's got a pin bar. Oh, look, it's going up. And you were thinking it's going to reverse and go back up and fill this gap. You know who you are. You were hoping it was going to do that because I said it was a measuring gap. I taught you what a measuring gap is now. Inception of the move here. Terminus. Halfway, right in here. Where's the gap? Right there. What kind of gaps are going to be? Measuring gap. Measuring gaps don't fill. Just like breakaway gaps don't fill. But what happens if you do get a measuring gap and it happens to trade up and filling? Doesn't matter. I'll still treat it the same way. So see what I just did there? How do you know when a measuring gap forms? I just taught it to you. You have to know where the beginning of a move happens, which I explained to you here. Where's it drawing to? Well, you have a couple things you got to look for. I told you the 39.85 level was the fair value gap, and we had to see how we trade there. Well, it traded down into the 39.85, then consolidated, broke lower, traded to the low of the opening range gap, low, rallied a little bit, consolidation leading to what? This is when your classic continuation patterns work. This is a bear flag. But I also teach when those flags are fake, and you can fade them where other traders would be caught offside. That's what's in my core content. So when I'm teaching you, and I'm trying to give you all of this experience that I have, it's for you to understand what your mind should gravitate towards when you're feeling scared about holding on to the idea that you're in. Watch the consequent encroachment now, here. this level here. It's the midpoint between this week's current new week opening gap. But if you don't have any experience and you're in the trade, I mean, you know, it's like you probably got lucky enough to get a funded account challenge passed, or you had a live account that you opened up prematurely, and you put on a trade, and you think you know what you're doing, and then all of a sudden, you can't breathe. The market's not moving for you. You're not stopped out, but you start guessing. What's going to happen next? Am I going to get stopped out? Is it going to turn against me? What is normal? You don't know that. Why? Because you've not done what I'm doing with you here this year. That's exactly why my students that paid me fail. They're lazy. You don't want to be a lazy student. You have to be doing these types of things. I'm out here publicly proving that these things work. There's nobody that's going to be able to stand in front of me, whether in court or in public forum, going to say that these things don't work, because I'm absolutely proving. I'm cramming it down your throat. I'm stomping on your neck with it. There's no way anyone can say this stuff doesn't work. There's not any sound logic to it. There is absolutely sound logic to it. This is algorithmic price delivery. It's undeniable. These things repeat over and over again every single day. But if you don't want to listen to me, there's the consequent encouragement traded too. If you don't want to listen to me, you don't want to go through the proper learning experience, what's going to happen is you're going to go to Jim Bob's Dollar Menu Mentorship on YouTube. Okay, you're going to go to their Discord, you're going to go to their Telegram channel, you're going to go and follow whatever they're doing, okay, their Zoom calls or whatever they're doing, okay, and they're going to tell you, they're going to give you the 5-minute spiel on ICT. You're going to get into trades. You're absolutely going to do that because they're using my logic. They're not teaching you, they're parroting what I've done, what I authored. But they don't have the 30 years experience to guide you when the shit's deep and you have no idea what to reach for, what to trust. I'm sorry, folks, but plan your trade, trade your plan, that stuff doesn't work all the time, especially if you don't know what the hell it is that you're expecting in price. You don't know when a certain series of candles is a real reversal yet, or just a simple consolidation or retracement to go lower again, or go higher if you're bullish. You don't have that yet. And these new guys that are teaching my stuff, they don't have that experience either. All of their funded students are funded because I spoke. That's how that worked. And these individuals that are trained to use my stuff from someone else, they won't be sustained. They'll lose their funded account because they're not learning with 30 years, 3 decades of experience. I've sat and watched these candles paint for 3 decades. I've had good days, I've had bad days, I've had good months, I've had bad months, I've had good years, I've had bad years. And I can tell you the story, what price is going to do on second interval charts. 1-minute chart. I do that because I want to make sure that there's next to no time for someone to take what I'm doing, unless you're clearly just taking my chart or whatever I'm doing, just reposting it somewhere else, pretending that you're me. But it's such a small interval. By the time someone that wants to take it and then put it in their Telegram channel and say they're doing it, it's already moved. You have to be right here under my wing. That's the number one reason why I'm teaching with a 1-minute chart. I'm removing any chance for all these copycats out there. And I'm giving you my time, I'm giving you my energy, I'm giving you my wisdom, and I'm telling you how I hurt myself in this business. I'm telling you how to prevent it from hurting you. And you would want to learn how to do that. If you were really trying to do this and you were honest with yourself, you would want to know everything that I'm willing to give you. And unfortunately, that's going to come with a long-winded delivery, because there's a lot of stuff that took place in the last 3 decades that I learned from that isn't in books. So if you're here to learn, I promise you, you're going to learn things that no one can teach you. It's not anywhere else. I don't care who tells you they can do what I'm doing. They're not going to do it. I'll be here all year doing this. You might see 1 or 2 events by then, but I'm going to tell you exactly what price is going to do. And by the time we get to the second week of November, you're not going to need me. You're not going to need ICT. You're not going to need me to talk to you on Twitter. Watch the new week opening gap low as our next objective, which happens to be this low to that high measured move down there. So that'd be a nice little run. If it does that, I will close the session with that. But you didn't push a button, ICT. Oh, I'm pushing a lot of buttons. A lot of people listening to me talk today, they don't like this. So yeah, I'm pushing buttons. But I want you all to succeed. I want you to do well. And I want to have a clear conscience when I step away from all of you in this capacity in November, that I've given you all that you need because you spent time with me over live data. If I didn't know what I was talking about, if I didn't know what the price was going to do, first of all, you wouldn't be watching me. You would already turn this video off. You would turn the stream off and go watch something else. But you know what's happening because you're seeing it happen in your chart. This is live data. It's real time. You can't fake it. It's right there. And everything's already on the chart. So it's not like I'm adding something to the After Effects type thing. It's not photoshopped. Everything's here. The logic as to why it should do it, I'm filling in all of that while I'm talking to you. So that way, when you ever get to the point where you make the decision, you do this on your own, but if you ever make the decision where you want to trade with real risk, whether it be a funded account, whether it be real money of your own, you won't feel lost when you're watching price action. All these things will be familiar to you. Oh, this is normal. Price should do this. Where the average neophyte, someone that's trading with retail logic, they see a candle like this, and they think it's the end of the move and the world's ending, and it's going to be a break your neck reversal type thing. You won't feel that simply because it's happening in the chart. Up close candles is a good thing. If the market's going lower, we want to see that form, because eventually, if it trades down below it, it will revisit that as what? A bearish order block, and you want to see that repel price lower. So when we're bearish, we're not afraid of green candles forming, even if they're big. That's the reason why I teach the way I teach with my stop loss management. I teach all of my students, do not jam that stop loss up. Don't even worry about that stop loss. It's being paid to do its job. Your job is to watch price. Is it constantly giving you instant feedback that you're on side? Is it doing things that is acceptable based on how I teach order flow? Do you see a depth of market over here on the right side, over here, new ladders, anything like that? No. Everything I've read in these candles is just the price itself, knowing that it's likely to gravitate towards the levels I've called out here, focusing on the time of day that it's going to draw down there. What's it doing? It's rolling on those individuals that made money this morning. How did they make money? Being long. So all of this move here is to do what? Remove their chance of profit. But I had my stop loss below the low of the day. It should have never came back down here, and yet it did. It shouldn't do these things. My technical says this. My indicator says that. It shouldn't have done these things, and yet it did. I'm giving you all the insights so that way you don't wrestle with these real concerns. I'm not trying to dismiss them. I mean, they're real things that need to be considered while you're trading. You got to manage the trade. You got to manage yourself. But how do you manage yourself? How does ICT get on here or go on Twitter and feel confident about the things I'm talking about and say, look at this, look at that, wait for these things to happen, and it happens? Because I've been here before. I have an internal dialogue that I'm communicating to you. So that way it'll adopt this comfort. Not completely stress-free, but you'll feel comfortable because you've been here before. And you'll hear my voice in your head, which is what I refer to myself as the ghost of the machine. Your brain is the machine. That's the mechanism between your ears that you're utilizing that comes up with these decisions to get in and get out. But once you get in there, what you're lacking right now, because most of you are new, is you don't have experience. So when you're spending time with me, live streams like this, or listening to my Twitter spaces where sometimes I talk a little too much in colorful language, and I'm trying very hard to stay balanced in this one today. And I'm literally doing everything I can to keep from going off the rails because I am bipolar, and it's very hard for me to do this live and not do that. But these talking points, these things that bore most of the young folks, your youth is a disadvantage for you in that regard. The folks that have been trading for a long time and have had break even, hit and miss or unprofitable, when they hear someone like me that have spent many years doing this, and I have experience in being able to do it correctly, when they hear that, it fills in all those potholes that they experienced that caused them damage over the time that they tried to make money in the marketplace and struggled, because these things are not, even in Mark Douglas's book, as good as it is, he's not going to tell you how to submit to these ideas, because those ideas that I'm talking to you about, they're mine. He's not privy to that. Market Wizards books, those guys and gals in those books, they're not privy to this information. This is mine. So I'm the only authority that you're going to have to learn from. Despite everybody else out there trying to be equal to me with my own creation, they're not. So you need to listen to me in this regard, because it's going to help you once you are out there in the trenches. When you have real risk, when you have a real potential to blow your account, have drawdown, what are you going to lean on when it feels like you can't breathe and anxiety is gripping you and you just can't stand it anymore and you want to collapse the trade because you just can't hold it anymore? You're not even in a losing position. Sometimes you're going to be in a position where you're making money, and it's harder to even think then because it's just taking off. You didn't have a limit order in. It just started running, and now you're thinking, what do I do now? You learn that by looking at these live streams and spending time with me, because we're not surprised. We're not surprised. Do you hear any surprise in my voice? Do I sound like any of this was a shock? Like, look at this. Can you believe this? We're down here in this new week opening gap right here. Who would have known this? How could anyone have guessed that it was going to perform like this? It's old hat, and it's going to be old hat for you. And you'll have these same memories pop up because you've spent time with me. And you'll hear the things I've said during these live sessions that is going to be anchored in your understanding. Your memories are going to be rooted in these endeavors, not from a book, not from a video that I talked about, a conceptual idea, static, in hindsight, watching it live over real-time data. That's experience, folks, and you can't fake that. It's either there or it's not. It's either correct or it's incorrect. The logic is sound or it's not sound. And I hopefully have been communicating, at least in my opinion I have, been presenting enough evidence to suggest that there's something different that I'm doing that warrants your closer attention. And if you want to make a lot of money and avoid blowing your account and going through all of the turmoil that every live fund trader goes through and be able to navigate that, you found the right person to listen to. I'm not going to try to sway you with materialistic things. I'm not trying to convince you to get rich overnight quick. I'm teaching you how to submit the time. Submit to a process that's logical, that makes these markets book. What makes these markets move around? I'm teaching you that. You don't have to subscribe to the idea that there's an algorithm if you don't want to. You don't have to. You just use these concepts and say, these things are what I believe in. Fine. If you do that, you're still going to end up in the same place. And it's fine. That's what I want you to do. Submit yourself to these ideas and keep the algorithm part of your mouth. Don't even worry about it. If it's a struggling point for you, don't even refer to it as such. It is what it is. But if it's a struggling point for you, just don't even talk about it. Dollar index is flying high here. We've cleared those levels up into that gap I mentioned. That was yesterday evening, New York local time. And the high on the candle at 4:45 for dollar index is 102.58. Am I saying it right? I want to make sure I'm doing it right. Yeah, hold on. Yeah, 102.58, and we've traded up to a high of why can't I see that? 102.63.5. So we had a nice run there. So we traded into buy side. We went into 3 premium arrays on dollar. We took out 3 lows on ES, which is, well, we did not take out 3 lows. We made 3 lower lows. We had this low, which was lower than that one, and then we had this low here. This low falls short of the new week opening gap low. At the same time, we made low, lower, lower low. The dollar index has made its run up into 3 premium arrays. It's the high on your 15-minute candle of DXY dollar on the 445 from Wednesday, 4:45 p.m. That comes in at that 102.58 level. There's buy side there, and then to the right of that high on the 15-minute time frame for dollar index. And I know this part aggravates some of you. Like, can you just show the chart? No, you need to do this while you're watching, because I'm looking at it just like you are, and you're going to be doing this on your own anyway. But then the gaps that are in the 7:30 and 6 o'clock from Wednesday, those actual gaps there, that's a liquidity void, a real liquidity void. There's a premium right there relative to what we were talking earlier, and then we have the highs formed at the 8:45 low. 8:45 time window this morning, which comes in at the high on, this is 15-minute time frame again on dollar. That is 102.45. Okay, so we went through 3 premium arrays, and we took out 1, 2, 3 lower lows, and look at the price reaction here. So if you have 3 elements of liquidity tapped into, and you're seeing a low form at a logical level, which was what? Consequent encroachment. Then we have the lower low, the body's respecting consequent encroachment. The market drops again, taking out that low here, and with dollar index, trading into 3 premium arrays. What's likely to occur? There you go, retracing it. What time is it likely to occur? Going into the 3 o'clock hour, you have what? This macro unfolding here. What's it reaching back up into? New week opening gap. I'm sorry, opening range gap. And right in here, remember I was earlier referring to this area here where it could trade up into that and then go lower, and it's permissible. That liquidity right now is where all trailed stop losses are. This one has already been taken out, but it's also here now. So make sure this high here on this candle at 4,000, that's noted. So nothing's a surprise, okay? Not time elements and how many times we go into a area of liquidity. If it's not a run on stops, like as I was mentioning with the dollar index. Let me just show you the dollar index. Thank you, Jesus, right? Man. All right, 15-minute time frame. All right, so here's that high here I mentioned earlier, the 445 high. We traded through that here. This is that void where there's no trading at all. It has one little tick in here. Okay, that's a void. That's a real, absolute, actual liquidity void. There's no trading in there except for that one print there. This and here, and then the high here. So when we were down here, I said we were going to gravitate to here, and then if it goes higher, it can go up into this void, and then this high. We rally up, cleared all 3 of them, and at the same time, ES trades down into the old low here, new week opening gap rather high, consequent encroachment, failed to go to the low. What level is this? What level is that? Remember when I was teaching you about inefficiencies? Yes, the 50% is consequent encroachment, but you also have 2 other gradients, 75% and 25%. So it went down to 25 plus a tick or 2 to allow that print to be there because there's a difference between bid and ask. And then we had this rally back up. What did it reach up into? What is this? Let me take this off because we don't need that now. What is that? City. Trades up into consequent encroachment of the wick. Hits it. Complete repricing back up into all of this. What was inefficient here? Buy side. Why? Because it's a down close candle. It's large to the downside. So it's not offering what efficiently? Buy side. How does it offer buy side efficiently? Price has to go back up through this high to that low, offering movement to the upside. That's repricing over top of sell side delivery, but it's inefficient in the form of buy side. So remember that that paint roller analogy I use where you put paint on the roller, put it on the wall. As soon as you put the roller on the wall, the paint distribution is very thick, it's ample. But as you roll it more and more, it starts to create these little pockets of where paint didn't make its way to the wall, and you have to roll back over top of that. The same thing's happening here. It goes down, but in that movement down, there's going to be small little pockets of inefficiency that you don't see. What does it look like? Well, if we do this. If you are finding this helpful, I would greatly appreciate it if you would give me a thumbs up because that's an encouragement to me as a mentor that you're learning from what it is I'm teaching and sharing with you. But we're going to look in this down move here, right there. I'm going to take this little annotation out. All right, what time frame are we on right now? We're on a 15-minute time frame. So we're going to drop down to a 5. We can see that range here. We're going to drop down into a 1 minute. Inside of that range here, all of this in here, what do you see? I'll make it a little bit bigger so you can see. In this movement here, what do you see in terms of inefficiency? Remember, that shaded area is a big down closed candle. So it's a fair value gap, SIBI, S-I-B-I, sell side imbalance, buy side inefficiency. So what is it missing? Efficient delivery for buy side. So inside of this shaded area, I want you to look real close. Where are the inefficiencies? Here, 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 and a volume imbalance right there. See that? So if we take this level here, see if I can copy that. There's your volume imbalance, high, right there. Market trades right up into it. It has to do what? It has to go a little bit past it for what? Efficient delivery, because there's a difference between the bid and the ask. So to get that price, it's got to go one tick at least above it, right? Well, you're getting that there. Trades there, and then we came back off of it. So inside of these inefficiencies, you have to drill down into the smaller time frames. And in fact, I'm not going to do it here, but if you have the benefit of using the 30-minute and 15 and 5-second time frames, you can actually look at this even better, like a microscope zooming in. You remember in science or biology when you're in school, and it gave you those things to look at on a petri dish, and you zoom in. Well, the same thing you're doing here. You're zooming into that, and you're going to target the actual inefficiency, so how far these price runs can pull back up into it. What's occurring at 3 o'clock that causes this? Like, why does that happen? The bond market's closing. So the bond market's closing has this impact on equities. Sometimes it creates continuation, sometimes it creates a reversal, sometimes it creates a retracement, and then continuation. You have to know what you're looking for, where you are in the grand scheme of things on a higher time frame chart, and what is still left to be taken in terms of liquidity or trade to inefficiency. So I've done more than I wanted to do when I first sat with you today at the beginning of this stream. But if it's been helpful to you, I would greatly appreciate you giving me a thumbs up. It doesn't cost you anything to do that. I promise it won't be seen by anyone. No one knows you gave me a thumbs up. It's completely anonymous. I know some of you are alcoholics and you don't want to admit that you're hanging out with the company of trade this and you zoom in. Well, the same thing you're doing here. You're zooming into that, and you're going to target the actual inefficiency, so how far these price runs can pull back up into it. What's occurring at 3 o'clock that causes this? Like, why does that happen? The bond market's closing. So the bond market's closing has this impact on equities. Sometimes it creates continuation, sometimes it creates a reversal, sometimes it creates a retracement, and then continuation. You have to know what you're looking for, where you are in the grand scheme of things on a higher time frame chart, and what is still left. Why does that happen? The bond market's closing. So the bond market's closing has this impact on equities. Sometimes it creates continuation, sometimes it creates a reversal, sometimes it creates a retracement, and then continuation. You have to know what you're looking for, where you are in the grand scheme of things on a higher time frame chart, and what is still left to be taken in terms of liquidity or trade to inefficiency. So I've done more than I wanted to do when I first sat with you today at the beginning of this stream. But if it's been helpful to you, I would greatly appreciate you giving me a thumbs up. It doesn't cost you anything to do that. I promise it won't be seen by anyone. No one knows you gave me a thumbs up. It's completely anonymous. I know some of you are alcoholics and you don't want to admit that you're hanging out with the company of ICT. But I promise you, it would be a great encouragement to me. And I think that's going to be it for today. I think this was a very good live stream. I think it was productive. I would have liked to listen to this as a new student. I would have gotten a great deal of insights from something like this. I probably would have had pages of notes and go back into the recording later on and listen to it again to make sure I didn't miss any pieces of it. So with that spirit in mind, not trying to make it too much longer than it needs to be, I think that we will break here with this. And until I talk to you next time, which will be next week in a live stream, I don't know which day. I'll tell you by way of Twitter, when I'll do it. But I'm doing 2 live streams per week because I'm doing interviews with students that are proving they make money. And I'm including their social media contact information. So any specific questions you want to ask them, like, can you show me your certificate for the payouts, or can you take me to an interview that I may not have included in the description below their interview video, you're welcome to contact them, and they can surely just share whatever it is that you're looking for. And that's going to be it, folks. Until I talk to you next time, Enjoy your weekend. Be safe.
All right, a little lecture there. That was the 23rd. measuring gap. Not bad, not bad. All right, now let's annotate the charts. You feel me? Yerd. Is this Thursday? Yeah, 3/23. What did Nasdaq reach? I guess just a rejection block. No shot. Oh my gosh. So look at current new week opening gap, and then all that previous new week opening gap, we draw right into. We generate a low right above that, draw right into it, and then we have an expand. We have a further expansion. Get a retracement expansion. Retracement expansion, 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 reversal, retracement expansion, retracement expansion, retracement expansion, retracement expansion. Expansion, retracement, expansion. silver bullet hour. Oh, 10-10 or 950, 1050 macro reversal. I forgot I had that other template. Oh, look at that inversion. Price respects the. You know what I think I'm gonna do today? I think I'm just going to. I think I'm gonna do a baseline test. I think it's kind of what I want to do. Just like a little baseline, just based on draw and liquidity. I might do it for the whole week. Just putting it in like one contract to where the draw and liquidity likely is, and then having a stop that would invalidate that, and just on demo, and just do that for a week, and then have a baseline. And then I'm thinking about next week. I want to do the same thing, but with an actual model, like the 2022 model. I don't know. I think that could be something to do. I'll have to decide. I also kind of would maybe want to wait because not this week, but next week we have NFP and FOMC in the same week. So I think those conditions would be a little bit difficult, and it would also be like some decent conditions to try it in. Let's see, we're gonna snipe this high right here. Just show that volume imbalance. Mm. Mm. Where's this body at? Oh my gosh. Liquidity is engaged right at 350. Liquidity.
Your father knows about saving money. Everything I'm wearing, I've had since boot camp.
Doctor, how you doing?
Hello, I'm very good. What about?
I'm finna pull up some Twitter space. I need to change the burner account. Let's make sure I'm still alive. Bet. Let's make sure. Did I really breathe that loud? That's crazy. I have my chat closed, by the way. I'm not looking at the chat. I kind of saw the chat there.
This morning so far. Well, good afternoon. Welcome back to another Saturday Shotgun with ICT. This one probably won't be that long. I'm a little uncomfortable today, but you'll probably hear all kinds of banging about above. But it is what it is. Things can't get done without breaking some eggs, I guess, huh? So, yesterday morning, I told myself all week, don't lift anything, don't do anything, let them do everything. Nope, I had to be helpful. And I helped him throwing my back out, so I'm in a little bit of...
Wait, is there any, we're at March 23rd. I already listened to that.
sense. But if I kick him in his face, rip his head off, and shake him by the lapels while he's feeling what he's feeling now, the only thing that would do is make him feel worse about what he's done. And that's just going to compound that loser's mentality that could really stay with him longer and create much more of a hardship for him to learn, because he'll have a scar. See, he's not looking at me as the reason that I didn't inflict the scar that he's going to have. I didn't create that for him. He's going to walk through his career now knowing that he himself did that. So I'm allowing this condition to do what it does in everybody, but also I'm going to coach him, encouraging him along as his dad and also as an inner circle trader. Yes, it sucks, but you got to fucking suck it up, Buttercup, because this is exactly what it's like the rest of your fucking career. When you go into drawdown, it is never fun. It's not fun, but I'm not, oh, I'm going to lose my mind, I'm losing money. I have a losing trade. Oh, this sucks. Fuck that. Okay, I got that one wrong. What am I going to do next? Done. Handled. I have a process. He doesn't have a process. You didn't have a process when you went into drawdown, and then when you eventually blew your account. You had no process. You were in that burning house, and you were trying to put out the house fire because you didn't want all of your loved ones' things and your things, the things that you treasure in your life, you don't want to see them all go up in smoke because you can't replace them. That's exactly what you're thinking about with that equity high. You think that's a family heirloom that you can't replace. The fuck out of here. That thing is something that you're going to go past. All this is a slingshot. Drawdowns are a slingshot. You go up to an equity high, you draw back to get more energy, and then let it go. Boom! New equity high. Eventually, you draw down again. Okay, that's no problem. I'm drawing down like a slingshot. And then, boom! New equity high. That's how this shit works. But when you first encounter it, you've been driving, you're doing right, everything correctly, and all of a sudden you did something silly, you did something stupid, you pushed it a little too much, and you have a losing trade. Okay, stop. Don't go back in. Wait till the next trading day. Give yourself some time. Remind yourself outwardly, with your own mouth, speaking it, tell yourself, there is no emergency. This losing trade is not an emergency. This is not something that I have to contend with immediately. I don't have to put this out as a fire. It's not a fire. It's a flat tire. It's not a barbecue. Your fucking car's not on fire on the side of the road. You have a flat tire. That's it. Change the fucking tire. That's all. Change the tire and get back on the road again. You can't do that if you melt the fucking car down with a car fire. You just can't do it. You have to get another one. Either reset the account or refund your account. That's not fun. It's expensive. So to avoid that, just let it be a flat tire. Stop. That's one losing trade. Okay, now you're angry. You're pissed off. Are you in the right state of mind to take a trade? No. So you have to have that as a process. As soon as you take a losing trade, boom, stop. Get up, walk away. 30 minutes minimum. I don't give a fuck what you think you're seeing in the charts. I don't care what I'm talking about on Twitter. Oh, it's going to be a big day. It's going to do this. It's going to draw here. Stop. Turn my ass off on Twitter. Don't look at social media. Turn your charts off. Leave for 30 minutes. Minimum. And when you come back, if you feel impulsive, like you got to be doing something, you are in a gambler's mindset and do not absolutely touch anything. But it's hard to pick up on all that unless you put some time between your loss and your next entry. I promise you, your next entry is going to be impulsive. It's going to be just reckless, stupid shit. Everybody does that. Everybody does that on their first drawdown. Everybody does it. It's weird. It would be amazing if people would do a testimonial and say, yeah, this is what it was like, and try to walk everybody that would be willing to listen to it. I love it. Like, I would love it if there would be a channel on YouTube. And I'm willing to be the one to do the first submission to it. What it was like on my first losing trade, it took me into drawdown and I blew my first account. I would absolutely have no problem doing that, with the expectation that other people would do it too. And Neil, you would hear, it would be like someone saying the same thing from the same fucking script. It's amazing how it always happens. It's the same shit. What goes on in our mind, what we're thinking, what we're fearful of, what we have to do right away. It needs to happen right now, for fuck's sake. I gotta get my money back. No, you don't. No, you don't. You don't need to do that. But you do when you're live streaming, and you gotta make yourself look smart. You're gonna prove to the world you can trade better than ICT. Fuck, maximum loss day. That was insane. Man, I wish he'd start YouTube and live again. Missing it. But the point is this. My son wrecked himself. No problem. You got a flat tire. You got a fender bender. It is what it is. Dad knows how to fix that. No problem. But I can't fix what he's holding on in his brain as things to worry about, what to focus on. That needs to be guided, instructed, navigated with proper encouragement, but still allowing for that sting. I need that to be there for at least another week or so. Like, he needs to fear himself, not the market, because that's what it's like when this industry puts you through something like this. It exposes you. It doesn't make your method, the teacher that taught you, the concept itself, it doesn't make any of that any different than what it was before you did something improper. It makes you shine a spotlight right on you. You, the operator, the person that pushed that button, the person that opened themselves up to risk. You were the one driving the car. You were the one that got drunk. You were the one that caused all that carnage. And you have to own it. And some people that come to this industry aren't equipped to own it. They want to blame everything and someone else for their stupidity, their impulsiveness, their lack of self-control. And you have to own it. And you have to be strong and identify it. As soon as you start feeling that way, identify what it is. It's not weakness to stop trading. It's not weakness to go home and draw down. That is not weakness. That is absolutely the right way to do it. You have to be able to take losses. Go home with them. It's okay. The market's going to be there. Opportunities will present themselves again. And that equity high is not a family heirloom that you've lost in a fire. It's not an insurmountable peak on a mountain that you're never going to be able to get back to. It's not Mount Everest. I don't know if you ever noticed, or there's a lot of documentaries about Mount Everest, rather. And I would never climb that place. I would never do that. I'm afraid of heights. I'm going to be afraid to say it. I have vertigo. And if I watch a video on YouTube where people are really high up, I literally feel like I'm falling off the couch. And I'm in my home. But I literally feel like I'm going to fall looking like that. I don't have the ability to handle that. But you're not looking at that equity high that you slip down and draw down from and viewing that as Mount Everest. And listening to the documentaries about Mount Everest, there's a lot of people that climb up there and die up there. And they can't go up there and get them. That's where they drop. That's where they lay. And the cold temperature just keeps them, how they were when they dropped. Just because you want to climb back up there again, you don't want to die on the ascent, much like a lot of people do trying to climb Mount Everest. Healthy, fit people have died climbing up there. They went too fast. You have to go up a little while, rest, let yourself get accustomed to that height. Same way when you're coming down, much like a scuba diver. You go down, you have to go down at a controlled pace. You got to come up a controlled pace to allow the blood to regulate. Otherwise, you'll get the bends. And that's not fun. But that equity high that you fell from, you're going to go there again, but you don't have to go there right away. It's just like when you went to your favorite vacation destination. You went there, the drive was great, you couldn't wait to see the new equity high in your new trades. Okay, great, you get a new equity high. Wonderful. You show your wife, okay, big deal, it's a new high score. But then you want to impress her. What do? Take the next trade because you feel like you're right there. It's almost at that target I'm looking for. This is another thing I'd like to see. How many people did their ass in when they were just trying to get to a target that they had already assigned? Like, I have to get to this level. This is my target. And they may have got out of a trade that just fell short. Like, it just, I'm talking like 20 fucking bucks. Something so simple like that. I just missed my target. As a 20-year-old, I did stupid shit like that. I was trading copper one time. And I literally fell short of it. One point. And that would have been the number that I was aiming for. And there was time still left in the day. I said, all right, let me just go in here real quick and do one more. In that one single contract, trying to get to that level, it was a losing trade. So what happened? The same thing happened with my son on Friday morning. Fuck. Well, I gotta get that back now. I don't care if I get my target today. I gotta get that back because that's just not gonna be acceptable. So I did another trade, and it was another losing trade. So now I'm in the wrong state of mind, but I don't know this. I don't know enough about myself. I don't know that this is what goes on in the minds of traders that are now hopped up on risk and gambling. I'm not looking at if I get it wrong. I'm only looking at I'm gonna get it right if I just keep doing it long enough. I'll get it back. And that's the wrong mentality. Because when you're distorted and you're all bent up and trying to pursue something that is not, it's not a viable trade. You're trying to impose your will. You want what you want. What have you done? You grabbed your club as a caveman, walked out your cave, and you're looking for something to bonk over its head and drag it back to your cave and say it's mine. And that's what I did. And then ended up not making 3 profitable trades to get back the losses. Then I switched and I traded cotton and then blew the account that day. All because I had a target that I was just 1 point away from. And I felt so certain that it was going to trade to that level and allow me to get to it. It was a pursuit to have my will, well, come to fruition. Not, is there really a trade here? is there really a trade here that makes sense? No, absolutely not. But I would love to hear stories like that from other traders where they just fell short of a target that they had to have. And they pushed the envelope, they pushed the trade, they pushed more trades because they had to get that number, they had to get that target, and they blew themselves. I know I'm not the only one that's ever had that experience. I know. There has to be more of you out there that's done that. If you have, you just say, yeah, I did that dumb shit, dude. And look where you're at now, what you are learning. That wasn't the end of your career. That didn't do you in where you don't want to trade anymore. It's just, it's an unfortunate thing. It was a car accident that, you
Equal lows.
It sucks, I know. But it's not the end of it. You have to slow yourself down. Apply the brakes. Put some time in between the last thing you just did to yourself that's caused pain, drawdown, an adverse result that you did not want to have, but now you're stuck with. So now how are you going to deal with it? Are you going to allow it? Is my son going to allow this to frame a toxic mindset going forward? Is he going to be fearful of things now? Is he going to be afraid to take trade entries now more so because, remember, that's how he started. He's afraid. And what did he do? He listened to my lecturing saying, this is how you overcome it. This is how you don't fear it. So he just plunged, trying to overcome fear. But he tried to do it with his funded account, not the demo. He did the classic, I want to get in there and start making money. I got to learn how to trade with real money. If you want to learn how to trade, you got to start with a real account because demos don't do it. That's bullshit. And here's my own flesh and blood proving it. You got to listen to me, folks. You have to listen to me. I've done this to myself dozens of times. If anybody knows how this is going to happen over and over again, I fucking know. I'm qualified to teach that. I absolutely am certain that there is nobody out there better equipped to be able to say, look, these are the characteristics that's going to result in you harming yourself. And if you do the opposite of these things and do the things I tell you to replace these toxic views, you're probably going to stand a better chance of not having done that again or ever in the future. And that's a pretty good target to reach for if you're a new trader. If you've never blown your account, it's not required for you to do that. Like, that's not something that we're sitting around, and I always use this analogy a lot, but in Jaws, the first one, they're sitting in the cabin part and they're all showing each other, the worst scars they got. They're always trying to one up the next guy. You got a friend or someone at work, Carl. He's got something that's much more than what you went through. Something better or something he had to endure that was worse than that. That fucking kind of person gets on my nerves. Well, you don't need to do that with trading. You don't need to blow an account. Yeah, I blew an account too. ICT. I got the worst scar. Look at that. Fuck that. You don't need to do that. Who wants to do that? I want to create all of you monsters out here where you don't have that scar tissue and say, you know what? I didn't have to go through that. I want you to be able to say, I never blew my account. But the chances of that, I'm aware of that happening, is very slim. But I know if I keep doing what I'm doing, invariably there's going to be at least one of you. One of you will find consistency, profitability, and not having blown your account. But chances are it's going to be a very, very, very small number that get that. Because the human body, the human mind, emotions, and how psychology works, you'll have this experience like my son. You'll feel this impulsiveness where you think that there's an emergency. You created a drawdown, and that emergency in your head is not an emergency that's in the real world. Yes, you did something wrong. Yes, you don't have the equity in the account that you had before you did that. So what? When you put your trade on, guess what happens? You didn't have, at that moment, the same equity high. Commissions coming out. You're under a spread. You got to overcome that. You fell off your equity high. Maybe not so dramatically, but you got to put things in perspective. When you put a trade on, the trade might draw down intra-trade. That means before stopping out and before closure. Guess what you're doing there? You're in drawdown. Are you losing your shit because of that? Some of you will be after a drawdown. You'll be thinking it's the end of the world. Oh my goodness, it just moved 6 ticks. What the hell am I going to do? Ticks, not handles. But you'll be so sensitive, hypersensitive to that. And it's hard to wrestle through that. I cannot, as a mentor, listen to me, folks, okay? This is the reason why I teach this way. I cannot, as your mentor, I can't fix what you do to yourself once you get in that mind state. Or state of mind, rather. I don't have a way to fix what you have done emotionally and psychologically to yourself and how you're thinking and how you're talking to yourself. I'm not in your head. I don't know what you're saying to yourself. I don't know what you're convincing yourself was the real culprit that caused you to go into drawdown. But I can promise you this. It's not the things that you're thinking at that time was the real catalyst. It's not me. It's not the concepts. It's not the market. It's not the dealer. It's not the broker.
1250 macro.
It's always going to be you. When I got my CDL, a commercial driver's license, as a younger man, one of the lessons that you learn as a commercial driver is as soon as you get in a car accident, you are absolutely the reason why the accident happened. That you're the professional driver. And if there's a lawsuit because you caused an accident or you were part of an accident, lawyers love when there's a semi-truck, a commercial driver involved. And they want to go through the whole process of looking at your logbook. And if your logbook isn't up to par, if you fake a logbook or if you do 2 logbooks, because back in the days, that's how it used to be, and you could run illegal long-term, or not long, like long haul, and you could do a lot more hauls, which were illegal to do that. But long story short, they wanted to look at your logs. And if you lied on your log, and you're saying that you were here at this time, you came on duty, started driving at this time, but you are further away from that, that lawyer has a slam dunk case because he's saying, here's your logbook where this is a federal document now, like you are logging this, much like an airline pilot. Because when you're driving a tractor trailer, this shit is an airplane on the ground without wings. So everything you're doing with this machinery is regulated. So if you're lying on your chart where you're doing your change of duty status from off duty, not driving, to driving, and you're speeding, and you've been speeding for a while, and you cover a lot more distance. If you get pulled over or have an accident, the trooper or the person that's going to be able to look at your logbook, he sees that there's no way where you came on duty and where you are right now, there's no way you could have done that. So he has a slam dunk case as a lawyer, because if I was the lawyer, I'd go and say, okay, listen, you're absolutely at fault, because by your own testimony in your logbook, it states that you were coming on duty in this town of this state at that time. How the hell are you able to be in this accident? If you came on duty there, that means you were speeding. If you're going to go into court in a situation like that, that lawyer is going to win every fucking time, because he's going to say, if you were really doing this accident never would have happened, and my clients wouldn't be injured or have their property damaged. And that's exactly what happens to tractor trailer drivers when they go to court. The lawyers always go through the logbooks because it's a slam dunk, guaranteed that they're winning. And the driver may not have been the real reason for the accident, but because that tractor trailer's in part of it, they're going to get it. They're the professional driver. The common driver, the four-wheelers that are involved in these tractor trailer accidents, they're the ones, generally are the ones that are causing the accident. But because they don't realize it takes a football field for a tractor trailer to come to a complete stop, they do their brake checks into a tractor trailer, which is fucking stupid. You don't realize that that's the reason how
Bro's
these
going
trucks
off
are not
about
trying to run people over. But when someone gets in front of them and do
tractor
dumb
trailers.
shit, they can't just stop these vehicles. It takes time. And they also want to live. They don't want to do something stupid and cause a jackknife, and then they not only kill themselves, but other people. And you're probably thinking, what the hell is this guy doing anything? The point is, responsibility. Responsibility. Just like a tractor trailer driver, a commercial driver, has to have full responsibility. Once they start that vehicle and they start moving it, they are at a higher level of accountability as a driver than you and I that drive around with a common Class C license. I don't have a Class A anymore. I gave it up years ago, but I wanted to keep it because if I got an RV with air brakes, but my Class A doesn't have air brakes, so I don't need to keep it, and I have no interest in ever getting it again. But you have to be responsible. You have to know that when you cause this damage to yourself, you own it. And some of you, just like some of these tractor trailer drivers, should not be drivers. They're reckless, driving and texting and doing dumb shit. And I did that stuff. I literally drove a truck with my left foot on the steering wheel, eating ramen noodles over the Key Bridge with high winds. And I was steering with my foot, eating ramen noodles. Why? Because I thought the fucking world was never going to be able to touch me. I was 20 years old. everything was, you know, whatever.
Oh, what? That's so.
And I'm trying to trade the markets like that. Cowboy up. Now looking back at it, it scares me to think the dumb shit I did, which was reckless. And I had people calling into my company I was working for saying, your driver's driving down the road with his foot on the steering wheel steering, and he's eating a bowl of cereal, which it wasn't cereal, it was ramen noodles. But the point is, you know, I told my boss then, you know, Glenn, he was like, hey, are you doing that? I'm like, yeah, but I wasn't eating fucking cereal. The point is, you know, I owned it, right? But it still doesn't change the fact that it was reckless. It was reckless. The high wind could have took me, you know, into the other lane, and I could not have but I couldn't have compensated for that and steered it properly because I was using my fucking foot to steer while I was eating, which was dumb. But that's what arrogance is like when you're a 20-year-old. You think you can just do whatever you can, and there's no consequences. There's no death. You don't have any concern about mortality, yours or anyone else's. And when you're young and you're in a market like this, that same type of reckless abandonment materializes. And now, when you're met with drawdown, that cracks that sphere of invincibility, that force field that you thought you had all this time because you're young and you think you're going to live forever. And even if you break a bone, who gives a shit? You're young enough, it won't be that big of a deal. Now, you lost your force field. Something got inside and touched you. And drawdown shows you how you're going to react. Not just then, but how you're going to react in the future every time you go through drawdown. And if you don't handle it properly or learn how to do it appropriately and talk yourself through it, remind yourself there is no emergency, you will be stressed out always as a trader, even being profitable. And it sounds like it could be technically impossible. How can you be highly stressed out but still profitable? High stakes trading. High stakes trading. I'm just going to say this, and Tom Hugard, we've been talking in private. He knows that I respect him, and I'm not saying anything out of place here. It's not to say anything bad, but I don't subscribe to his approach to trading because he bets a lot. He bets a lot, and he's allowing himself and the people that follow him go through wild swings of profitability and drawdown. And as a younger man, that would have been fine for me. Like, I didn't care about that. But over time, blowing out accounts and having just horrendous drawdowns and periods of not being able to turn it around, it made me not want to be able to do that. Like, I don't want to stomach that. Like, I want to be in, precisely know what I'm looking for, and not see those types of wild, crazy equity swings. So, to me, high stakes trading is high stress trading. And it may feel euphoric when you win, and you feel like you did an Olympic feat, and you have, technically. I'm not trying to take away from any of that, because it really is impressive when it works. But the problem is you're going through that process, and you're placing your body under so much stress. When you constantly pump in cortisol in your body, it's actually having an effect on your vascular system. The valves in your arteries and veins, all that stuff, it's beat up. It's not meant to have that. Like racing fuel in a car. Yeah, it's go, 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 baby, but it tears it up. Like you can't do these things to yourself long term and not have a consequence. My stomach, I tore up my stomach with acid because of stress as a young man, that I literally could not even drink water without it hurting. I stressed myself out so much with this shit that I created an eating disorder. Went down to 150 pounds. I was 195 pounds, and I was put together. Like I was Mr. Wonderful in my eyes. But this industry changed all that because of stress. I couldn't eat, and to be built, you have to feed the body. You have to eat. And I couldn't tolerate even drinking. And I went to inshores, and I was literally on a liquid diet for a year and a half because I couldn't take physical food, which made me weak, which made me susceptible to getting sick more often. And that fear of eating food because of the pain created an eating disorder, which I carried for years. Where'd it come from? Trading. Where in trading did it really stem from? Doing stupid shit that I tell you to avoid, but no one was telling me because I didn't have anybody like I'm talking to you. I didn't have that. And some of you folks that are listening to me that say, this guy fucking talks a bunch of bullshit. He talks too much. He's going on with all this horse shit. Get to the point. The point is you're fucking not ready. And the people that say, I don't like all his long rants, and say, fuck you. Fail. Fuck you and fail. How about that? Okay? Because you are literally going to fall on your ass. You're going to go through these things, and you're going to have no recourse. You're going to have no reference to build up from. You're going to go through the same shit that I and everyone else that goes through it without any kind of coping mechanisms or skill sets, and you're going to fucking fail. And you'll still be working at your fucking jobs, making menial amounts of money, stressed the fuck out, wishing that it could have worked out for you, but it never did. Everybody's going to have drawdown. Everybody is going to get to that point where they push and push and push until the brakes fall off. Well, if the brakes fall off and you blow your account, or you get to a point where you get stopped, like in these funded accounts, they have a braking mechanism. Stop. You have no more authority to make any more executions today because you hit this threshold, whatever it is. I don't know if it's all the same for each company or not, but Cameron hit his Friday morning. Okay. So now what do? Do you lose your shit over it? Do you go crazy about it and start acting foolish? Going in there maximum leverage to feel like if I can do it with maximum leverage, then I can feel like I'm a warrior again. I'm going to be a gladiator. I'm not going to be a little bitch. I'm going to get out there and trade even more aggressive. It's a battle, and I'm not a pussy. I'm going to go out there and do it the right way, like a man. They're going to carry me out on a stretcher. Fuck them. I'm not going to tap out. Put me to sleep. That shit don't work in this industry, okay? This ain't the fucking UFC.
What time?
This shit is money. And money has a lot of influence. It has a lot of control.
It's at 6 a.m.
It has a lot of power over your mind. That's all it has. Over your mind. That's why people try to keep up with the Joneses. That's why people get out on the internet and say they're super rich, multimillionaire, and everybody else is broke. They do that because they fucking are broke. They're not really wealthy. If they were, they wouldn't talk about it. But people listening to people like that, or people that rent cars, go to vacations and stay in certain places, wear watches that are not real, go to a Rolex store, sit next to the display, but then go buy a knockoff. Put that on their social media. Yeah, man, I got this Rolex. No. Patek Philippe. That's a watch. Rolex is trash. But the point is this. Money has an influence. It has a negative influence and has a positive influence. And all I'm trying to be is a voice of reason and saying, okay, money's a fucking tool. That's all it is. It's a tool. But you are trying to handle it like a weapon. And the only person that's going to get hurt is you. And when you look at these equity highs that you draw down from, and you feel bad about how you got there, it matters not how you got there, what mitigating circumstances that led to you being there. You have arrived. You're here now. What are you going to do with it? Are you going to announce it to the world and allow other people to critique that, laugh and troll you, and compound that feeling that you went through it? And now you had other people coming in when they secretly suck ass and they can't do shit, and they're Carl at work, but masquerading online like they're somebody special, highly opinionated, but they can't do shit, can't trade, can't fucking prove nothing. These people are going to make you feel even worse about yourself, which is why I say don't invite other people into your trading. You don't want to have anybody else's input. The only input that matters is your journal. That's the only one that matters. And if you take that drawdown and you treat it as an opportunity to improve yourself, improve on
the only input
yourself,
that matters is your journal.
And also to remind yourself, you know what? This was all self-inflicted. I'll say it again. This is all self-inflicted. Nobody pushed that button but you. You did that. You did it. Congratulations. It was fucking stunning how it happened. You did that all by yourself. Well done. Look at that. Nobody probably could have did it any better than you. Now, fix it. Don't be afraid of it.
Oh, 2022 model on NQ.
Trading is you constantly doing patchwork, fixing flat tires, putting paint on nicks when you drive your car. Like, I can't stand leaving my bets anywhere. Like, I don't take them anywhere where I leave and go inside something, because invariably, every single time I go somewhere, as soon as I get out, guys will come over, hey, do you mind if I take a picture with your car? And they have their friend, and they're sitting next to the front of the car, and they're fucking doing their gang signs and shit. And it's cool. I just don't want them touching it. And I don't want to go into a place and leave my bet like that, knowing that somebody might ding it with their shit, or some piece of shit that's happened before, where they run a key down it. And that's ignorant. That's ignorant as fuck. Just because you're broke as fuck and you can't afford something like this. I'm not flexing on you. I just drive my car and I went inside. But you come by and you key up somebody's shit like that. You're a piece of shit. You need to have your ass curbed. Yeah, I said it. That shit is ignorant. I don't even know how I got on that topic. Anyway, you have to own that. That drawdown is yours. You created it. And you now have to fix it.
Hey, appreciate the sub. Appreciate the sub.
Like if you have someone takes a shopping cart or their door of their own vehicle, they open up and hit your door. It creates a dent and a ding, and it may take away some of the paint. Well, if you're a car person like me, you're not going to let that sit. So you're going to go get it fixed, put some paint on there, and touch it up. Otherwise, it's an eyesore, right? Well, you have to do the same thing with your drawdown. You have to care about it. You have to care about that account. You have to nurture it. You have to treat it like a garden. You have to water it, fertilize it, give it everything it needs to grow, and keep the weeds out. What's the weeds? Toxic people and their fucking opinions about you and your trading, and your toxic thinking. That's the weeds. You got to keep the weeds out of your garden. Don't let choking thoughts about what you did hinder your next series of trades or your very next execution, because that's exactly what he's going to be feeling the next time. Even with me standing next to him next week, he's going to be thinking, if I say this is one here, what's Dad going to say? And then you think he's going to stop with that? No, here's what's going to happen. And this is exactly what you've done too. He's going to say, all right, Dad's teaching me to look for this in the chart. I think I see it. I see it, but I don't want to say it, because if I say it to him, he's going to say no. And then he's going to be thinking, if I did it wrong there, Dad's going to be thinking, I don't know how to do this at all now. Now I'm going to feel like I got to do it better than I already feel like I got to do it better because I'm in drawdown. He's going to overthink every fucking thing. What is that? That's a weed. That's a weed. So Monday, I'm going to be coaching him on how to just observe. No button pushing.
1, 2,
Maybe Monday and
3,
Tuesday.
4.
But
Bicep
Monday,
just keeps
no
on
button pushing,
taking.
no entries, no nothing. I need him to be able to look at the chart, tell me what he thinks he sees, and have no button pushed. So there's nothing that has to have a transaction scorecard at the end. It can't be measured as a bad thing. It can't be measured as a good thing. It goes back to the equivalent of a demo. Or not even so much as a demo, it's tape reading. He needs to be reminded that the stuff works still. But it's got to be in the hands of the capable. He's not capable. He's capable of drawdown. You've seen that. Everybody's capable of that. But most people in trading are not equipped to mitigate drawdown. And it's not because it's impossible, but it's because of the toxicity that the trader brings into it. You have to recognize these patterns that repeat in your psyche, the way you think, the way that you operate, what makes you push that button. These are the things that you have to journal. You have to physically write these things out. What was the catalyst that caused you to have the confidence or the impulsiveness? And you have to be honest when you do it. Put that in your journal. What was the reason that you got into the trade? Not just the technical things you see in the chart. That's not what I'm talking about. I'm saying, what was the catalyst for you to want to take that trade? You want that trade to make you money. What were you thinking about that caused you to want to take that trade? Was you feeling like you're going to miss the trade or fearing the missing of the move? Or are you aiming for something monetarily as a target because you want to buy something or pay off something? Those things, you want to include all that in your journal. Much like I mentioned earlier, when I was trading copper as a young man, I fell short of a target and I wanted to hit that target. So the trades I took after that trade closed before I hit my target, I just fell short of it 1 point. And then it started a series of trying to get something so minuscule, boom, wrecked. Couple trades in copper, didn't work. Let me go to a different market. Cotton, yeah. Well, there you go. Smoke that account. So long and short of it is, you have a responsibility to be in a constant state of control over yourself. Which is why young men and women, if you're out here and you're smoking weed and shit, and you're trying to trade, you're doing it wrong. You have to be 100% lucid. You want to do that shit on the weekend? I'm not hating on you. But you can't be doing that while you're trading. If you're drinking, your state of mind's changed. You can't do that because you're medicating yourself. You have to be comfortable in your own skin. And unfortunately, a lot of people aren't comfortable in their own skin trading because all their bad shit comes up, bubbling up to the surface. And then you lie to yourself and everybody else that can see it, and you say it's the other things outside of you that caused it. Oh, this happened to me because of that. No, you did it. You own it. And that's what makes this industry ugly. And that's what causes people to become ugly because they can't handle that stuff in themselves. So they project outwardly to other people, trolling, talking shit about other people, and they can't do anything. And they're miserable. And that's what happens with people that can't overcome trading properly and handling drawdown and losing trades. If they can't let go of the business, they become a troll. That's just the way it is. That's what happens. And that's unfortunate because they don't even have enough strength to walk away entirely. So they want to punish other people, thinking it makes them feel better. When the whole time, the people that they're trolling are laughing at them. Like, dude, what are you going to do? You're talking shit. You've done nothing. I and you that have a losing series of trades or going to drawdown, we're not losing our shit saying, oh, trading doesn't work anymore, I'm quitting. We're not affected by that. It's a paper scratch. That's it. Or paper cut. It's a scratch, a little flesh wound, big deal. But when you start taking these insignificant, little minor setbacks, which is what a losing trade or drawdown is, if you still have your account, it's fine. It's not fun. It's just opportunity now to do the work that's required to fix that drawdown. And you don't have to be in a rush to fix it. There's no timeline or limit that you have to have in mind to get that drawdown recovered. So now, much like when I set out with my son when he chose to start this funded account, I said, listen, they say you got to at least trade 5 days. Let's just establish 2 weeks. We'll give yourself 2 weeks to get to the funded stage of this. That way you don't have to do too much. It'll be easy to get it, be easy to do each day, do it and stop. It'll be a good pace and it's comfortable. So now I got to tell him, you got 2 weeks to get yourself calibrated again mentally and restore it back to where it was. And I'm really interested to see how he handles that. Because he has to do it next to me, I'm going to be the control mechanism that prevents any impulsiveness. But I can't remove what is always going to be in his head, which is the fear of doing it wrong now, the judgment he thinks I'm going to cast on him. If he thinks he sees something and I tell him no, is he going to be thinking about me overthinking why he got it wrong? Yes, that's exactly what he's going to be thinking, but I'm not. I'm aware of it now. I'm telling you publicly that's what he's going to be doing, and that's exactly what you do to yourself. When you go into drawdown, your next series of trades while in drawdown, you're hypersensitive to everything. because you know you are capable of ruining yourself. And you have to be responsible. Slow down. Less is more. There's no time limit. You don't have to get it back right away. Give yourself time. Schedule it. Schedule it. If you have drawdown, for instance, say you have drawdown equivalent to what he put himself through on Friday, equivalent $4,000. Okay, $4,000. Give yourself 4 weeks to fix that. Do you need the 4 weeks? No, you don't. But in your journal, you tell yourself, I have given myself permission to take up to 4 weeks to mitigate this drawdown. Guess what that does? Guess what it does when you do that? It frees up that overwhelming desire to do it right away. You've wrote it out in your own words. You wrote it. You didn't read it in a book. It isn't a tweet that I sent out. You wrote that. You gave yourself subconscious permission to wait for a deferred event of mitigating that loss over a span of 4 weeks. You push it out in time so it doesn't linger over you like a dark cloud that forces you to take a trade that may not even really be there. Now, $4,000, let's strip this back into a modular perspective.
I don't like to hear about the
What
tinfoil
do we have
hat
to do to get that?
topic sometimes, but
Well,
you need to start paying
4 weeks.
attention. If you don't have an ability to produce clean water, in case there's a contamination issue like we're experiencing here in the tri-state area, they put out a all points bulletin, if you will, to go get bottled water. Don't drink the water. They're spilling chemicals into the water supply around here. So these are distillers I got off of Amazon. I have about 8 of these. I paid $120 each one. In 4 hours, it produces 1.5 gallons of absolutely clean, pure water. In a pinch, you could, if you have a stream or a creek near you,
$4,000 is $1,000 a week. That's 20 handles on one contract per week. Well, shit. That's only 4 handles one time per day. Easy, isn't it? What's hard is waiting for the move that sets up that 4-handle run and then stopping. Because you've given yourself 4 weeks in time to mitigate that. But ICT, shit, man. I'm in a competition to be on the FTMO leaderboard. Fuck around with this stupid shit. I'll never get back up there. You're trading to be on a leaderboard instead of becoming consistently profitable. You're fucking gambling. You're doing it for all the wrong reasons. You're doing it for pomp, for clout. And you're wrecking yourself. You will wreck yourself like Yin and Yang Boy in Texas on his live streams, trying to prove something. The only thing you're proving is you can't fucking trade. Now, you want to do that? Go right ahead. Well done. But that's not the right way of doing it. When you're in drawdown, you have to be very careful how you manage yourself psychologically and emotionally. You have to be the cheerleader for yourself. Nobody else is going to do it. And you do that through your journal. You have to keep yourself accountable. The only one that's going to be doing that is you. And how do you do that? Through your journal and writing out what you're doing. Your drawdown. How much money are you in drawdown? You're looking up at that peak, that mountain, Mount Everest drawdown. Okay? You're looking up there. All right, 153,400 and whatever it was. Okay? How do we get back up there, Cameron? How do we do that? You give yourself time. Take that time and be, well, an ample amount of time. Much more time that's required, which frees you up psychologically. Now think about how it was when you were in university or when you were in grade school. You know that there's going to be a final coming. And all the studying that will be required, the students that are taking this education seriously and they don't want to be stressed out the last minute, they're doing a little bit of studying each night, 30 minutes. Throughout the semester, throughout the quarter of their learning, right before we get to the final, those diligent students, the Koreans and the Asians in my class, were always teaching me how their parents told them how to study. They didn't wait for the last day or two right when the final, where everybody else tried to fucking cram it in the night before. Stressed the fuck out. And when I was in high school, no-dose was a thing. Everybody went out and bought no-dose, which was basically caffeine, so that way they can stay up and cram all that stupid shit, all these months and weeks of stuff. You can't do that. You can't do that and not be stressed out, and you're not retaining it all. So don't do that same mentality with trying to recover your drawdown. Don't try to push it all right now. It's got to happen right now. I got to have it done next week. I got to get back up to the equity high. No, you don't. No, you don't. There is no fucking deadline. But in your head, because everybody's on social media, everybody's showing the best of what they've done, not full scope of what it is they've done. Drawdown, losing trades, stop doing live streams because they can't fucking trade now. Nobody can see what they're doing to themselves. You have to be 100% responsible. But you also have to, in periods of drawdown, you have to coddle yourself. You have to prop yourself up, encourage yourself, and be constantly reminding yourself that there's no emergency or sense of urgency to get this drawdown back. The only person The only person that's uncomfortable holding on to that drawdown is the retail Rick in you, the gambler. They want to get back to that high, that first buzz of being at that new equity high. They want to get back up there. They're the one inside of you that feels the ache of getting back up there. The trader doesn't have that feeling. The trader is the person that's pushing the buttons and managing the trade. And the analyst ain't worrying about it because that's not their job. Their job is to keep you on the straight and narrow. They're not worrying about the feelings of drawdown. They're saying, this is what we're supposed to be doing right now. The trader is, this is what I'm doing based on what the analyst is telling me I should be doing right now. And I'm managing risk. Retail Rick is in the back, fucking clamoring to get to the steering wheel. He wants to drive into a tree. He wants to jump airborne, like the Dukes of fucking Hazzard. Remember the old show in the 70s? I love that show. I grew up watching that shit. I'll be honest with you, as a kid, I couldn't wait to get a car because I wanted to jump every fucking hill out there. Now, I was being primed to do all the wrong shit, right? Just like in trading, we're primed to do everything wrong. Recklessly trading and try to gamble and get it all back in one day. And that's all the wrong way. You think if you can get the drawdown back quickly, you're a better trader. No, you're just a lucky gambler. Lucky gambling is not impressive to me. I'm not impressed by that. Someone can trade with crazy fucking leverage, make lots of money doing that, and I'm fucking bored to death by that. Because people do that same shit with lottery tickets, and there was no skill in them buying that ticket. There was no skill when that person going to the slot machine, pushing the button, and they got the maximum payout. There was no skill involved. They were at the right place at the right time, and circumstances just led to that occurrence. There it is, boom. It's done. No skill in over-leveraging, YOLO trading. But consistently able to see something over and over and over again, delivering that absolutely impresses me. If someone were to sit out there with one contract and just slice and dice based on a model that was already pre-described as, this is what I'm going to do, I'm only going to do this, and this is how much I'm willing to risk, and I'm never going to go over that, and this is my procedure of taking a loss. If I take a loss, I stop for that session, I trade the next session, or trade the next day. And they stuck to that, and they only made $50,000 for the entire year. I'm fucking impressed by that. To me, that's skill. That's absolute 100% skill. Full 100% responsibility. They own it. They're in control of themselves. Their capacity to stay on track within a model is perfect. That is much more impressive to me than how much money. How much money it's relative. Who gives a shit? As a trader, I like seeing people that can own their mistakes, don't become reckless, go in there and start trading with a lot of leverage to try to fix something real fast on a small little move. That's just gambling. That's gambling. And I'm so against that idea. That's what makes me boring as a mentor. Because I'm teaching my students to aim with very, very small targets. In the beginning, you start there. And for the people that have a brain, they can understand that that's all that would be required to have a really amazing career. If you can consistently find 5 handles, how many times does the market move around and offer 5 handles inside of a day? Several. You're not limited to that one, but you have to know what one looks like and find it consistently. And then you grow in your understanding about yourself, how you're going to react, what you're looking for. Boom, other models make themselves available to you. And then you can start seeing 10 handles a day per session sometimes. Then 20 handles in a day or more. And it need not be a runaway directional move. You can trade up and down and trade intraday without a bias. But you can't trade without an intraday bias in the beginning because you don't know what you're doing. Which is the reason why I tell you, focus on directional trading in the beginning. Not because that's all you should do, but you have to have a baseline to grow from and then be able to track your progress. And when you go in the drawdown, you go right back to basics. Go back to the basics. What are we in? Are we in a bullish day or a bearish day? I want to focus there. What time of the day am I looking at? Okay, I'm going to wait till it's really easy for setups to form. What does that sound like in ES? What's the easy setups? What's the silver bullet for fixing drawdown ICT? You've been talking a bunch of shit here, Al, and it might be entertaining for me. I might have chuckled a few times, but get to the brass tacks already. Tell me something. I've sat here and listened to this shit for a little while. Give me something to go home with. Okay. When you're in drawdown, and you really simply just got to have the fucking trade that you can trust. That silver bullet trade that you want. Where does it happen? Where does it form? And also, how can I use this even when I'm not in drawdown, where it forms consistently? Where does it form, ICT? Come on, spill the beans, man. All this build up, all this bullshit, spill it. That's my cards. See that? I'm such a dick. Between 10 o'clock and 11 o'clock in the morning, New York local time, you will find a fair value gap that will deliver 5 handles every fucking day. Guaranteed, absolutely fucking guaranteed. It's never going to be a day, even on a shit show day like on Friday. It will always, always be there, aiming for an opposing pool of liquidity, sell side or buy side. In my head, when I'm waking up, sometimes my wife prevents me from getting in front of the charts right at 9:30. Now, she's understanding because I've been mentoring you. The days I tell you I'm going to live stream, she graciously gives me that time to be here when I'm here with you. But sometimes we may be in bed longer in the morning because we stayed up later, or we may do something as a homeschooling with our kids, or something with the dogs. Something prevents me of being there at the 9:30 opening. I know as long as I get to my charts by 10 o'clock, and I can stay there till 11 o'clock, I can take something out every fucking day. Every day every day, even on days that have the shortened holiday schedule. You know, when they close it like at noon. Don't believe me. Don't take my fucking word for it, folks. Don't believe anything I just said to you, because I want you to go into your charts and you'll see it's always there. Absolutely. Guaranteed. 100%. It's always there. There's your silver bullet. There's your pass your fund account bullshit. There's your fucking win the Robbins Cup model. There's everything you're looking for between 10 o'clock and 11 o'clock. It happens every day. 1 minute, 30 second, 15 second. There's your three time frames. It will form in one of those 3 time frames. All you have to do is wait for the obvious run on liquidity. Is it going for buy side or sell side? And as long as it's giving you at least a range of 6 handles or more, you'll get your 5. What does that mean? As long as that fair value gap forms on a 15 second, 30 second, or 1 minute chart, and you know where it's reaching for, it can be late in the move. I don't give a fuck. That's not chasing to me. Because a fair value gap, guess what that is? It's in the middle. That's where the meat is on the bone, baby. See, you're looking at charts thinking you have to have that end joint, high part of the bone or the low part of the bone. Precision is not limited to that. When you look at a chicken leg, okay, where's all the meat at? It's not on the ends. It's in the middle. It's in the middle. It's in the bulk end of one of those ends of the leg, but to the middle of the bone. And you get down to the opposite end, it's thinner. It's not a lot of meat down. It's just a tendon down there. Nobody likes to eat that. A fair value gap is how you enter a trade that's in motion. Technically, to the uninitiated, the people that don't know how to reprice outside of our circle, they look at what we do as, oh, it looks like chasing price. ICT, you did a revenge trade. Get the fuck out of here. You have no idea what you're talking about. You have no idea what I'm doing to get in those trades. None. You're learning this year, but it's not chasing price. If I know that this is going to run for liquidity and it's already moved and I missed the best case entry and we've already had a fair value gap that it's repriced down into, it's not going back down if I'm bullish. It's already done what's required. Then I'm going to drop into 1 minute, 30 second, 15 second, and I'm going to look for a fair value gap. And the next one that forms, I'm in that bitch. Boom, take off. Get my 5 handles or even more, whatever the difference is between where that fair value gap is forming to the liquidity I'm aiming for. And I submit to that. I let it go. And then the algorithm sends it. And then I go on social media and say, wow, how random. I banned a guy this morning. I saw him. I retweeted a student. A woman said, it feels so good to see trades go in my favor. And because we don't have a lot of the women in this industry, at least, I mean, I'm sure there's more of them, but they're not as vocal on social media. They're usually the quiet, timid ones, and they don't want to draw any special attention to themselves. The women that do, and they announce that they are seeing progress, I like to retweet them. Now, this person said, I'm getting real fucking tired of seeing all the gloating. Fuck you. That's why you're banned, bitch. I'm encouraging that person and other people because they're saying what they're experiencing. You don't like other people succeeding? Go fuck yourself. Go fuck yourself, you miserable pieces of shit. Around here, we're making winners. And I'm encouraging that type of mindset where discovery of oneself and the ability to be able to do well. And they see progress. And they want to announce it to me and say, I appreciate what you're doing. And it's working in my life. I see the results. I'm moving forward with progress. And I'm thankful. I'm appreciative. I'm not gloating, bitch. I'm celebrating them. And I'm putting a spotlight on them. So other people in the community that might not be having that moment yet, they see it and say, you know what? Fuck yeah. I'm sticking around because I'm getting mine just like that. I'm encouraging. I'm not fucking gloating. Fuck you. How's that work for you? That's why I'm banning you bitches that say that shit. I ain't got time for the clownery, motherfuckers. You're talking all this chit-chat shit. You ain't done nothing. You don't trade. You don't show shit. You don't call no fucking moves. You're all bullshit. Sock puppeting little bitches. My students I care about. I want to see them do well. I want their mindset fucking jacked up. Motivated. Not some weak ass, oh, it's random. You gotta hopefully get lucky. Fuck that. We don't use luck here. Luck don't fucking have any part of this equation here. We have a process. We know what the fuck we're doing. We know what we're looking for. We know when opportunities are arriving. It's scheduled. Retail fucking ricks out there, they don't know where the fuck this shit's coming from. They don't know when their indicators are gonna form shit. Their triangles laying over top their fucking chart, hiding price, moving average crossovers, all kinds of Mickey Mouse shit on their charts. They have no idea what the fuck's coming until it happens, and then they're reacting to price. Your job is not to predict price, but to react to it. And they shit themselves. They have no idea what the fuck's going on. None. They don't champion themselves when they do well because they don't know when the next fucking trade's gonna be panning out for them. I do. My students fucking do. You're on the wrong team, motherfuckers. You're chatting shit to us. We are fucking killing it. We're winning. We are winning consistently every fucking day. We're calling this shit. It's happening. Where the fuck are you at? What channel are you watching? How can you not be seeing what we're doing every day and not walk around on a fucking high? Like, we're walking on sunshine every fucking day around here. Think about this shit. Do you see us sitting on fucking social media sulking about how our market just did something that we didn't see coming? Fuck no. None of that shit happens around here. This ain't fucking clown world. We know what we're doing. We are trained to look at price with the spirit of anticipation. We're not reacting to shit. We're waiting. Our scope is already dialed in, right at a specific time of the day, right at a level we know is going to be fucking delivered to us. And once it happens, fucking fireworks. We know exactly what the fuck we're doing. We are not wondering what's going to happen. We are waiting for it. We are fucking waiting. We can't fucking wait. Put it on a platter for us because we're going to take it home. That's how we operate around here. We are trained fucking killers. This motherfucker has nothing against stuff that we can't handle. Not one thing, not one fucking thing that these markets do is a surprise to us. Now, who do you want to fucking listen to? You want to listen to some fucking loser logic where they're waiting for some stupid fucking indicator to plot something. You don't know when that's going to fucking happen. You're staring at your chart waiting for that shit to happen. Versus the chart, the open, high, low, and close, in the time of day that this shit forms. That makes perfect fucking sense. When you go to work, does your start time fucking vary? No. Your boss is saying, bring your bitch ass to fucking work at this time or you're going to have it. Or you ain't getting paid. This business operates just like that. Everything is delivered by time. I give you windows of opportunity to go in and study because you're going to learn exactly when they repeat. There's small little windows within a time frame that are my kill zones. I'm giving you the opportunity to focus your attention there. And some of my better students have done really good research and seen exactly where I'm leading you to. And they see it happening every day. It consistently delivers. There's no reason for you to look at any kind of drawdown and think, oh, what am I going to do? What am I going to do? You're going to fucking trade. You're going to fix it. But you're going to compensate for that level of stress that you just brought on yourself by having the drawdown. See, it's taking your mind away from the process that you've submitted to originally. But now drawdown, losing trades, has caused you to doubt yourself. That's all that has done. That's the only thing that's changed. Your confidence has now been marred. But it's okay. It's okay. Nothing has changed. Everything still operates just like it did before you were losing trades. The only thing you did was allowed yourself to get off the rails. Take yourself away from the markets, slow down, calibrate yourself, think about what it is that you started doing this for, go back to your model, read it out loud, meditate on it, go back and look at your journal when you did things correctly. Remind yourself that you know what you're doing, you just did things emotionally. You chased something that wasn't the trade. You chased fixing an emotional response to an error that you made as a human being, and then you compounded that with recklessness. That's the only thing that took place. There is no emergency. Your model didn't stop working. You're not even looking at your model when you're trying to fix what you've done to yourself. So it's not the model that's broken. It's the operator that's drunk. Think about it. You know what I just said is true. What made you money before? You got to go back to that. When you're trying to fix drawdown in panic, in front of the eyes of other people that watched you draw down live on your live stream, as soon as you start doing your 40 contracts and bullshit, retail Rick's in control. And now you become entertainment. Think, man. I know you don't like me. I know you don't like the fact that I'm doing way better than you and everything, but I'm talking to you. You can fix what you're doing. And you fall victim to yourself all the time. You do it to yourself, and you get mad, and you direct and deflect that to me. And it's self-inflicted. You do it to yourself, man. And it's easy fix. Everything I said here tonight, easy. Hard for most people to do it, but it's easy to fix. None of these things are reasons for you to be ending your career. Drawdown is not an end to a career. A blown account is not an end to a career. But each time, one of those things, if not both, will happen. And when it does, it changes and replaces the optimism that you had when you first started learning, and you had winning trades that led to equity high and equity high and equity high. You need to go back and tap into that. And I know it's hard. It's hard to do that because you are mad at yourself. You're embarrassed if other people know that you did it to yourself. But that's fine. That's everybody does that. In every aspect of life, you do something silly sometimes all the time. You know, that sense of embarrassment or shame, are you gonna willfully carry that every day? Now that you're trading, are you gonna constantly measure yourself on that drawdown that you put yourself in or that account you blew it? You know, come on. Be practical. Your spouse that you're with, you know, do they constantly bring up the thing you did wrong at one time? If they do, that's toxic. That needs to be corrected. It makes a relationship hard. Are you going to do that with your relationship with the marketplace and your model? Constantly go back and pull up that bad episode? Yeah, you know, you did that trade right, but remember that one time when you did everything you drove down?
Yes, sir.
What's up, everybody? For now, I just wanted to cover some stuff since we didn't have a tape reading stream this morning.
I haven't watched. I used to be all over this guy's videos. Gonna watch this. Yeah, gonna watch this around like 30 minutes. Watch this, then I'm actually gonna shower, so I'm gonna hop off stream for a minute. I'm actually gonna take a shower, and then market's gonna open. We're gonna do analysis for like 30 minutes, and then market's gonna open, and then we'll tape read.
Morning, I wanted to cover some stuff regarding the 950 macro and how it applies to the AM session trade setups, and then yeah, just some general tips about lower time frame charts and things like that. Obviously, we had a bearish week. And every week, by the way, on the 1 hour chart, you're going to have a
Bro, I need
market
that
maker
type
model,
of music
at
in
least
my.
one every week from Monday to Friday, either from previous weeks through the AM session trade setups, and then yeah, just some general tips about lower time frame charts and things like that. Obviously, we had a bearish week. And every week, by the way, on the 1 hour chart, you're going to have a market maker model, at least one every week from Monday to Friday, either from previous weeks or all contained within the single week. So obviously this week we were trading from the previous couple weeks, the sell side of the curve up here. So buy side of the curve, we have the sell side curve printed from this week. So we'll go into the macro stuff, and specifically for the 950 macro. So the things that I like to look for when we're applying the 950 macros, obviously the normal kind of tape rating tools, like we want to see SMT, we want to see a higher time frame bias from the hourly chart or 15-minute chart, you know, your 15-minute wick, either from stop run or from a fair value I've traded into. But the thing that's important to notice for the 950 macro is you need to look at the, why is this so big? You need to look at the 5-minute and the 15-minute order flow to help determine where that 950 macro is likely to displace towards, and obviously it should be in line with your higher time frame bias. So we need to have, first of all, a 5-minute or 15-minute order flow that confirms or suggests where the 950 macro will provide an entry for. Occasionally there's going to be 5-minute displacement, but you want to see 1-minute displacement all the time. It needs to be high time frame bias paired with it. And then occasionally we're going to have a 5-minute CISD, but this is going to be later. But I guess the main topic is the 950 macro rarely will change the state of delivery that the order flow already is suggesting from the 5-minute and the 15-minute. We will either have a CISD before the 950 macro, or order flow will already be supported. So using that, if you just look at the 5-minute and 15, obviously there's going to be context. You have a much larger, you know, directional bias of where it's likely to go to. So I'll take today's example for instance. So obviously we're trading into this premium IRL. We had sell side targets from the hourly chart, the daily chart, and then the London low. But I want you to notice, as soon as we approach the 9:45 and 10 a.m., we have a bearish order block here that price is respecting. So with the context of we have a stop sweep with the candle body closing lower, and we have order flow that is bearish already, you can obviously assume there's going to be 1-minute displacement and then a premium imbalance, preferably we're trading into during macro time that you can reach into. And this is not cherry picked. If you actually go in, I'm going to go into the Notion from the previous couple months and we'll look at some examples. But all this stuff is very, very similar. So this is from Thursday. We already had a CISD prior to 950 macro, and we're respecting the bearish order blocks. So as we retrace back up during the macro time, let me go back to the 1-minute. You can already be assuming you're looking for shorts, especially if there's something like SMT, and we have already a higher time frame bias. So it goes to show you that if you're trading against the 5-minute order flow, and if the 5-minute is not clear, it's going to be the 15-minute. It's only going to be those two time frames. So right at 950, the series of events you should be going through is obviously what's the higher time frame bias, and then where is the order flow suggesting to. And you can also time the displacement that'll give you an opportunity for the retracement during the macro. So the macro is between 950 and 1010. But your displacement will happen most times between 941 and 950. So just like how there can be 2 Judah swings from 930, occasionally you have just 1 manipulation and then you trade lower like this. Other times you'll have 2 manipulations, kind of like today, where you have maybe 1 Judah swing and then a second one, and then we kind of break lower like we got today. You want to wait for that first 15-minute candle to print, and then the order flow should be pretty clear by that time. If you keep going to these examples, obviously you have a displacement here from 940 to around 954,
Hey,
and we trace back up into premium, and you have an imbalance here with a 5-minute order flow bearish. If you go back to Wednesday, if you go to the 5-minute really quickly, there is no reason we should be looking for bullish movement. You have a bearish order block here on the 5-minute. If you go back to the 1-minute chart, where does your displacement happen? Between 940, where's 941, and 950, which we don't really have a clear displacement here. We have SMT with a Judah swing happening at 930, and then a premium for value gap that obviously lines up with the macro time. And then obviously if you're looking for your AM session ranges, if there's no 8:30 news specifically, if there is 8:30 news, it'll be slightly different, but mostly the same. But if you're looking at your open, high, low, close, just between 9:30 and 10 o'clock, sorry, 9:30 and 11 o'clock, if you're bullish, you're going to be open at 9:30, and your timed low will happen between 9:30 and 10 o'clock, and the timed high will be between 10:30 to 11 o'clock. Now, what can you do with this information? Well, if there's a reason where we should continue to displace, you can obviously hold until time, and this will reach into a 15-minute or 60-minute PD array, and that includes liquidity or imbalance. So if we've not reached into a 15-minute or 60-minute imbalance or liquidity pool by the suggested time, and say we put in a, if we're bullish, say we put in a high at 10:20, and that PD array is still not traded into, you would assume, as long as everything is still, the order flow is still in your favor, 5-minute order flow, 15-minute order flow is in your favor, and we have not created SMT at the highs, you would assume that that high that was placed at maybe 10:20 will be ran out and will reach into that 15-minute or 60-minute PD array. So we've had multiple examples this week where the same exact kind of the same exact application of the problem has produced itself, where we have an open, a high, and then we have a low put in at the wrong time. We have 10:12 here, and this is not just pulled out of nothing. This is from, I think, I want to say month 10 of the core content. If you go and watch the month 10, it's either month 10 or month 7. You get those two mixed up. I think it's month 10. You can go and it's the same exact stuff, but it's an important piece that a lot of people skip over. So this time here is at 10:12. Well, we already have our manipulation. We already had the SMT. We already had a macro entry. So we need to put in a low within a 15-minute or 60-minute PD rate at that time. Yep, this will all be recorded. I'll post it later today. What's up, Soup? How you doing? I haven't seen you in a minute. So 10:12. You can assume this will be ran out, and obviously we do run it out at 11:05. And if you go back to the other examples from this week, here you have a low put in at the right time. This is between 10:30 and 11 o'clock. So you can actually trust this low, doesn't need to reach back into it. But also notice how our 15-minute PD rate, in this case, was the sell liquidity from London session. So that's why we're going to reach back into that. But if you go back and just look at all the stuff that forms, if I turn this on, nope. If you put like a kill zone indicator on and look when those high and lows are formed, it's going to be around that same exact time every day. If it doesn't form at that time, it'll normally be retraced back into or ran out during lunch. So here you have a low put in at 10 o'clock, it runs it back out at 11. Here you have a low put in at 10:30, runs it again. Here you have a low put in at 10 o'clock. Let's actually go back to this. What day is that? Tuesday. Let's go to Tuesday really quick. We'll look at the 5-minute order flow and then do the same exact kind of analysis. So here you've got 15-minute chart, runs, stops, right at 9:30. Look at the candle body. Look how the candle body closes below the buy side liquidity. This is normally a good indication of a smart money reversal. You're looking for reversals in price action. The wick needs to be the one that runs the sell side or buy side, and you want to see that candle closure below or above, obviously, regarding whatever side you're looking at. Here's a good example of a turtle soup, basically, is what it is. But at the time you want to see it happen, you have a run on stops, a closure below, and then if you go into the 5-minute, notice how the 15-minute order flow is bullish, right? We're holding the bullish order box. You have down closing candle range here. You have a down closing candle range here, down there, and it's holding that the entire time. What do you need to see? Well, since we're bearish after the sweep, there's probably some SMT at the highs as well. I don't know what chart it's from. If you go to the 5-minute, you need to see a change in state of delivery before the macro. The latest it's going to be is 10 o'clock, and you still have 10 minutes after, but normally it's going to be right at 9:50. You already have your change in state of delivery. If it's 8:30 news, sometimes it can be after. But for this example, where's our bullish order block that we've been holding? Well, maybe this one right here. Notice how we close above it, so that confirms it as a bullish order block. You preferably also need to see a fair value gap that's going to confirm your order blocks as a high quality order block. High quality order blocks will always have a fair value gap next to it, because that just indicates the displacement leg after. But order block closes above, taps into it multiple times. Look at the candle bodies all closing above, and what we do, we run it, and then we trade lower, and we close below the bullish order block. So then this becomes a change in state of delivery. And what time does this happen? At 9:45. So now our order flow on the 5-minute is bearish. So there's no reason, unless there was some crazy SMT or some news coming out, that we would expect to go long in the situation. Obviously, you still need to have higher time for buy, you still need to have all that kind of stuff. But then when you start pairing everything up, you have low resistance liquidity over here. That was not swept by the 8:30 news. You have a change in state of delivery on the 5-minute chart. You drop down to the 1-minute. You're going to have a breaker that's formed in the process, right in here. And then you're going to have a fair value gap. Remember, in breakers, you don't have to see it trade into premium. So your two entry types are going to be either a trade into discount or premium of the dealing range, or it's going to be a breaker. And these are really the only two setups you'll ever need, like entry criteria you'll need, because if you're trading reversals, everything outside of these two is going to produce, more often than not, a more difficult trade, and sometimes it's going to either stop you out prematurely or it's going to be a low probability sort of entry type. So these are the two that you're going to be looking for. Either, and I'm simplifying this a whole lot, I'm saving a whole lot of time just by giving you these two, and if you just go back and watch all of ICT's content, it's the same kind of stuff, right? For value gap premium or discount of the dealing range, or a breaker it does not need to reach back into discount in this case. Okay, so with those two in mind, you have that 5-minute change of state delivery, low resistance liquidity. You have a fair value gap here in discount of the dealing range, but it's held by the breaker. And then what time does this run into it? 9:53. Right? If you wanted to, you can put a stop above that just in case it wants to trade into premium. But then you have London lowest target, you have the PM session lowest target, and all of these are session liquidity pools. So that's your true ERL. That's your true sell side liquidity, or buy side liquidity is most times going to be time based. So there needs to be some sort of like a previous X. So it needs to be previous session. It could be London session. It could be PM session from previous day. It could be previous day high or low. It could be previous week high or low. All that is time based liquidity, right? It's not just a 542 low, relative equal lows. Whilst that's good, because it lines up with the 830 low, you want to be targeting something that has some liquidity significance to it, right? So the distance between here is quite large. But using the context of that kind of stuff, of the 5-minute order flow, the 15-minute order flow, it's much easier to select the direction of the 950 macro. And then using the context of the displacement leg will happen between normally 941 and 950, right? You're waiting for that first 15-minute candle. And this is where my own model, the ETL model I just use to simplify it, first 15-minute prints, you either have a liquidity sweep, or if your value gap traded into, and preferably with SMT, your 5-minute candle, or 5-minute order flow, and then candle preferably printing in the direction of the liquidity, or the imbalance, your drawn liquidity. You want to wait for that 5-minute candle to print in the direction, because normally you'll have a imbalance on the 1-minute that can pair up with whatever entry you're trying to go for. So 5-minute order flow, and then a 1-minute your value gap entry within macro time. And it's going to be a civvy if you're short, BISI if bias is bullish. And then the two kind of entries will either be discount or premium or a breaker. Okay, if you want to screenshot this, you can. I'll screenshot and put it in the public stage chat if you want to go back. How am I supposed to know when to trade off the breaker and when to trade the free value gap in premium or discount? It's a good question. Normally, it's a little bit difficult to see. What you could do is looking at the SMT. So if you have something like this, where you have one that runs the higher high, and then one that fails to run the higher high, what you'll normally get is the one that actually runs the stops normally will have the breaker, and you can use a breaker setup in here. And then the one that fails to run the stops will have a fair value gap in premium or discount of that child dealing range or even the parent dealing range in here. You'll find the fair value gap that lines up with it. And normally, on the one that has a fair value gap in premium or discount, you can also mark out a bearish order block, since price will normally like to reach up into a bearish order block. Even on the one that has the breakers, you'll have a bearish order block in the displacement leg that price will reach up into as well. Like in here, every single fair value gap you can normally narrow down either into a order block or an inversion order block. So in this case, you have an order block here. We'll go back to the other ones really quickly. What do we have here? Fair value gap and premium, and this would just be your change in state delivery order block. So this one technically, and then if you're waiting for the latter entry, you have a fair value gap here in premium of this dealing range, and then your order block would be this, right? If you've been here for a while, if you've been on the streams for a while, you know that if there's a volume imbalance present within a order block that is consecutive candles, so meaning there's consecutive candles that create the order block, the volume imbalance will actually shrink the selected order block. So if your full order block is this, right, like technically it's from wick to wick if you want to use the entire thing, just to be all inclusive. You want to narrow it down, be more precise, you use the candle bodies, which is I feel like what most people use. If you want to be even more precise, this is not required obviously, but if you want to be even more precise, notice how there's a volume imbalance right here between the 954 and the 955 candles. You can actually shrink the order block to here, and that's where you're going to get your most reactive area in price. And you can go back and study this. This is from ICT's private lectures. I think it's the price action model 6 or 7 that he released back in December, that he mentioned this kind of stuff. I think this is not like even, a lot of people don't even know about this because it's not really been publicly released. Well, it is publicly released, but I don't think a lot of people watch that video. But if you go back and look at this, like here you have an entire consecutive order block range, but then there's a tiny volume imbalance here, but that's low probability anyways. But if you just go back and study it, I think it's a little more precise to see. But going back to what I was saying, you have the order block with fair value up here there. If you go to Thursday's price action, same thing in here. Fair value gap. What's this next to it? You have a bearish order block, right? Wednesday's price action. We already got that one, but you have a bearish order block paired with a fair value gap, right? Technically, this is a really, really tiny mitigation block, but don't have to worry about that. Tuesday was, yeah, the breaker, which is also, breaker is an order block, right? So breakers and order block, mitigation blocks are order blocks, and then the regular standard expansion order blocks are the ones that everyone's used to. So yeah, these two, this is going to be a breaker. So to answer your question, really long answer. The one that creates the run on stops normally will have the breaker. The one that fails to run the stops with the SMT normally will have the premium to discount. Your safest option is going to be this one. So no matter if there's a breaker or not, your safest option is always going to be just trusting the premium or discount of the dealing range. This does happen more rarely. It's more rare, but this is where you would have to potentially have a mistrade where it does not actually reach all the way up to premium, which is fine. You know, sometimes a model is going to produce losses or just a mistrade opportunity. It's part of the game. Right? Every single model is going to have missed opportunities, and every single model is going to produce losses. Trying to mitigate all those losses and missed opportunities will end up prolonging the experience. But it was just kind of a quick one today. I don't really have too much more I wanted to talk about. Tomorrow we'll have the actual Q&A and backtesting. So if you got a ton of questions or something that we want to backtest for like an hour or so, we can bring that up. I will post this. It's about 21 minutes long. I think I'll just post it publicly because I think there's probably some value in here that some people will get out of it. What time tomorrow? Plan for the morning. I would say maybe like 11 o'clock or so. I don't know. I'll send out a ping. Maybe like 30 minutes or an hour before to let you guys know, and then we'll just put it up in the public stage again. It'll be recorded even if you miss it, and I'll post that after. If you only trade the 950 macro, yeah, I only look at the morning session between 9:30 and.
All right. I'm gonna take a shower. I'll be right back, and then go over some morning analysis. I might. Yeah, I'll be right back.
and then you feel like shit.
All right, finna grab some breakfast,
You have to nurture yourself.
and
Nurture
then
psychologically, and keep all these things that are outside
we'll go over
interferences
morning
to
analysis.
distract you or make you
Gonna
feel
listen
less
to
about
this
yourself.
in the
You need to keep
meantime.
that out. That's the weeds.
Overall,
Don't let weeds grow in your garden.
seems like we're getting some
You have to
displacement
prune
here.
and till the
We're
ground
above
comes
true day
looking for
open.
things
We
that are going to be a
have had
distraction, that's going to be
manipulation
an
at
impediment
2
to your
a.m.
development, and
So we do
take
have
you
the
out of the mindset that's
SMT
applied.
as noted.
Now, obviously, in this
For
one,
me
I'm
personally,
speaking from
I
a
don't like
stance of
to look
bravado,
at this and be like,
because
hey,
I'm confident, and you as my students are confident, because you know what we do here is on another fucking level.
I'm gonna go and long this
But I
because
don't want you
we're in
to
a
feel
D
like,
premium.
because you may be a quiet
I don't want to long in a
personality,
D premium.
maybe a woman.
So I'll
who's,
be looking for probably some sort of
up in age. You may
manipulation.
hear
We
me
have
go on
these
this
highs we
and
can draw
carry on what I
into,
did.
relative
But that's just
equal
the way it is, folks. I
highs
mean, I'm
here.
passionate about it. I'm reminding you all. You're at the right
There's a
place.
soft
You're at the
bias
right time.
here
You're the right
already.
person.
Relative
And
equal
there's no
highs
reason for you
there.
to ever doubt what you're learning or doubt yourself.
And then we also have
You
these
just
highs
keep
up
showing But I
here
don't want you to
that
feel like you got to go out on
are
social media and
within
try to
this
be a fucking
daily
gladiator
civvy
against everybody else that doesn't do
that
what
we
you
could
do.
draw into.
That's the part about our community I don't like and other people don't like.
And we have just taken
I don't
sell
like that.
side, so
And I know that there's
cautious.
people
That's a
that
good
don't like me.
dollar.
They're pretending to be an ICT student or someone that likes me putting the bullshit in their profile, but they're really my trolls. So they want to kind of like perpetuate this idea that our community is toxic. Our community is arrogant as fuck. Yes, we are. We are arrogant. We're extremely confident because we're not guessing about anything. And that unfortunately unsettles everybody else that doesn't do what we do. And I don't give a fuck if that hurts their feelings. I don't care. I'm not out here like I used to be on Twitter. I used to literally go knock on everybody's fucking door, say, hey, you're full of shit. Your stuff don't work. Why aren't you fucking proving it? Just call something out. Do a fucking analysis. Tell me something. What's the market going to do? Oh, you're an asshole. You're the demo baller. Okay. I had fun with that. I'm not doing that now. But see, you're learning the real mechanics behind what makes these markets move. And that's upsetting everybody. Because the more I do this and the more I prove it, and I'm bringing students that are fucking taking down fortunes with real money. You see people saying, oh, these are paid actors. The companies are interviewing them. They're the ones paying them. They're being interviewed. They have their receipts. Ask them for it. I'm directing the audience that watches my videos to them. You have questions, ask them. I'm sure they'll share what they want to share with you in terms of the proof. They don't need to have any more proof. The companies themselves have paid them out in their titles. $122,000, $200,000, $400,000. They paid these people from their money. They got payouts. $40,000, $76,000. That's not market replay bullshit. It's not demo dollars. That's the really real. That's where the rubber meets the road. It's proof that this is a concept that's transferable. Do you need to make that kind of money? No. Should you aspire to? Sure, absolutely, and more. But you don't just jump in thinking that's how it's going to be, because that's what gets you in periods of drawdown, chasing something. And don't, and I've been telling my private students all the time, do not listen to these testimonials and think that I need you to do the equivalent or more, because that is not what I'm telling you to do. I'm just saying I gave an open invitation to anyone that's using what I've taught. If they want to make themselves known and have an interview, their face will be seen, their voice will be heard, and their social media information will be made public, and I will draw attention to them so the audience members have an opportunity to talk to them themselves. That's not a paid actor. That's someone that's done it, that's made money. And you may not want to do an interview and done very well, and I have lots of them. They don't care about supporting other people. And guess what? It doesn't make them a bad person. They have their own life, they have their own prerogative about what it is they want to do. A lot of you are already saying many times, when we're done in November, you're getting off of Twitter. You don't have any other reason to be there. I won't be on Twitter. My account will be there. That last post will be there. No tweets will be deleted. No videos are coming off my YouTube channel. But my level of engagement with all of you will be very, very, very low. I need that. And I don't mind working hard this year to earn that. But when I step back, it's not because someone rolled me off of Twitter. It ain't because I'm afraid of anything else. It's because I'll be 51 in August. And I am looking at the time that I have left here. And I don't want to spend it like this. As much fun as it is, I have asked my family to spend far too little time with me because of me doing this. And it's been unfair. And I want them to have time with me. Because tomorrow's not promised to no man. I could be snuffed today and taken out. I saw a comment someone shared to me from a dickhead from Texas in this comment section. Someone made a comment saying, I thought for sure ICT would have been killed by now by doxing his address. What kind of shit is that? Like, really? Listen, I understand I rub people the wrong way, but to incite people to want to knock me off, first of all, I don't give a fuck if you do. Instant death, instant glory, I know where I'm going. But I don't live in fear with that shit. But that's the level of toxicity. And Pat, I understand you mentioned on Twitter, you get a lot of feedback from people that's claiming to be an ICT. And I know you say you don't listen to Spaces, but I know you do. When you say there's things that are coming out of our community that are shit being said to you about it, dude, that's the flavor right now. That's the only thing they can do, is to try to make us look bad. And I'm asking all of you as my community, if people are talking shit, the best thing you can do is ignore them. Don't give them any attention, because that's what they want. They want that heat. They want that constant stimuli because they suck. And when you argue with them, or you try to defend, you don't need to defend me. Shit, I'm already fucking proving it. My students are proving it. The market's being called. I'm pushing buttons. Everybody sees it. The bottom line is it is what it is. And let them choke on it. Don't even give them any fucking time. And when I talk about things like this and people try to mother me, it would be better if you didn't talk about ICT, blah, blah, blah. I'm actually answering someone that sent me a message that they're wrestling with because they saw something that has them on the fence about trying to start here. I saw this person talk about you, and it's just, what can you say about that to help me get past it? And then I'll respond, and I'll say that. It's like a blanket statement. Because I know the more time I spend out here doing this, the opposition will constantly put more bullshit out there. And all you have to do is show up every day. If I don't know what I'm doing, if these things don't work, you'll find out on your own. You don't need somebody else to tell you that. You determine that from your own opinion. Don't sit here and sign on to social media, whether it be on YouTube or Twitter or anything else, and take somebody else's opinion about me or anything and simply adopt it. That's the problem with social media. Believe me, I can't wait to get off of Twitter in November. I can't wait because it's just fucking toxic. Not because of the community. I don't care. People talk shit about me all the time. But when I sign on to Twitter, the things that are being suggested to me because it's political bullshit or people smearing this one in the campaign or that one, it's just toxic as shit. Like, it's toxic. So in our community, I try to keep the energy level high. And sometimes it comes across with male bravado that may not be all that palatable for certain audience members. I'm not changing. You filter it. If you can't, go find someone else. I'm not going to be something I can't be, especially if I'm live. If I'm live, that's unfiltered. And I'm going to have these swings. And it may be entertaining to you. It may be offensive to you. I might talk in a language that sometimes isn't appropriate for children. You shouldn't listen to me in a live setting with children around you. Sending me an email, you're complaining to me that your kids heard me say the F word. First of all, I'm leaving that responsibility to you as a parent. You don't know what's going to be said in the live setting. So why invite the opportunity for your little ones to hear something inappropriate? I don't have the ability sometimes to keep control of my tongue. It's just the way it is. I don't want to talk this way, but sometimes it just starts. And once it starts, it takes its course. It runs its course. And then that imbalance settles down and kind of like what I'm talking like now. If I talk another hour from now and don't get off here, you'll hear me rev up again. It's not planned. It's not scripted. It's just, unfortunately, that's what happens. And when I lose control of it, go off the rails, my mind reaches for language that isn't always appropriate. And I don't feel good about it when I'm done. I ask for forgiveness, and I feel like I could have done better, but I can't be articulate all the time, live. That's why I've always stayed in pre-recorded lectures, and I edit out a lot of that stuff, because it's always in there. It's always in there. So I'm a real person. Now, I'm not AI. I'm not some fake fucking shit. I'm a real person with emotions, a mental disorder that I wrestle with. It's not always been easy to deal with, but I know my shit, and I prove it. And my students are printing the receipts, and I'm so proud of them. And I'm proud of you that's in the making right now. But you may have gone through drawdown. You may have done a little bit of damage to yourself. Because Friday was he can destroy in the morning session. Up, down, up, down, up, down. If you fell victim to that, it's okay. You'll fall victim to it again in the future too. Sometimes Seek and Destroy starts off just like a day that's obvious it's going to do this. And then it smokes your ass. And you think it's doing something other than that. And it smokes your ass again. And then you have to know right then and there. Okay, stop. I just took 2 trades that were losing trades in the same session. Stop. ICT, you just gave us a silver bullet. There's a fair value gap between 10 o'clock and 1 o'clock every single day. Well, guess what happens if you lose? Stop. Don't trade a morning session. Wait to the PM session. And your goal is to at least get 50% of the drawdown you had in the morning. You could get all of it and more, but your goal is to just get 50% of it. Isn't that a little bit more forgiving than, I got to get that back and make a profit for the day. I have to be right. There's a difference there. There's a difference, and you have to treat yourself like that as a trader. It's not always trophy wins. Sometimes it's just, I'll get a little bit of the hair of the dog that bit me. And you have to be content with that. And let time do its thing by presenting you new opportunities that will repeat every week, every day, and it won't stop. Unless you do what Retail Rick is telling you to do. Impulsiveness. Things that you know, right before you get into those days that go into drawdown or blow your account, you can go back in time and think, there was a moment when you said, I better not do this. Fuck it, I'm going in. That was it. That's the test, and you failed it. Every single time that's ever happened for me, I never looked back and said, I didn't see that coming. You knew, I knew, it's the way it is. You just got to do it. You just got to do it. Fuck around and find out. In this business, you fuck around and you can find out that you're out of this business. You can cause more damage to yourself financially than you're equipped to pay for. You don't think so? Over leveraging in front of CPI. Yeah, you'll be owing the broker. It'll take everything it's got in your account plus some, and they'll be calling you up real quick with that. So you have to be very careful how you place these expectations on yourself when you're trying to recuperate drawdown, when you're trying to build equity to new equity highs. When you feel that you know that this is probably not the right thing to do, wait. Wait. Take a step away, 10 minutes. Go get a drink, go outside, walk the dog, whatever, come back. If the trade moved without you, who cares? If it hasn't moved and it moved the other direction, you'll be thankful. If it moves but it hasn't gone to the target you're aiming for, there you go, institutional order flow entry drill. There's your mechanism to get in. That's not chasing price. So why are you pressuring yourself? Why are you making this harder than it has to be? Because it's all in between your ears. That's what you're doing. The battlefield that you're waging war on is inside your head. Those candlesticks don't know you're in the trade. They don't know. The algorithm does not know that you got in that trade. It does not know. It doesn't. It's going where it's going because it's scripted. And it's designed to take whoever is foolish enough to be on the wrong side. That's the mechanics of how these markets work. That's the fucking reality of it. And I don't give a fuck who you are. Buying and selling pressure my fucking ass. Okay, that's not how this works, man. So remove all of that necessity of being right, always right, and fix drawdown right away. Fixing drawdown right away is not the proper way of doing it. And truth be told, every time I've done a call online and I did it wrong, I wish I would have stopped that day right then and said, I'm going to stop here. But because of my obsessive compulsiveness and the fact that I absolutely love rubbing my haters' nose and shit, I know how to go in the opposite direction. Like I can flip on a dime. I can do that. And then that's what I do. I like, now you think that that's revenge trading. No, that's me aligning myself up with what I know is about to happen. And that doesn't sound good. I know there's a lot of people that's probably profitable traders that have been trading for a long time. And they hear me say that stuff. Like, I know. And you'll hear people that make a career out of, you got to be careful listening to people that say they know what the market's going to do. Get the fuck out of here with that bullshit. Get out of here, because I'm going to tell you something right now. Anybody that pushes a fucking button that doesn't believe that the market's going to go in their fucking favor, what the fuck are you doing? What is it that you're doing by placing risk on a trade? You're buying because you think it's going to go up to your fucking targets you have a limit order on. You have a stop that says, I don't think it's going to go lower than this and be good still. You bought, you're in the trade. This same fucking person's going to tell you, you got to be careful when you hear people say they know what the market's going to do. Listen, man, I know what high probability is. I know how to define it. My students know how to define it. I know when it's lacking and it's not in the marketplace. I'm only trying to press the button in those conditions, and I try to teach you how to avoid when it's not there. They don't know shit. They're taking their fucking indicator-based bullshit, but they're still subscribing to the belief that they believe the market's going to go up there. If they didn't believe that, they wouldn't be buying it. So think about the logic of these fucking asshats, these chuckle fuck motherfuckers that are out there simply saying stupid nonsense. React to price. You'll never know what price is doing. This is Goldman Sachs fucking level horseshit. Intraday charts are noise. If anybody tells you they can make money trading with intraday charts, run away from them. I promise you. I guarantee you. We're doing it every day. That's Goldman Sachs. That's the bullies from Goldman Sachs. Aren't they supposed to be the fucking guys that know everything? I don't know. Do they? Sounds like a bunch of bullshit to me.
I think it's likely that
Anyway.
we're gonna trade up into
There's
this
gotta be
new week
losers
opening
here, so
gap here
there has
on
to be.
ES.
But even those guys in Goldman Sachs,
But this is just like
I wish they would learn how this is really done. Because they're indoctrinated.
some
to
low
shit that
resistance
Goldman pushes on them.
signature,
This
and
is
we
all
haven't
they
had
do.
like
This is all they do.
prominent manipulation. We
And
have
they're
Monday
extremely
no red folder news.
I mean, you can look at the reports.
Monday
and
we
figure
could
out.
accumulate
Tell you how many
within
trades
this
they won,
range
how many trades they lost, and how much they money they lost, and how much they made.
from
That's
new
amazing
week opening gap to new week opening gap. Tuesday then we can
But they
manipulate,
don't know what
or
you're
maybe even Wednesday because
They don't. Believe me, they don't.
this
They're not
week's
smart.
news folder
They're just consistent about what they do.
is Wednesday
You call
red
that smart
folder
money?
news.
Well,
No
that's
red
your
folder
definition
news
of it. And
Tuesday.
smart money is what I'm teaching you. The way that we perceive price, how it's delivered algorithmically, based on time and price, these signatures that repeat over and over again. That's not randomness. We're not surprised when shit happens. Think about this, okay? I'm going to say this and I'm going to close because I haven't eaten today and feeling my body tell me I'm low in energy. Wouldn't think that based on the delivery of all this banter this morning, right? That's the only benefit of having chemical imbalances. It's like fucking nitrous oxide. You know, when I'm running low and all of a sudden, I'm out the gate running. But when it wears off, it's like a crash. So I just lost my train of thought. This rarely happens for me. New week opening gaps. Thank you, Jesus. Think about how, when I introduced that concept, oh, yeah, everybody knows about a gap ICT. Fuck off, pal. What I'm talking about is how it constantly refers back to them over and over again, not simply when it fills them in, and they're done in everybody else's eyes. I'm looking at shit months ago. These new week opening gaps are not done simply because they're traded to and filled in. That's not how this works, man. But believe me, the folks that put this shit in motion, they don't mind that you know there's a gap because they can't hide that. And they're thankful and happy that you understand that, yeah, it goes up there and fills it in, and then it's done. And they know that you're no longer worrying about it. These gaps have always existed in price action, yes, but the logic that I employ with it and teach you has not always been there. It's always been happening in the charts. But because you're not annotating your charts and having them on your charts, and nobody's ever taught this shit before, you never noticed it. How long do new week opening gaps hold importance to me? 60 days. The data ranges that I talk about in my core content. That a lot of my students, when I taught that sometimes they quit at that month. They're like, oh, he's bullshit. He's putting filler. This is bullshit. Has nothing to do with anything. This is fucking dumb. Hey, Joker. Hey, clown. Okay? This is the shit that works with it. Stupid fucking people. They think they know everything. They come to a teacher, an educator, and they come and they think, well, this is how I'm supposed to be taught. This is how I'm supposed to learn this. You have no idea what the fuck you're learning. You have no idea what you're doing. And you literally stopped learning right when it was getting good. Stupid people. Stupid fucking people. But whatever. Think about how these new week opening gaps perform. I'm not teaching anymore with them because I have things I want to add in my book. Yes, I'm going to sell a book. And I don't give a fuck who has an attitude about it. I don't care. Because there's so many people right now that are writing books every time I talk with these Twitter spaces, every time I do a lecture, every time I do a live stream. They're right now writing books because they're trying to beat me to the punch because they can say, my book was out first, but motherfuckers, my shit was in fucking social media, on YouTube, before you were even fucking doing your book. And yes, that shit matters to me because it's my life's work. You jackasses are running around trying to get clout. And I will be in your reviews reminding people that you just talked shit on an echo of me. And when they're seeing that comment that you can't do anything about, right? John Fibonacci, John Flood, couldn't wait to take my fucking mentorship and take it out there and make some horseshit fucking book. I'm in that fucking review, I know. And everybody sees it. And they come to that channel on YouTube and they say that you're a clown, you're a fucking fraud. And even Amazon had to put a disclaimer saying, this shit has got something wrong with it. Welcome. Welcome to reality. There's a bunch more you fucking yahoos on Amazon that I'll be putting reviews into. And you all can come sock up at all the bullshit you want when I put mine out. I don't give a fuck. I'm going to laugh at all of them. All of them. Because it's all on record with me calling it live here. You're all watching. You're in a GAN moment right now. Think about that. You're in a wipe off age right now. Not because I'm using wipe off, but I'm upsetting everything in this industry. I knew this in 1995. 1995. I knew I would be talking to people just like you and upsetting everything. But I was being pressured not to do that for a long time. And it took years for me to build the confidence to go just a little bit outside the lines, the boundaries that I'm not allowed to go past. And I said, fuck it, I'm going to create a language. If I create a language and I teach people using that language, the people that would be upset with me can't be fucking upset with me because the things that I'm doing, I'm attributing it to the language that I created. It just comes real fucking close to the things I can't teach you. So at this point, the cat's out of the bag. They can't call it back in. They can't change it. They can't stop it. And if I stop right now, you already know how to do it. But I did not break my word or what was placed on me as a limitation. But I didn't do well with that. It bothered me because the sign says don't step on the grass. And I'm going to fucking moonwalk on that shit. It's just my nature. It's human nature. Don't do this. Tell that to your little kid that just started walking. Tell your toddler, don't touch that. They're going to look right at your fucking face and smile and do exactly what you said not to do because they want to see how you're going to react. You love me. You're my play toy. You give me food. You change my ass. You put me to bed. You bathe me. You entertain me. You said, don't do this. Let me touch it and see what you do with that. I'm just like that. I'm like a kid at heart. You tell me I'm not supposed to do that. I'm going to fucking do it. I'm impulsive. I can't control myself sometimes. And yes, I was scared for a long time. And truth be told, if I get another visit, I'll probably stop before November. But I have created a language and they understand it. They understand what I did. But you have learned a language that didn't exist before. It's not in retail logic. This shit is totally outside of all that stuff. And you're here right now listening to what they're going to write about in fucking books when I'm gone. You're here. You're seeing it happen live, real time, proving that this shit is absolutely rigged. And somebody knows how it's rigged. And they can teach you how to take advantage of that. And that's exciting. It's fun. Nobody's getting hurt by it. But these greedy motherfuckers want it just for themselves. And they use it like a fucking weapon. And you never knew about it. You never knew about it. But that's the reality of it. That's what really goes on. And they perpetuate things with financial news network channels and websites and talking heads and all this bullshit. They constantly feed you misinformation. And you never notice it. But it's always there, hidden in plain sight. They'll never change it, folks. They will never change it. I'm proving it. And there's people still pissing and moaning saying there is no algorithm. I work at a brokerage firm. I work at a trading desk. I'm at this and I'm at that. There is not. Get the fuck out. I don't give a fuck. You have blinders on. Nobody's this precise. Nobody. Nobody using other bullshit retail garbage can see this stuff like this. They can pull it out after the fact, which in my opinion, Wyckoff is great for explaining yesterday's news. It's great. You can learn price action with Wyckoff. Yes, you can. But you cannot get this level of precision with it. You can't. And the people that fanboy it because they don't want to give me the credit for the shit they're really trading with, I don't care, dude. I don't care. You can call it supply and demand if that helps you sleep at night, but order blocks are not supply and demand. But you'll see that there is something totally different in this neck of the woods. It's a certain measure of confidence. I absolutely loved that funded account interview. And for the life of me, I apologize, I can't remember. I don't want to say the name inappropriately and give another company credit when it wouldn't be them. So it's the farmer guy that helps fund his operation with his trading. The comment that the host said, he said, most of our funded payouts are ICT traders. And when he stated something that I have been trying to communicate for all this time, when you learn from me and you finally find your model, you will be part of the category of trader that he mentioned. When we interview traders that get payouts, nobody else but ICT traders are as confident as they are. Like they know what they're doing. And we know when we're talking to someone else that got a payout, we can tell that they just got lucky. That's not my words. That's the company representative saying that. I know that stings like a motherfucker, Vinny, but guess what? That's the reality of it all. That's just the way it is around here. And all you gotta do is join the club. The invitation's still open, bro. I ain't got no hate for you. You talked all that shit about my family, made up all these bullshit lies. Lawsuit, bring that fucking shit. I don't give a fuck. Bottom line is I'm still gonna be winning. Period. What I've already released, people are gonna use it. They're gonna make lots of money. Some people will fail. Some people will lose money. It doesn't change the fact that shit works. It just means they did themselves in. That's human nature. That's just the way it is. Sometimes people just fuck up. And you just got to make some changes, recalibrate yourself, and get back on the horse and ride it. Or get back in the car and drive until the brakes fall off. But you can't do that when you lose control and focus. Because if you can't stop yourself when you're out of control, when you're doing all this dumb shit recklessly, trying to get back to an equity high or fix a boo-boo, losing trade, you will do more damage psychologically. It's going to be more impactful than losing the money in the account because you'll create scar tissue. In your learning and your perception about what it is you're doing and about yourself, you'll create scar tissue. And scar tissue doesn't have elasticity. So you can't grow easily. It's painful to grow. And that's what happens when you do the wrong thing with toxic mindset. And you try to progress. You're limited. And that's why people many times quit. Because they can't get past it. You have to tear through that scar tissue, which creates more scar tissue. And it's painful. And I teach you and lecture you so that way you don't go through that stuff needlessly. It's always self-inflicted. Am I teaching you how to go through this without taking a loss? No. I'm teaching you how to avoid blowing your account. I'm teaching you how to endure drawdown and mitigate it, yes. But losing trades are going to come. The human aspect to this is not something you can avoid. You're going to do it wrong. That's where the losing trades come in. Not because the concepts are flawed. You saw it incorrectly. I authored this stuff, and sometimes I do it wrong. I get a case of the ass. I'm hopped up on goofballs. I want to prove something new. There it is. It's done. I've invited some external stimuli into the decision-making mechanisms that cause me to push that trade on. And then when the adverse reaction comes, I'm not surprised by it because I invited something outside. I've invited chaos in, and chaos does what? Shows up on time. So you don't want to be doing all of these things when you're in drawdown that promote speed, aggression, get back quickly, because all of that is the opposite of what you should be doing. And I've never really read a book that's, in my opinion, met how to deal with drawdown appropriately. Not to the degree like I'm talking about here. I can talk about this topic a lot because as a young man, I did my ass in a lot with dumb shit. Like I'm not making this stuff up as I'm going along. I went through it. I know what it's like to feel like you're doing the right things and know now, looking back, every aspect of those things I was doing, feeling like I was doing the right thing, hoping to fix the situation, the drawdown, or getting right back in real quick just because I had the money, the refund in another account. That was the worst thing to do. How can you apply that today? If you had a funded account challenge and you passed it and you're funded, right? Or you open up an account and you're trading with real money. You made that decision on your own. I never tell you to do that. When do you know? When do you know when to make that transition? When you're bored with being consistent in your demo and you don't have any emotion at all. You don't care when you're right. You don't care when you got it wrong. That's the right mindset. That's the time when people should consider it, but not before. If you're antsy, excited about the win being right all the time, you're not ready because you're bringing emotion into the monetary transaction of real fund trading. And you're going to be constantly concerned about the outcome on a scorecard or report card basis, profitable or not profitable. And if you're thinking like that, you're not thinking about following the model and the rule of being in that trade for the reasons you're supposed to be in that trade. You're looking at the profit and loss ticking up and down, watching the trade. Let me ask you this. When you put a trade on, how often does your eye go to what the profit and loss amount is? For some of you, if you're thinking to yourself, I'm always watching that shit, you're not ready to be trading with real money because your focus is on that, not watching price. Is price constantly giving you feedback in its delivery? Are you on side? Are you off side? If you're watching the up and down movements of the ticker that tells you what you're making or losing while you're in the trade, you're distracted. I only have that up there so you can see it, that it was a button being pushed. When I trade, I don't have that up there. I don't give a fuck about that. I'm watching price. Is price going to my targets? Is price respecting the most recent 3 PD arrays that I want to see being supportive of price, whether the price is going higher or lower? I'm watching that shit. That's what matters to me. Because if I'm not paying attention to that, I'm not going to notice when it's telling me it's no longer a good trade. So either kill it or take something off. Remove risk. Compare and contrast that, knowing what you know about yourself and your attention span. If you're watching profit tick up and down, like you know the game. When I was younger, I wanted to see, okay, all right, $200 more, it'll be $1,000. Okay, and you start talking to it. All right, come on, $1,000. Come on, baby, $1,000. $1,000. I promise. If it goes to $1,000, I'm gonna give you out. Please just give me $1,000, please. Please just give me $1,000. Now it's drawing down. It's only up $500. You're up $750, but you want $1,000. Please just. All right, just get back to $750. Fuck it. I don't need $1,000. Just give me $750. I promise. If you just give me that, I'll get it out. I swear to God Almighty. Just give me that. I'll get it. Now you're only up $250. What the fuck's going on? Where's my $1,000? Why can't I get $750? Fuck it. If it goes to $500, I'm getting out. Fuck this. It's in a drawdown. Fuck this. Nobody knows how to make money. This is bullshit. This fucking broker did it to me again. There you go. That's it. That's retail 101. That happens because you're watching that ticker that shows you the profit and loss. The whole time, the chart's telling you, you're on the wrong side now. Hello? This open, high, low, close bar here is telling you you're on the wrong side. It's in your face like a neon sign, but you're not seeing it because you're watching the money. Everybody falls victim to that. Everybody does. There's never been a trader that's come into this industry that never had that happen to them. They have had that happen. And sometimes the break-even traders that can't be profitable, the number one rule that helps them get past that, just always break even, is stop worrying about the money. Do not have that shit on your chart. Because if you're focusing on the money, you can't look at price. You set all these little milestones, little goals for yourself. You have a trade. You have a limit order that it's supposed to trade to. And all of a sudden you start worrying about a specific dollar amount because you can't stand to be in the trade. You're not submitting to the limit order being reached or the target being reached. You start looking at the profit and thinking to yourself, I had a win in a while. I gotta go on social media and show something. Shit, I gotta get that $1,000. $1,000. It's a band. I gotta share that publicly. I don't need to get that $3,000 I'm really supposed to be holding for, and I can't really hold it because I'm impatient as fuck. So let me get that $1,000. And you enter that same situation I had as a young man with copper. You want that target. There's no reason for that actually happening now because the chart has changed direction. Price is going to go the other way. But damn it, this is your target. You're supposed to trade your plan and plan your trade, right? Okay, you're in the trade. You have a higher target. Your limit order is waiting if it goes up there to get you out. But notice what's happening here. You've allowed the concerns about money to hide what price is telling you. And now you're submitting to the fact that you don't have patience. That's a good thing. If you know that you can't hold on to the trade, kill it, because if you stay in it, you may experience that turnaround. If you know that you are not capable of sticking to that trade idea and it's now making you physically uncomfortable where you can't cope, it's not weakness to get out of that. You condition yourself to get out of it, and if it goes there, then you encourage yourself by saying, okay, see, if I would stay with it, it would have did that. But you didn't make the money, ICT, so that's fucking stupid. Dude, you're acting like you go out there on your first run and getting all these targets. No partials. I'm sorry, man. I'm sorry, but that's dumb. You have to grow. You have to progress incrementally. And nobody walks out there doing full pulls. I don't give a fuck who you are, who'd you learn from. I'm the best, and my students don't go out there like that. I teach them partials. They got to get their little cookies along the way, and it grows over time, their confidence. But when you feel that temptation to just bail on the trade, even when you're in profit, because you can't stand it. You just can't stand it. You don't know what's going to happen. You've lost the plot. You're no longer submitting to the trade idea. So you're in there doing what? Gambling, hoping and praying. Now you're a religious trader. Please let it get there. Who are you talking to? When you're talking to your monitor, who the fuck are you talking to? I don't know who I was talking to, but we're doing it, right? Please just let it get to 1,000. If it gets to 1,000, that'll be enough for me. You know damn well if it goes to 1,000, you're gonna think, shit, it might go to 1,200. But if I get out 1,200, what if it went to 1,500? And then you're playing a game, like you're fucking around. And some of you might be laughing your ass off right now because you've been there before, but it really shouldn't be funny. You should identify that moment where you have lost the plot of the trade. And as soon as you start thinking, I needed to do this, I needed to do this, you don't need shit but to get out of the trade. That's what you need to do. Because now you're on hope and prayer. And hope and prayer in that setting right there, your prayers are being answered. The price is telling you it's about to go the other direction. And you're not seeing it because you're looking at that profit ticker, the up and down fluctuation of your profitability, hoping that it gets to some random fucking number that has absolutely no reason for price to really reach there. But that's what you want. That's your trophy. That's your cookie. You're reaching into the jar. You're constantly digging down in there feeling for that last cookie. You want that last one, but it's not there. Carl's been there the fucking day before and got that last motherfucker. Sorry, day late and a cookie short. Your $1,000 profit ain't getting delivered to you. And then what happens? It moves down a little bit, and you lower it. Okay. I ain't gonna get a full cookie, but there might be a half of that cookie left. You know what it's like when you get in a cookie jar and some of them break. Oh, there ain't none left really, but let me just see if there's any crumbs down there I can put together and get some kind of shit out of it. So you start making deals with yourself. Okay, if it goes to 750, I'll get out. I promise. Who are you promising? Who are you talking to? You're talking out your ass. Because you're not going to do that if it does it. So why are you doing it? You're pantomiming. You're talking out your ass. You're trying to pretend you have, well, the capability to follow through with a rule when you've already shown that you don't have that already. And you are doing what? You're speaking to a fucking computer screen that cannot hear you. It's not going to reason with you. Price is not going to say, well, you know what? I have been an asshole to you recently, and I've caused a lot of trades not to pay in your favor. So listen, pal, it's no hard feelings. It's nothing personal. I'm going to give you something today. I'll throw you a bone. Here's $1,000. Let's get out your target. It ain't fucking happening like that. So why are you even going through the motions of doing this shit? Talking to the screen. Come on, please. Do this. Get the fuck out of here. You have lost the plot. Now, I have done many times, teasingly, either in my recording, sometimes I'll type out, it's teasing me, it won't go down there. And all of a sudden, it goes right to my target and it fills me. That's not what I'm saying here. What I'm saying, I know where it's going. It's clearly being illustrated in the chart. I'm not on there saying, please, let this do. I know where it's reaching for. But you as a new student, new trader, you're going to be in a setting where you're in a trade. And it's going to be impossible for you to hold on to it. And I don't know really what goes on that creates that condition. I think it's a matter of lack of experience, not knowing what you're looking for. And usually that creeps into your trading after you had a series of losing trades. So finally, when you get into something and you're impatient because you want that trade to run real quick to your target, and it might not be doing that. And it might be showing you it's actually reversing, but you don't have that perception or skill set because, number one, you're probably in drawdown and everything you're looking at through price is distorted. So you're really not seeing things clearly. So the only thing that's clear to you is you want $1,000 out of that trade. And it's getting real close to flashing on it in your screen saying $1,000. But what you're saying is you're trying to fucking play a video game where you're going to try to time exiting when it gets to $1,000 because it might flash there 1,000 one time and you didn't get off there. It could go there, flash one time and never be there. And then you're frustrated. So really what you're doing is you're lying to yourself. You're lying to yourself. You're pantomiming like you know what you're doing. And you're trying to convince yourself with every ounce of your being because you're talking to yourself. You're literally out of your fucking mind. You're talking to yourself and a computer screen that has no ability to understand or even reason with you. Think about that. It's fucking madness, right? But that's what you're doing. You're doing that. You're fucking talking to an inanimate object, your screen. And you're hoping and praying that it will listen to you. You're praying that open, high, low, and closed bar is going to favor you and give you what you want. If you are talking to the marketplace like that, and you're literally praying that it does that, you've lost the plot. You've literally lost control of yourself. And the best thing to do is collapse the trade. That's the best thing. And yes, sometimes it'll run and go to your target, but guess what? You were already indicating that you were not willing to stay patient long enough for that to happen. So what are you learning by staying in that environment where you can't submit to it? And now you're begging and praying to the God of your screen to answer your prayer and give you $1,000 win or whatever that target would be. Think about it. Staying in that environment is not teaching you anything. It's furthering this pursuit of things that are external instead of internal. You're seeing your body, your mind, give you indications that you are now in a position that's uncomfortable. Is there something wrong with you getting out when it was at 750 because you don't think it's going to go ultimately to your target and you don't have the patience to hold into it? What's wrong with that idea, this collapsing the trade? Nothing. It's the same thing with a partial. They fucking pay every time, 100% of the time. They never fail. So when somebody comes behind this message that I'm giving you today, with no proof they fucking trade profitably, they can't call shit, they ain't done shit. But they're going to say, this is stupid, ICT said this dumb shit, blah, 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 blah. Counter it with you doing it live. How's that work for you?
All right. Let's get into some analysis. And then the charts will open up at 9:30. Do a little tape reading. As of right now, it's a Monday, no red folder news. I mean, I feel like I'll say this a lot, but I don't think it's highest probability because I have to wait. Gotta wait and see if this happens. Then this. But basically, if we look at Nasdaq, I'm just gonna have my Nasdaq chart over here. We've had a new week opening gap. We gapped higher, and now we've used this as support. We do have S&T at the lows. I have the ES chart on my left that I'm not gonna show. Wait, where is this S&T? I thought we for sure had one. That's right here. So yeah, S&T right here. This happened below true day, I believe. Yeah, it looks like it. Below true day, we've had an S&T. Now we're starting to kind of displace higher here. After taking this low happened right above a new day opening gap. So at some point in time, I think we'll refer back to this level. But as of right now, I think the draw on liquidity is higher. We have these two new week opening gaps that we're now drawing into. I think obviously for sure we'll likely see these. Then we have this new week opening gap that we reaccumulated off of. Overall, we do have this low right here. I'm kind of looking at. Can see some possible manipulation in there. If we just look at this run here, like this is just low resistance liquidity. Happened overnight, but I don't think we need to take this low. This low seems like it's manipulation. So I want to see the type of liquidity that we create within this session. Overall, we're opening up in a premium. We're opening up below where we closed last. So we're going to have an opening range gap higher. I want to see if we want to manipulate into these highs. And then if we take these highs, / likely when we'll take these highs, what are we going to do when we do that? And if we look on ES, I marked out an implied fair value gap on the hourly chart that we're disrespecting. So that's what these red lines are. Look at the hourly chart, implied fair value gap. You have this consequential of this wick and then this wick. We're disrespecting that right now. So I think on ES, we want to go to this new week opening gap, likely. Also this high, and then also we have this weekly imbalance or daily. Why did I say weekly? We have a daily imbalance within that. So for ES, that's where my draws on liquidity are for as of this present moment. I want to see what market open does. I think we'll likely continue, but if we look at this in terms of a market maker buy model, from low to high, we haven't had a stop hunt, but we don't have a low that we put in to generate a stop hunt. So this could be one of those days where we just have distribution at 9:30. I want to see where we're at 9:30. If we're within this new day opening gap right here, I think we could just expand towards buy side. Yeah, now we just wait. I'm still gonna have these two levels marked out on my left side. But yeah, I'm looking at that new week opening gap. And then these equal highs. But if we just look at this, we've had pretty fast expansion lower. We're at 50% between these two new week opening gaps. I want to see more information. Gonna have my 15-minute chart over here. Yeah, I'm very curious to see how we trade at these highs here. Oh yeah, that's what I was eyeing down. And then if we look on NQ, we have this new week opening gap right here that perfectly aligns with this 1 hour imbalance, and then also this previous new day opening gap right there. And it's also within this breaker. So that's what I'm looking at for NQ as well, possible upside draws. We do have these equal highs right here, which overlap with the daily imbalance. But preferably, I would like to see that get left open as a breakaway. I'm going to mark consequent encroachment of this wick too. I feel like that might be a reach CE of that wick. But yeah, also this imbalance right here. This down close candle here. We've just taken sell side here. We're just taking a larger fun level of sell side. Got about 13 minutes till market open. I don't know why. I just been like attracted to oil recently. My draw on liquidity is this imbalance still. It looks like euro and pound want to reach their IRO. Gold, I'm not really commenting on. Bitcoin, 1 mil. Oh yeah, New Zealand dollar is pretty bearish here. Oh. These lows look very nice. Accumulation, manipulation, distribution. So with all this pressure on foreign currency, is dollar likely to trade higher? We just filled in this void here. So we had a void that we were drawn into and taken buy side. And we have that imbalance right there. That's literally the exact same video I was watching earlier on ICT. The tapering session from earlier is like the same circumstance. So we could see some relief lower here on dollar. I'm not really going to monitor dollar too much, but kind of just see what happens here. Buy side taken, liquidity void, and a 15-minute imbalance. We got about 10 minutes till market opens. Other than that, anything else to look at? Maybe like some bonds, but I don't really want to look into bonds. I feel like that might be a little bit too much to incorporate. It's not that beneficial, you know? Well, I mean, they are beneficial, but not for me. They wouldn't be beneficial if they're on my chart. Okay, looks like we are probably just gonna get some 930 accumulation, or sorry, 930, yeah, accumulation. Just see higher prices. We could manipulate lower, but I don't really know about that. I don't want to zoom in too like that. That's kind of been my main goal recently, is just not zoom in too much, especially on the 1 minute. Cause like there's just be times when I just have a 1 minute chart open, and I don't want to ever do that again. I don't want to ever just have a 1 minute chart. If we are gonna continue the buy side, I think we could see this low get taken for sure. And it's also within a, oh, it's also that 1 hour imbalance. So that wasn't a new week opening gap. That was a 1 hour. That's right. We have a 1 hour imbalance there. If we're just looking at this 1 hour so far, this 1 hour candle here, I think it's likely that we'll probably see expansion. Wait, that's a 30-minute candle. I'm tweaking. I still think we're likely to see expansion. Currently, we're within a new day opening gap. Where is the low resistance liquidity? Right here. So I think this low actually is a likely draw. Let's see, do we want to take these highs first? I think likely. Likely, yeah. We have this rejection block. We have this imbalance. But it looks like we want these highs here. Like I said, this imbalance could get reached today. Let's see. Stay patient, as always. Especially on a Monday, no red folder news. Like, my thing is like, there are many times to be able to frame a 5 handle move on ES, or like a 20 handle or 30 handle move on NQ. Like, there's always gonna be time to frame one. Like Monday, no red folder news. I don't think trying to jump out of the gate is the best. We have had a little manipulation into a 830 imbalance here. Like a little IRL trade here, optimal trade entry. OTE. I should want to look at OTE. I never, not really so much a fan of OTE, but it's very simple, you know. I need to make sure to look at RTH. I want to look at RTH when market opens up. I was going to have this indicator on just to remind me. Looks like we're delivered to the higher side of this new day opening gap. If we displace through this, if we get displacement through this new day opening gap, I think the likely draw is going to be this low here. Which, we have a new week opening gap right here. I think that's likely what could happen. But I'm expecting this high first. I want to see some manipulation around 10, and then some expansion between 10 to 11. We do have a little SMC here at the highs. Between ES. I'm not going to pay any attention to it at all right now. Because I think it's too early. I want to see expansion. I want to see if we get a possible market structure shift. No buy set has been taken though. We're sitting D premium. Now we wait. Got about 3 minutes. Yeah, just based off of that, I think we want to see higher prices. This could become an order block here. Gonna mark out this low. We could just be accumulating sell stops below this low. Where was that market structure shift I had? Was it this low? Like, probably. No, I think it was this low. Alright, we got a minute till market opens. Yeah, likely expansion here. We're trading with the NA new day opening gap. We're failing to close below it. I'm expecting to see expansion here. Looks like we're going to form a fair value gap at the same time. We don't have like an SMT at the lows, I don't think. We were about to form one, but we did not form an SMT at the lows. I wish ES would have taken this low here. But overall, we have just taken buy side here. Okay. Let's see if we want to attack this low resistance liquidity. We have just taken buy side here. I want to see if this 1 minute candle closes below this new week opening gap, new day opening gap. Think like what's more likely here? What's more likely? It is 9:30 open. How did ES not take that low? ES hasn't taken this low. I don't know. I gotta be careful. I don't have a strong bias, so I don't want to jump on anything or look to jump on anything. SMT right here though, but it's by looking at new week opening gap got delivered too. Yeah, I think. Just something to read. See, is this a breaker? 3-minute breaker. Watching that 3-minute breaker. Really, we can just say this candle here. Let's see, are we permitted to trade up into this imbalance here? And if we are, do we stop here at this inversion with this mitigation right there? Yeah, this is looking like we want this low for sure. Like what's more likely? I would think this low here. I don't think we're just gonna stop on a dime, reverse all the way back up. Gonna mark consequent encroachment of this wick here. And this wick. Immediate rebalancer. About like a 35-point range. No model here though. No model. Okay, making sure my mic's on. ES just traded up into a fair value gap. I didn't note that. SIBI. ES traded into an imbalance. So ES was able to create an imbalance, NQ was not. Okay, ES just disrespected consequent encroachment of a wick. That's kind of problematic. Kind of last line of defense for ES is this order block. On the 1 minute. Okay, we're trading back up into that breaker. Constant encroachment of this wick and this wick. What's that? Implied fair value gap. ES failed to take this low. But I actually am still anticipating this low. Last line of defense for me would be this inversion level right there. That breaker didn't work. It's my last line of defense here. Buy side taken, shift to market structure, imbalance. Yeah, it doesn't look too responsive. Wow. We're at 75% level. Yeah, we want this side. See that mitigation offers mitigation. Okay, we got some seek and destroy conditions right now. We have taken this high, but not that equal high. We're just gonna watch. Just something to watch. Because we're not respecting that mitigation. We left a high just above that high. We have taken this buy side level here, so technically we have swept a larger pool of liquidity. Note that volume imbalance though. Well, I mean, it was just this mitigation here. Like, look at the bodies though. I got a 20-point move there. Overall, just waiting. Just gonna wait. Now for me, I'm waiting. It doesn't look high probability at all. It looks like kind of like some seek and destroy. And if I feel like it looks like it could be seek and destroy, I don't even want to participate in it. We're still holding that mitigation block on the 3 minute mitigation. We have delivered to that volume imbalance, and notice this imbalance right there as well. We should see buy side now. All right, now once we take buy side, do we want to sharply displace? Do we want to reject that, or do we want to continue towards possible new week opening gaps? Are we possibly going to reject this level? Or are we gonna? How are we going to respect when we get to this level? It's a good question. It's a good question. Does ES want to trade higher up into its buy side liquidity pool? Probably. More likely. I didn't use any 25% of that. All right, buy side got delivered. ES is failing to even come to 25% of that open range gap. So I think we're likely going to continue higher here. This now becomes a possible order block. Well, I guess we did capitalize on that, but now we've had a body closure above that. Let's look at this new week opening gap. We just look at the 15-minute though. It looks like this is the manipulation. Distribution. We're at that new week opening gap right now. The old new week opening gap. Now we're within a imbalance here. I think ES is gonna trade into its new week opening gap. We have a new week opening gap above market price, and ES just took buy side. Okay, we are in a D premium. Let's see. Let's just see. This imbalance is filled. Delivered to the very premium end of that. We have buy side that still rests above here. $9.50 macro about to open up here. What's current order flow? Bullish. Have bullish order flow here. So let's study this and let's see if $9.50 macro offers a possible. Keep in mind, ES is just taking a buy side liquidity pool. The internal dynamics here we just manipulated. We have a new, we have an opening range gap that we're failing to seek to fill. We look up our opening range gap. This is the 25% level. This is the 50%, 75%. So we have a pretty decent sized opening range gap today. We're failing to fill that 25%. So therefore, we're likely wanting to reach for a certain level here. Is there an inversion here? I mean, I guess this. Fair value gap in, fair value gap out. Kind of this inversion right here is where we reaccumulate at. So I want to see if 950 macro wants to offer retracement and then expansion. I don't think ES is going to top like this here. So I do want to see this retracement expansion. Keep in mind, this is a new day opening gap here, so. Unless if we get true displacement lower. Unless if this like kind of order block. It's probably order block in 2 minute. It's not. 3 minute. This is 3 minute propulsion block. Doesn't offer support, then I think we're gonna head to this low. So this is gonna be my means of measuring order flow here. This candle right here. It's propulsion because we trade into this one. That's the order block. So this is a propulsion. So let's see how order flow gets validated / invalidated at this level. Overall, since ES has just traded up into a buy side liquidity pool, and then this 15-minute candle is like some whipsaw, taking buy side. Nothing that I love. Nothing that's for sure like this looks more favorable than this. So therefore, I think it'd be smarter if I just waited. I think that would be a little, just a little bit financially smart. Larger term buy side has been taken, so.
Okay, there's your challenge. Everybody's talking shit about there, talking about me and my concepts. Go out there and start doing it better. I'll watch your live stream, and if you're good, I'll say so, and I'll bring people to your fucking shit. But if you're talking out your ass and you got nothing, bringing nothing to it, your opinion is moot. It's nothing. It's shit, garbage. So it's when I'm telling you that you're wrestling now, and you don't know what you're going to submit to anymore, and now you just pull it out of your ass. Well, I hope it flashes up this much money in my profit. If it does, I'll get out. That right there indicates to you, if you're thinking it and if you start talking it, you have lost control. That is the last sign that you are now mad. That's the confirmation that you're out of your fucking mind because you're literally talking out loud, praying for something that you have no control over, and it's less than what you started the trade with. It's less than the target that started this whole idea of you being in the marketplace. So if you're now in this position where you're begging for the market to give that to you, and it starts moving away, and you feel the impulse to lower it, okay, now just give me this. Fuck that. Get out. Just get out of that. And treat it like it's a partial, and the balance just got stopped out at break even.
Okay, I really just I'm interested in this candle here, and whether or not this provides more support or resistance. If we look at ES, we have just taken that buy side liquidity pool, And we have created a SIBI that we are currently looking like we could be displacing off of. I would want to see some form of market structure shift. We've had fair value gaps in, and now we've had a fair value gap out. So on ES, this could look like could be a sort of a sell model. On NQ, I just would like to see a little bit more confirmation. We are trading up into a new day opening gap at the same time. I would want to see expansion through this candle, and I would be much more rather like give up, like not trying to catch the complete high here of this if this is going to be a sell model to still this sell side liquidity pool. I would much rather wait to when the probabilities are more in my favor to seek to engage. I mean, we have this 950 macro, so this could be a possible 950 macro reversal. But overall, underlying order flow is bullish. If we look at the 15-minute time frame, it looks like we have had some form of manipulation. If this 15-minute candle closes back below this wick, that could show me some form of sponsorship here. So we have about 2 minutes till this candle closes, and that'll be interesting actually. So within these next 2 minutes, do we continue to displace lower? Do we kind of retrace higher here? Because this as of right now, if this candle were to close, I think that we'd probably likely reverse order flow here. This wouldn't be as prominent for a continuation, in my opinion. We might want to fill that gap, maybe seek new week opening gap as well. But it's a Monday with no retro news, so definitely staying patient. Definitely. Is that 1 minute imbalance worth in right now? Looking at this, it's a 3 minute propulsion. That's what the red box is. Let's do a little bit of housekeeping here. And where are we relative to true day open? We're above true day open. We're above 8:30 open. So I don't think a long would be as favorable, but there could be potential upside. Nothing that I want to put myself in front of. Okay, we have about 1 minute till this 15-minute candle closes. You have this pool of buy side liquidity is what I'm referring to. Notice that IOFED, we just had a partial fill into this imbalance here. Paired with this imbalance, yeah, I think we likely want to see seek sell side now. Buy side taken, shift to market structure, imbalance right there. Okay, 15-minute candle just closed below this buy side liquidity pool. Oh, you sneaky little bugger. Alright, why did I just say that? We do have SMT right there. Like a very small SMT though. I wanna wait for maybe a second form retracement. This is why I think collecting data is a little important here, because this looks like there's just one day that this looks very similar to, and I guess like after the fact we can go back over and see if it actually was what I was thinking of. What day was that? I think I have it. $9.50 macro reversal, and then we had a retracement. Or I think it was the day after this. Both those profiles were pretty similar. Yeah. Let me get a retracement right there. Okay, I think this low is more likely now. We're failing to hold that propulsion. Let's study this imbalance here. Also, we have this inversion that, like, this whole thing, this whole area is inversion. So, I think this one in particular should act as a wall for price to trade up here. We've already traded into this imbalance. We already had an institutional overflow entry drill, and we're within that breaker here. So, I would suspect this to offer 90 points for possible profit potential. What do we have here? 32 points until that. 73. Yeah, I definitely think that sell side's likely. Excuse me. Here's the implied dealing range. 75%. We had low risk entry. I really think that ES could expand all the way down to its new week opening gap, the current new week opening gap. I don't really think that, but it's definitely a possibility. Just tape reading. Just reading the tape. What I definitely do need to work on is looking to sell to up close candles. Sell during up close candles. Oh, look at the ES chart on the hourly. Look at the ES hourly chart. Wow. I want to look at the ES 15-minute chart too. Just look at the ES hourly chart and tell me we're not destined for a... And we're about to have a 15-minute CISD on ES. Or we could possibly have one in 10 minutes. Just what do you think is more favorable? What do you think is more probable? If I had a 5-minute SISD. What is more probable? Probabilities. CE of that wick. I think we could see a retracement though. Like, I'd be comfortable with risk above this high. Trust this as the breakaway or the IOFED. Not see a return into here because we have these imbalances here. Okay, so we do have a 2-minute imbalance that we could... I don't think so, though, because we've already traded in the 1 minute. We have a 3-minute and a 2-minute imbalance. Okay, I think current new week opening gap could be a draw. It's just a classic sell model again. Okay, we're breaking below this imbalance. If we close below that, that's a problem. That's definitely some form of confirmation. And also don't give up on this. Let's see what happens in the silver bullet area here. Or if we just want to completely trade to this low and then this low. That imbalance right there. What do we have? Buy side SMT. Fair value gaps in, fair value gaps out. Right there. And then right there. And 40 points already offered. 45 points. For sure some of the position taken off. Okay. Now let's see if we want to have some form of retracement here. That inversion got traded into. Look what the 950 macro did. Straight sell side delivery. Straight sell side delivery there. At a level with us SMT. Displacement away for the new day opening gap. Fair value gap in, fair value gap out. Very, very risky entry there. Then more displacement. Respecting this amounts. Same thing. Fair value gap in, fair value gap out. And say, hey, maybe you want to wait for this 3 minute or whatever, this propulsion candle gets broken. Fair value gap. Man, I love this. I'm not like getting emotional, but I just love it, you know? Nothing better than this, just chilling, watching a puzzle unsolved every single day. Where is it likely to go? Then you place a calculated bet based on risk. And if you get it wrong, then you get it wrong. Then you'll be right back the next day, taking someone else's money along the way. I think we still on ES we have a 5-minute imbalance that we likely are gonna trade into. Let's look at the 5-minute on ES or on NQ. What 5-minute imbalance could we trade into? Well, this imbalance here, we could want to trade back into that. I simply this is just a retracement in my opinion. I don't know for sure though. This is likely a retracement. We do have this down close candle here. So again, I'm just reading the tape, reading what price action is doing. So obviously I'm not gonna be entering. I'm just reading what price action is doing, and therefore I'm gonna be saying like, oh, we're doing this, then we're doing that, then we're doing this. So I'm not gonna have like an established bias. But I mean, I guess I kind of do have an established bias. Okay, let's see. Do we want to come up, have some form of stop hunt, back within this imbalance? Trail stops. Where are they likely resting? I'll say at this high here. I definitely would not like to see it. I wouldn't like to see that high get violated. I think that would kind of invalidate this idea. So I want to see we're back within that breaker. Obviously, we have a new day opening gap here as well. I think it is more likely to see expansion lower than seek and destroy profile. ES is already taking this high within a 1 minute imbalance on ES. Okay, this could be problematic. Look at the 15-minute chart. Notice it. I don't like this as a sort of retracement. We've now had a fair value gap out of that. So let's see. Do you want to trade up into a deep premium? Ooh, -3. -3. Ooh. -3. Yes, you're trading up into a volume imbalance. A volume imbalance, matey. Oh, beautifully respecting a volume imbalance on ES right now. If you look at the 1 minute chart on ES. Oh, and it looks like we're dropping the hat here. Looks like we're dropping the hammer. I think we're likely going to continue here. Trade up into that 5 minute imbalance too. You look at ES on the 1 minute, we traded up right into a volume imbalance. Let's look at DXY. Ooh, DXY is ripping too. Yeah, DXY looks like we want to trade the buy side here. So probabilities are more likely see this low, and then other than this low, for sell side targets, really just this new week opening gap. Just this new week opening gap here. Like, look at the ES hourly chart. Wow. Whew. Look at the new week opening gap. The green one. Oh my. Oof. If we break this short-term high, we're likely just in consolidation. Yeah. All right, let's see how we deliver to sell side. On that sell side, gang. On that sell side, gang. Where did we deliver to? Well, on ES we delivered right to that volume imbalance right here, but on NQ, oh, what's the midpoint of that? Is this a little volume imbalance here? We do have one right here on NQ. We do have this volume imbalance there. Oh, I guess we do have a tiny one there too. That we delivered right to. So we are in kind of this little mini consolidation here. We're just inducing. Just inducing. We've already had the buy side sweep. We already had the smart money reversal. So I would trust this, that if we were going higher, we're just going higher to stop short traders out. And that could be at this high here. It also could retrace into this volume imbalance. And I would allow that. And I would say, hey, this is a protected high that we have here. I don't want to see this high get invalidated here. But the overarching protected high should be this one right here, in my opinion. For extreme stop loss. ES is failing to displace much lower right now. Notice that. And ES is back within that volume imbalance. Back within that 1 minute civvy. So let's study the 1050 time window. Let's see where we're at within that time window. And let's see if there's any type of move here. But look at the inversion, the 50, the consequent encroachment of that very nicely. I mean, even here on this initially. Consolidation. Is this a bear flag? Yeah, it is. I don't like that. We do have a little bear flag. Could come up, take short-term high here. It's kind of sorry, I got a lot of annotations, but you can't stop me. We never violated this high. Came up into that inversion. I kind of want to see 1050. I'm not so interested in this action here. I'm more so looking for 1050 for me personally. Okay, let's see if this is just a stop on from that bull flag. On ES though, I don't really like this honestly. And I wouldn't want to take a long here, but we could be in a buy program. Kind of just like some consolidation conditions here. CE of that wick there. I mean, ES did deliver to a 1 hour imbalance. NQ did not. Overall, I think it's chill. I think it's cool. It's like this is just a little consolidation today. Monday, no road photo news. Could be anticipated. I still want to see this sell side engaged at some point today. But yeah, there isn't much context to this liquidity pool. It's a 7:30 a.m. low. It's not like London low or anything. It's just an imbalance paired with sell side. We're reclaiming that inversion. Overall, we are in a little consolidation profile here. So whenever we consolidate, we go from deep premium to deep discount to equilibrium, and then like vice versa. That's how we operate. So from this high, or from that low to this high right here, deep premium to deep discount, back to equilibrium to deep premium. If we displace here and get a fair value gap, I think that's going to be the one that we distribute from. Let's focus on that. We now reached into a deep premium once again. And if we have an imbalance, well, I guess we have this imbalance here, so I think now we'll probably seek sell side. And if this happens, I wanna log this for sure. And notice what we did respect that volume imbalance right there. Wow. There's a lot of stuff on my chart. See, I think like reading price live, like there's nothing that can match it because like sure backtesting data, yeah, that you can do that. But if when you actually see it live, there's so much more that at least I'm able to pick up on. All right, I would expect this to probably distribute us this imbalance here. And if it doesn't, then we're just gonna likely just consolidation profile for the rest of the day. Or not the rest of the day, but the rest of the session. Oh, look at the sensitivity at 50% of that. Did you just see that? Yeah, I think this is likely the one that distributes lower. Like, look at what we have here. We'll see, though. This could just be conspiracy theory. I don't really like what ES is doing so far, though. ES is traded above a volume imbalance. ES is looking like we're more consolidation right now. We're not consolidation, but just not so much delivering how I would like it to. Okay, let's see if constant encroachment wants to get touched here. Okay, we have 20 seconds till this candle closes. We're just, we actually could be in a pie program. Notice how many of these PDRAs are failing here. Not too much here. Look at the hourly chart on ES. Like, we originally have that sweep, a buy side. Then we deliver all the way back down to a 1 hour imbalance to deliver back higher. Nothing crazy today, to be honest. Well, so far, not today. It was so far today. Look at that 15-minute chart as well. Notice how we're not really in a trending profile. We're going back and forth. So therefore, it's going to be harder to find trending trades and really nice price runs in low resistance liquidity runs. Right now, what are we within? A high resistance liquidity run. So that's just my take. Right now, we're back within a 1 minute SIBI. I do want to zoom out a little bit since we are in a sort of consolidation here. Since I know we are in a high resistance liquidity run, I need to see a lot more to prompt a possible entry. Whether I'm tape reading or just... when I'm tape reading, I'm just more looking... I just more want to look to see like what price is doing, what we're respecting, what we're not respecting. Without putting any risk on the table, you know? Without... Like, these are the times when, if you're reading the tape, I don't even care. I don't even care what price does. I care to learn more and to learn how these ideas and concepts could have failed and how me as the operator, how I failed to interpretate them. Not failed, but had some shortcomings because there's no failure. Overall, we've taken buy side again here. Drawn into this 1 minute SIBI here. So let's see if this could possibly be the imbalance. But overall, if we're looking at this, I know that we have buy side or sell side interest that rests right here. And also, okay, I want to note this after this day is over, but what I've noticed is like when we've had runs like this overnight, where it's just like it has a pretty big slope here. Does that make sense? Pretty nice slope there. Thinking this in terms of maybe. So when we have a slope there, usually the AM session we use the liquidity that we've created within this session. Like, yeah, we're gonna refer to major pools of liquidity, but here we generate a leg here, and we take this buy side here, and then we come back into this internal liquidity here and this internal liquidity here. Like, we're just within this range here. Overall, this parent dealing range is so that's also something that I should note is when I think that we're in a consolidation profile, note the largest doing range, not this. So I was trying to note this doing range here to try to get a sense of this consolidation. When this consolidation is a part of this high to low or low to high. Dude, I'm not gonna lie, not having chat on just makes it, well, I tried to turn off the chat. I don't know if it did. Like, is there a chat if you go into my stream? I don't really know if I want to look at it. It's probably like, what the hell is this guy doing? It like gives me peace of mind, you know? Like, And that's how it should be. These streams are just for me to kind of look back onto, and it forces me to have analysis. It forces me to speak out loud to myself. I'm changing my chat. I don't think anyone can type. I just looked at chat, bro. I just looked at the temptation. It got to me. Whatever. I might as well read it. How do I close this now? Oh, I think it's this arrow. Got it. It still doesn't tell me how long I've been live. Oh, it only tell. I've been live for 6 hours almost. Hasn't felt like that. Okay, we've had a buy side liquidity around here. Looking back, like, is it anything that I care to have traded? For me, no. Oh, I didn't see this though. We had SMT here. We had SMT there at those lows. That's something I should have been cautious of. I should have noticed. It's cool. Some of the that I noticed in hindsight. We did have SMT, then we had displacement, but overall, I was trusting this buy side liquidity sweep. The fact that we have this low resistance liquidity, which I don't think is wrong at all. I think for me, what I'm gonna do is I'm gonna tape read for probably this week, and then next week I want to do a baseline kind of like assessment. I see. Oh, this was in the 2023 mentorship, but ICT there was like a baseline measurement where you would go in and then just you would try to trade for a whole week. And the thing is, like, so your account starts in $3,000 worth of drawdown, and the goal is to try to bring myself out of that drawdown. So I do want to try to do that for a week. It's just a baseline. And the thing is I want to have a model to kind of do that. I think I'm just going to use the 2022 model. Only 2022 model trades. Let's keep it simple. And I think that's the model that I'm going to gravitate towards too, at least to start. It's just a starting point, you know. Buy side, market structure shift, imbalance. Pretty simple. Pretty simple. Or buy side or sell side. Take in, market structure shift. Fair value gap. We have about 5 minutes to that 1050 macro. 1050. My guess is NQ will probably deliver buy side during that. Low-key, all trading is just having a model and sticking to that over time. That's all it is. And not breaking away from the model. You think it's broken. And the hard part is finding a model, you know? And that's currently in the stage I'm in, is finding a model that I want to stick to. And I think that would suit me. And, like, yeah, I think I could have a model by now and I could be trying to rush it, but I kind of want it to come to me, but also that's not like a good like idea. It's gonna come to me over time, but it's not just gonna fall into my lap. You know, like I have to work for it. I have to actually think about engineering a model. But I just think that over time, like there's no need for me to rush it. You know, like I'm willing to give this like I'm treating this like a PhD, bro. I'm willing to give it 5-6 years. 5-6 years. 5, 6, 7 years. And if it doesn't come to me by then maybe I might have to rethink my life decisions, you know. But like like over the course of my just like, especially since I'm on social media and stuff, is like so many people will be like, yo, do this, do that. And like I appreciate people trying to help out, but also me as a person, I rather have my own personal model that I found myself, and I know that, I don't know. That's kind of why I turned off my comments too on everything. It's like, I really don't want to get influenced by other people. And the fact that I'm on social media in the first place is like a big... It's like, why do you even have a social media then? I don't know. That's a good question. I like live streaming. I mess with it. I got like other things outside of me. And plus, it's a way for me to generate income, you know? Possibly. Kind of just chill vibe. And it's mainly, I want to be like an influence on... I want to be an influence on like the trade. That's what I would like to. I would like to be an influence on the trading community. The fact that like all this BS, all this flashy stuff, that's not what trading needs to be. That's not what trading needs to be. And I that's why I like ICT so much. And that's why I'll forever like. That's why I wanted to be my mentor, because he does it for things outside of just himself. And for me as a trader, if I'm able just to give back to other people, such as you, like, I don't need much. I don't need a car. I don't need a Rolex. I don't need that. I don't want that either. I don't ever want it to become that way. I just want to be able to give back to other people, especially my parents, my family, my friends, and maybe some of you guys that have supported me throughout this journey. Like, that's generally what I want to do. I would say naturally though, I am a greedy person to where I want more, but I think that stems from the fact that I just want to help other people. Yeah, I don't think this is clear. I don't think we have a clear model here. ES is left equal highs. It is so dollar actually drew into a buy side liquidity pool and then pulled off its high right here. At what time? 10:20. So dollar pulled off its buy side liquidity pool at 10:20. That's when we had this acceleration higher too. Overall, just consolidation here. I don't like this profile. I don't want to engage in it. I just want to study it because these are the conditions that I want to avoid. So I want to be in front of the charts during these conditions, kind of get a feeling for how they feel real time. But right now, we have gone from buy side. we have a dealer range established. We've gone from what? Deep discount to deep premium. Back down to probably equilibrium here now. Failing to take buy side and sell side. We have a little bit of SMT here. We have SMT at these lows. And we almost created SMT at these highs. Let's see SMT with the dollar. 935. I'm not gonna lie, sometimes looking for SMT with dollar, it kind of hurts my brain. Because you're looking for the inverse. Especially if it's NQ and ES. Because I would think that, like, Euro and GU, it's easier to see the SMT with dollar since they're more closely correlated. So, like, the market structure is pretty much most of the time going to be this very, very much so similar compared to NQ and ES, where like usually sometimes the market structure might not be as correlated. To where then looking for an SMT is just like hard to do. Alright, back down to equilibrium of this range. ES just claimed a 1 minute imbalance again. Just reclaimed that imbalance. Just look at the higher time frames, guys. Just look at this. Look at the 15 minute. In case you forgot, it's a Monday with no red photo news. It can be traded, but for me, I'd rather let Monday set us up for the rest of the week. And I think these days, just seeing it happen again and again and again is just like hey, today doesn't have to be the day where we engage. It could just be a day where we just watch and read the tape. And I'd rather read the tape, watch and read the tape, than lose sleep the next night knowing that I did something that I shouldn't have done, or knowing that I should have not. I mean, I know for sure that there's always gonna be another day in the market, and the market isn't gonna go anywhere. And yes, it could, but the whole time that I've been trading, the next day it's open and it's done the same things. So ES is actually within a new day opening gap with an imbalance. Just consolidation here. Well, not just consolidation. I feel like that's ignorant, but nothing that I want to engage in. We did have like a buy program here. We did have an SMT. Hindsight, yes. But for me, the overall framework and context wasn't there, so I'm not going to beat myself up over that. It's 10:55. It also doesn't help that I'm on the 1 minute chart. It doesn't help. Let's zoom out a little bit, shall we? See, I feel like I definitely need to be on the 5 minute until I have a framework, because if I were to have been on the 5 minute today until I like drop down, I think that's what should be best. 5 minute and 15 minute until we see a bias in framework, and then drop down. Like here we have displacement. We're coming down to constant curvature of this wick, and we have SMT at the low. I mean, this is hindsight, but and we have this SMT here with ES. 5 minute. What do we have? Change of state of delivery. Change of state of delivery here. We have an imbalance. But that's hindsight. And we are in a consolidation. So there's just some things that I can improve on. Maybe bias framework, then the 1 minute chart, then that's your execution time frame. Because the 5 minute, 15 minutes is just gonna help you weed out setups that I don't need to be in the first place. But being on that 1 minute time frame, you're like, oh, well, what if this could deliver, this could deliver? Oh, I could get 10, 20 handles there. I think that's the rule I should stick by. 5 minute, 15 minute. I'll definitely try that next tapering session. See if it clears up some fog. I definitely need to stop avoiding the 1 minute, or I need to start avoiding the 1 minute time frame too much. Because what type of SMT is going to lead to further expansion? A 1 minute SMT or a 5 minute SMT? Probably a 5 minute SMT, which we have here. So I still, in terms of where we're at right now, we might want to seek buy side. But there's also this gray area to where we're just in a consolidation. No, I want to look at some stocks. I don't know why my like watch list get mixed up so much now. It's pretty annoying. Like stocks, probably in forex. This is up huge. YM has taken those highs. YM's taking those highs. Wait, ES. ES has left equal highs. But I think we're gonna get price action today. I mean, it's only 10:50. It's only 10:50. Like there's 4 hours left to frame a 30 handle move on Nasdaq. Like we already know there's gonna be a clear, clean, concise, beautiful run during the PM session today. I want to pull up a Twitter space right now. I'm gonna listen to that. I'm gonna listen to my. Yeah, let's say we want buy side for sure. Well, not for sure, but more likely. Let's study this order block here. When they be like, 3R trade called out into my private group. You know those 3R called out in the private group. You know what I'm talking about? Whoa, bro, that's me right there. We'll talk. All right, well, ES just took a buy side here, and it's looking like we just swept liquidity. Look at this. Notice the new week opening gap here at the 75% of that doing range, and then notice the doing range, how that acts as a structural resistance. Also, the 953 candle. I mean, I don't really use root candles, but 953 candle right there, like offered resistance there. Right as ES took buy side. And then we're probably going to be back right inside the middle of this range here. It's like sell side.
What I do promise is that you will learn how to read price action more clearly than anything else out there can teach you. And at some point, here's where the gray area is, okay? At some point, when you get really, really good and consistent with being able to read price action, and you get bored with being correct in your analysis and the market painting in your favor, and you have no emotional stimuli attributed to it. You don't care. You don't have any kind of reaction that's either happiness or regret. It's just, you know what's going to happen, you know how you're going to react to it, and you expected that to happen anyway. At that moment, it's going to happen for all of you at a different time, much longer than you want it to. I promise you that. But when you reach that moment where it's like that for you, then at that moment, you can consider trading with live funds when you decide so. But any time prior to that, I promise you, you are not prepared. You're rushing to do something, and you're falling in line with these people that talk about trading with real money to learn how to trade, and that's the stupidest fucking shit anybody could say in this industry at all. It's fucking dumb. It's dumb. The only thing you're doing is guaranteeing you that you're going to feel what my son feels now: regret, scar tissues formed. He's going to make him scared to take the next trade. Even when the trade's good, he's going to be importing all of that toxicity because he lost. He lost when he didn't really lose anything. It's a simulated environment. But in his mind, because he's new, he thinks he lost about $4,000. So it's monumental to him. And in every trade he takes going forward now, he's going to have the fear and anxiety of, is it going to lead to that again? And that's what happens when you listen to these people tell you to learn how to trade, not in a demo, but with a live account. That is the dumbest fucking shit. Dumb. Don't listen to that. I don't give a fuck who makes fun of me because I'm teaching in a demo. I'm responsible. I am responsible as a mentor. I'm telling you that this shit will hurt you. You want to have training wheels on. You want to have your safety fucking belt on. Helmets, fucking football pads, shin guards, every fucking thing, a mouse fucking piece. Because this fucking market will kick your fucking ass. You get in there trying to Mickey Mouse with it. You don't know what you're doing? You're going to risk money? That little bitty account that you said you're going to learn how to trade in, be offside in front of CPI number coming up. That little account is going to be a big fucking account with a negative sign right in front of it. Hello, you owe us some fucking money that you don't have. That's the logic. In the reality, listen to these jokers that talk about learn how to trade with real money. Demo trades are stupid. Demo this. These are people that are not making money, folks. I guarantee you they're not. That's a mentor or attention seeker that doesn't like the fact that I catch a lot of flack because I teach through a demo, and they don't have the balls to handle all that. When I came out publicly, stepped out there just like that and said, here's me, I'm going to teach you in a demo. I completely disarmed all of them. What are you going to say about me? What are you going to say? I already said it's a demo. Go fuck yourself. I can call this shit, trade it better than any of you motherfuckers. And you're out here still trying to sell your shit. Nobody's buying it. They found something better. This is the way it is. By the way, I saw Sean Lee's back on YouTube. I missed you, man, and I watched your shit this morning. The last video you just put up here, I like your disposition in that video. You've been a character of some kind, but I like how you're conducting yourself now. So just let you know, I'm glad to see you're healthy and all that. But I think I've rambled on enough, ramblers. I think we'll bring this one to a close because I am hungry, and we were supposed to stop this about 2 other times before. And if I mention anything more, I'm probably going to turn this into well, we started at 10 o'clock. It's almost 4 hours, right? I can go 30 more minutes, but I'm not. The session on Monday will not be live streamed, so I don't know if I'll be doing anything in Twitter, calling anything, because I'll be working with my son. I have a mission with him now. So Monday and Tuesday, I think I'll own them for myself and my son. So don't expect too much from me on Monday and Tuesday. So we'll see what we get. I'll take a look at the economic calendar tonight and see where I think I'm going to do my 2 live streams for this week with you all. But be very careful this week. Good evening, folks. How are you? I hope all of you are doing well. So I figured I'd spend a little bit of time with y'all in here on a Twitter space. First one back from Passover break, which I needed that rest. So the title of this one is Beauty for Ashes. Now, I could obviously go on a rabbit trail, scripturally speaking, but we're not going to do that tonight. The idea came to me when I was thinking about how my children are typical children. They don't like to listen, just like you didn't like to listen, and most children, given enough leeway, they do whatever they want to do and discover the painful consequences by not listening to good advice. And as a father, I've always imagined when my children grew up that they would listen to the things that I endured painfully and choose not to do those things. That way they wouldn't have to feel the same types of regret and choose not to do those things. That way they wouldn't have to feel the same types of regret and, well, misery sometimes. And you think as a parent, and I promise we'll talk about the markets. This is all about the markets, but I'm kind of preface it by saying there's a little bit of a monologue. I wanted to be a father that would have the ability to be able to say, this is what you do not do. Here's what it did to me, so therefore don't do what it did to me. Wasted time, led to doubt, made me chase things that were unfruitful, but I had to see for myself. Doing many things, pursuing different things, trying to get a result that was just outside my reach or impossible. And maybe sometimes in your development, while learning how to read the market price and how to find your own style and approach, sometimes it feels like you just can't get it. Once in a while, you'll have this flash of understanding, but it's too short-lived. Doesn't stay around long enough. Doesn't linger enough for you to feel confident in yourself. Sometimes you have this amazing ability to see precise entry points, precise draws on liquidity. You can see where the bias is, what it's going to do, how it's going to behave. But it's not happening enough for you. So you go and you pursue something else. Because you're impatient, you don't want to wait
New
for
week
the thing
opening
that you're
gap.
supposed to be
It's
looking
likely
for.
to draw.
You chase after things. This thing looks like it's going to go up. You have no real reason why to believe it's going to go up. But you expect it, you chase it, and it hurts you.
Let's
and
see
it
if
burns
how
you.
we deliver the new week opening gap if we do.
Now, instead of taking that lesson and taking it as a deterrent from doing that again, some of you will do that same thing again, expecting a different result. And you'll get burned again. While doing these things, you don't see the scar tissue that you're creating. You think, I'm going to beat this. I'm not going to change the way I'm doing it. I'm going to do it on my own terms, my own way of doing it. And while there may be something that's been explained to me in a rule-based idea that I have to follow by someone else's instructions, I just want to be a kid. It's like Toys R Us slogan. The markets are not a toy store. And it's not a place where you can be a kid. It's not a video game. It's not a game at all. It's war. And when you set out in an endeavor to try to do something in these markets, using limp noodle logic and infancy in your understanding, infancy in your aptitude, and no model. No model at all. No patience. No specific rule-based idea to follow. You just forge ahead and try to find yourself in the chaos. And in the process, you burn your account. You burn your hope. Over time, it burns your desire to want to do this. And it sears in your mind that this is probably impossible for you. And you're slowly pushing yourself away from it. But you have friends online that you made acquaintance with. You're part of groups. You're part of mine. You're in this community. And you tell yourself, I just can't let go of it. I can't do it, but I can't stop. But you're not doing what you're supposed to do. You're not following the rules. You're not following the instructions. You're doing everything but the very thing that you're told to do. And you are burning your house, your dreams, your confidence, the passion that led you to want to do this at all. And you're lying to yourself because you're telling yourself that it's impossible for you to do this. And I agree. It's impossible for you to do what you're doing outside of the instructions that was given to you, specific instructions. And when you look at your ashes, which you've burnt up, pursuing something that had no logic for it potentially panning out properly, instead of identifying the lack of control that was required, but you shed no concern in that. You placed all the emphasis on doing it your way. Your way, through a very myopic, limited understanding, infantile, pushing the button, expecting something to finally give you the confirmation that you're doing the right thing by not following instructions. And you won't stop because you want that more than simply following logic that works. That's a discipline issue. That's not a flawed concept, flawed idea, fake concepts, or too rigid of a model. So you'll end up in this situation if you place yourself there, feeling as if you're never going to be able to do this. You're never going to be able to find your way into consistency. The market's going to continuously beat you down, so why keep trying? Why bother? What's the point? Every time you try to do it, it fails. But see, what you're trying to do is outside of what you were instructed to do. What was the model? Were you employing the model? Or were you doing everything outside of it? Because you were impatient and you weren't willing to wait for that model to form in the marketplace. I can tell you, as a younger man, I had that impulsiveness. I was reckless. I did everything outside of the rules. I would sit down over the weekend. I'd write this plan out. I'm going to do this. I'm going to do that. I'm going to do this. I'm going to do that. And with the cares of the world, my job, everything that was going on around me, I don't have time to wait for that thing to form. I think this next bar, because I didn't use candlesticks back then, I think it's going to go up. I think it's going to go down. I was bullish 5 minutes ago, but now I think it's going to go down. That's not following a model. That's being impulsive. That's trading from your gut, that hunch, that inclination that you think you see something that you've really never seen before, but you'll lie to yourself and say, yeah, this looks like something I've seen before. And what you're showing is you have no patience to wait for the model. And to dull that ache, that pain of not being willing to sit and wait for the setup to form, for the time of the day for that setup to form, you'll push the button in times of the day when there isn't any expectation for the market to be delivering any measure of precision, demanding that it does tricks for you and pays you for your consideration of it, like it owes you something. You identified it. You've given recognition to the market, those candlesticks. You've given some of your time. You've placed everybody else and everything to the sidelines, and you've now given all of your attention to that candlestick chart. So now it owes you something. That's a lie, but you believe it wholeheartedly. And you think every time pushing the button outside of the parameters, outside of the time that these setups should form, you're victimizing yourself, causing a learning curve that would never end by doing those things. If you've never done this to yourself, if you are a person that lacks patience and falls victim to impulsiveness, this is one of the things I talked about many times over the years. If your relationships and the way you conduct yourself in the world outside of trading, it will be magnified in trading. If you are someone that is seeking validation, seeking, well, acceptance, you'll do things that are over the top.
I think New Day opening gap.
So therefore you can go
New Week
forth
opening gap.
and bring it in front of other people so they can glad hand with you, pat you on the back.
Immediate
Well done.
rebalance there.
You're awesome.
Immediate
You're a goat.
rebalance.
You're the greatest that's ever done it. In trading, those types of things are the worst for motivating. Now, you might end up receiving those accolades as a result of doing things that are more focused, more purpose-driven, more detail-oriented in terms of following a model, but not trading for the sake of attention, status, recognition, a rush to prove something. That's a very, very dangerous path, especially for a young man. Especially for a young man that has a desire to stand out from the crowd, that has done well in other things, and you want this to be easier. Easier because it's somehow owed to you. The market owes you an easier pathway to consistency. And look, you're a natural. You'll be able to do this without any kind of rules. That's what your subconscious is talking to you. It's telling you, you don't need to listen to that stuff. And that's exactly what it was telling me as a 20-year-old too. You have to have rules. You have to. And if you do not recognize that, and you think that you can just impulsively just press buttons, trade on your impulsiveness and your gut feeling about where price is going to go, no probabilities behind what it is that you're doing, and then ignoring that that is not working, it will put you into a gambler cycle. You keep doing the same thing over and over and over again. It's not giving you the results, but you're not letting go of it. You're going to keep doing it because you accept the fact that you did that wrong then, but you want to sweep it under the rug and go right back in and say, yes, it didn't work that time, but I know it'll work the next time. If you just simply recalibrated all of that energy, all of that focus on the right things. Everyone that blows their account fails at something. It doesn't have to be trading, it can be anything. Everyone that goes outside of the plan, the approach, the playbook, the results are random. You have no baseline to work with. You're building a new one that's outside of the scope of the rules and outlined process that you should be following for whatever endeavor you're doing. But for trading, you have a model, or you should have a model. And you need to follow that. Stick to the rules. Trust that these rules will guide you and remove all of the impulsiveness, because the rules say, I do this, I don't do that. I can only trade this pattern and setup in between this time frame, this beginning and ending window. You don't trade 15 hours after that and expect the same type of response in price action. You don't do those things. By recalibrating that impulsiveness, but sticking to your guns, because you know if you keep doing it long enough, eventually you're going to get a result that you're looking for. And then by getting it, you think that's a reward for doing the right thing when everything you're doing is the wrong thing. You're trading outside of a model. You're trading impulsively. You're impatient. You're not waiting for the setup to form. Because you're having an issue with discipline. You don't want to subscribe to an idea that someone else has walked before you, lays it down in front of you and says, hey, start here, only do these things. And then you fail it. And you fail it again. And you fail it again. Multiple times, over and over and over again. And it becomes an arm wrestling match. You want to show the teacher that they don't know you. They don't understand you. You're going to be the exception. You're the one that these models aren't built for. You're going to redefine everything. Yeah, I was me too at 21 years old. So you can imagine how frustrating it is for me to see, number one, my students do that, but also children that I had high expectations for, that they would see what I'm able to do and they would want to be better than me. Like, I was expecting my kids to say, hey, you know what? I'm going to do it faster and better and more precise than dad. And here's the playbook. You can do it better than me. You can do it faster than me. You won't do all the things that I hurt myself with. And they aren't driven to do that. Which is, I guess it's proving human nature. Humans by default, we don't like to listen. We don't like, well, look at the students in this community. I mean, not everyone likes the long drawn out teachings. Get to the point type thing. Because the attention span of a gnat is what social media has cultivated. Nobody has time to learn anything properly. And it's very disheartening to see my willingness to pour myself out even more, because it's my own flesh and blood. And to see this lack, this disregard for the rules that would lead to them doing the very thing that they're looking for. Which now makes me question, is it really the pursuit to do trading, or is it the pursuit to say, I did something on my own? Which I can respect that. I mean, anybody could respect that, right? I mean, there's a lot of people out there trading, all kinds of stuff. I mean, I don't subscribe to the things that they do, but they're making money with it, so who am I to say it doesn't work, right? And I can understand the passion that would lead one to pursue an endeavor that says, I didn't listen to what you told me to do, and I still was able to do this. Okay, great. But are you seeing the results that would indicate that you're doing the right things and that you should keep doing what you're doing? Or is resetting and resetting and resetting and resetting and spending money, still not listening, still not doing the things you're supposed to be doing? Is that really the better way of doing it? Is that the best direction? I would argue that it isn't. But I have to hold very loosely these boys of mine. Because if I say the wrong things, I'll turn their interest completely off. And that's what I'm trying to avoid. I'm trying to keep this little ember burning. And hopefully it'll turn into this wildfire that nobody can put out. And they'll be better than I am. When you sit down and you listen to a child, and they say, I don't understand why I can't do it. I don't understand why it's so hard. And then you just gently slide a piece of paper in front of them and say, are you talking about this? Are you saying this doesn't work? No, I'm talking about my way of doing it. But what way is that? If you've never done it before, you've never been successful before, you just started, how can it be your way of doing it? You're doing what everybody else has done. Pushed buttons, found out that didn't work. So let's push more buttons and find out that it still doesn't work. And ignore the data that's being presented to you. Ignore the fact that you're not getting the results you're looking for. This is exactly what I talk about in all of my lessons. Having my DNA, having my time, having me right next to them, available to pick my brain, was not advantageous at all. Because pursuing an endeavor on their own steam, their own timing, their own way of doing it, was more important. And I can't tell you how frustrating it is. It's very frustrating. These funded accounts, these companies that do these things, I've never had an interest in them, and I generally don't have an interest in them. But I've seen my son work with this. And I'm not going to say anything about the company because, like I said, it's too soon to say really anything. But I've watched my son's account run into certain rules that they have. And when that account would make money, not really make money because I guess it's like a demo. I guess that's what they make you do, a demo, or the equivalent thereof, where you're trying to pass the combine or whatever. And then you get funded, quote unquote funded. Well, they have these rules, and he got stopped out of his trading when he thought he had a cushion. So my understanding, I may not have this entirely correct, so just bear with me here. From what I gathered, as you make money in the combine account, or when you increase the balance, let's put it that way, because there isn't any money in that. When you increase the value of the balance of that account, these companies, they roll your maximum loss right back up underneath, whatever that fixed percentage or amount is. And he thought that he had cushion. So, okay, well, if you start with 150,000, hypothetically, and you make 2,000, make 3,000, make whatever it is, then you should have whatever that initial cushion was, plus whatever you now put in the account. And apparently, and I might be incorrect by saying this, but from what I gathered from him, it's not like that. So what he thought was a cushion wasn't there. So they said, you broke a rule. Okay. So anger kicks in. He's going to go and do it harder and faster now. More contracts because he has time lost. He wants to make it up. So he's impulsively pushing the button. No model. Not listening. And now he's doing it for more contracts. So I haven't sat down with this. This is one of the things I was going to do tomorrow morning. I want to sit down and see how they put this maximum stop loss in. And when you make money, it goes up. It sounds to me, I want to say what I want to say, but it may not be fair. So just bear with me, okay? This is what I'm suspecting right now, but I don't know in full detail, okay? Because I only see screenshots, okay? I only see, show me what you have right now. And then there's a login. He does the login. You can see what he's doing and what he's done right and what he's done wrong. He wants to show what he did right, but he doesn't want to talk about what he did wrong. So I have to be very careful because I know how this is going to go. He's going to hit a brick wall, and it's going to be, all right, I tried it my way. Show me what I'm supposed to do. And I had a little small window of opportunity to do that today. So I spent my time with him. I was all over the charts today, but I had to spend time with him. So because of my frustration as a dad, trying to get him to listen, and my other boys to listen when it comes to this stuff, it's amazing. They'll listen to everything else. Dad said to this is what we're supposed to do. We're not allowed to do this. Don't talk out of character. Be respectful. The whole business, manners, the whole show. So I guess this is their one area they can say, look, we don't have to do this your way. When this is the very thing that you should be doing my way, right? But that's not what I'm seeing here. And it's very frustrating for me. And my obsessive compulsive disorder is really having a hard time managing all of it. Like I want them, if I could ever be one ogre overlording over them saying, you're going to do this and you have no other way. This is it. I want my inside of me. I want to be that way towards them. Like I want to exert my dominance as their father in this area, but I know that won't work. It wouldn't work with me if I was their age, and it won't work for them. And it'll do the very thing that I don't want to see happen, which is leave a bad taste in their mouth, and they'll just say, you know what, I'm not going to bother with this. So I'm balancing something very, very delicate and fragile. And they're young men. And young men, you know what it's like. You've been there before probably, and you're probably feeling it right now. You want things to be easy for you. There's nothing wrong with that. There's nothing wrong with wanting things to be easier. But you have to identify doing the things wrong repeatedly against the good, sound logic of something that has worked in the past. Don't risk too much. Don't trade more than one contract. Because these funded accounts, I'm going to say this, and I don't need to have any more details to know this is what this is. They exist to fleece you. They already know the statistical probabilities are you're going to fail. You're going to fail because you're going to be impulsive. You will not use sound logic with risk management. You're going to trade more contracts, and that's why they dangle that carrot there. You can trade up to 15 contracts. They didn't say trade with 15 contracts. They just said, hey, you can. And he tried. Not once, not twice, not 5 times, 6 times. Burn, 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 over and over and over again, thinking that was going to be the answer. Not realizing that threshold that is so small. Let's play devil's advocate for a moment, okay? I know some of you trading funded companies are listening to me and you follow me. Just hear me out. I'm not spitting in your face or saying what you're doing isn't helping some, because some of my students are actually doing well. But this discussion here tonight is meant to just really place the emphasis on doing the right things as you, as a trader that would use these types of companies. Number one, the risk is too tight. And I know how to trade. If you're saying that you have no chance of succeeding if you only lose, a couple $1,000, that ends it. That completely ends it. We're not even talking about 10%. I don't know what the actual figure is because I just don't know, but I know it's not 10%. 10% would be reasonable to say, yeah, this is no good. No, you've messed up here. 10%. That you should be able to do better than 10%, not go to 10% drawdown. None of them are doing that. When I'm trading, if I take a trade that I feel is worthy of a high risk percentage behind it, I can work with 5%. Now, I believe that would fail these funded account challenges if you were to use that and you take a loss at the full 5%. I think, if I'm not mistaken, I think that would fall underneath the umbrella of most, if not all of them. And that would be considered you failed. In my eyes as a trader, that's nonsense, because that one trade, that one period of drawdown of 5%, that doesn't mean anything in the grand scheme of things, especially if you're pushing real hard. And I'm not suggesting that anyone should go into these companies or these combines and push real hard. That's the very thing you should not be doing. But my son, he felt that pressure. And the words were, it feels like I'm trapped in this small room and I can't move around. Well, that would be true if you're trading with 15 contracts. It would be true if you're trading with 10 contracts. It's true if you're trading with 8, 7, 5, and you don't know what you're doing. The model was one contract. I don't care what these companies say. You can trade as many as. That is the hook. That's the thing that you're going to reach to when you do the one trade that wasn't really all that heavily leveraged. And you want to fix it real quick. Well, all I got to do is go in there and do 5 contracts and I can get it back real quick. They know that you're going to do that. And it's advantageous for them to see you fail because you'll pay that $99 6 and 7 different times. And then expect to get you right around that next new month. You got to pay the dues. And the whole time you're seeing all that stuff add up. Is it helping you get more patient? No. It's revving you up to do what? Think impulsively even more. The words were, I got to get this before they ask for more money. But you're feeding them every day. Reset, reset, reset. Not doing what you're supposed to be doing. Doing everything outside the rules. Not just theirs, mine. This might sound like something that you put yourself through. And you should be encouraged to know that even my own children, this is what they're going through. It's a character flaw. It's something inside of you. And these funded accounts, you can't trade with a lot of contracts if you don't know what you're doing and expect to be successful. And I'm just going to put it out there and say just like that. So there's no real advantage. There's no real advantage to do a $150,000 account when you can do profitable trading with the 50. He doesn't like the idea of doing that. No, no, no. I'm going to do it this way. All right, whatever. Show me. I already know how this is going to end.
All right, we're gonna continue with the 2023 backtesting it. It's almost going into lunch, and I don't need to be on the charts during lunch personally, because that's not a time window that I would like to trade in the future. Do something to backtest. So we're at the 25th. Oh no, we're at the 27th. So we originally come down, mitigate this, come up, take buy side, or SMT. Notice how dollar took buy side. If you're looking at the charts right now, dollars took buy side, and we're seeing some form of retracement.
Well,
$9.50 macro reversal. I don't know. I think Flex trades Loki tripping, bro. He says 9.50 macro doesn't reverse price. I've noticed that there still could be a 9.50 macro reversal. I need to change this template. So buy side taking, market structure shift. No imbalance here. We have an imbalance right here within the 1050 macro. Frames a handle run there, and then PM session reversal right up to new day opening gap. And back within the range, we have sell side delivery within the 950 macro. Buy side shift to market structure, 2022 model right there.
Well, good evening, folks. Taking a look at the E-mini S&P futures contract for June 2023. This is our daily chart here. And I want to cover some of the points. I'll be looking for tomorrow in terms of key levels and areas of interest. All right, so here is the premium fair value gap, sell side imbalance, buy side inefficiency, or SIBI, and consequent encroachment, premium wick high, midpoint level there. The imbalance here, which is a SIBI, essentially is equilibrium between this high and that low, so we have that noted here, just in a light gray area. Discount, consequent encroachment of this wick, so midpoint of that, that's what's annotated, and the fair value gap over here, because we cut through candles from not supply and demand. This level is still going to be useful going forward, just as well as this one is as well. Dropping down into the hourly chart here, you can see the buy side liquidity pool, an interest in that tomorrow. We have a breaker here, we have a low, high, lower low, trading off of that old imbalance on the daily chart, the discount, fair value gap. Breaker, extended through. Then we have a small little fair value gap in the form of a buy side imbalance, sell side inefficiency. Trade down to consequent encroachment, and also the breaker there prior to rallying up, taking out short-term relative equal highs, which is buy side liquidity. Market trades back down in to the high of the fair value gap here, and basically just consolidates into the close for today. So these levels I'll be having an interest in that going forward into tomorrow. On the 15-minute time frame, you can see we had a buy side liquidity pool here, as I mentioned, relative equal highs. The market traded above that, and then once more here, we talked about that live on Twitter. I was looking at 40.34 buy side, and inside of that run from high, low, higher high, down close candle here, that's your bearish breaker. Extend that forward. You can see in the last hour, we'll take a closer look at that as well, but we'll roll it back into the morning session right after the 9:30 opening. Note this discount wick, consequent encroachment, beautiful delivery there. And again, the fair value gap that was on the hourly chart doesn't look so much like an imbalance on the 15-minute time frame, but we work top down, and we can see how we touch that bullish breaker here. Again, go back through the video, screenshot your charts from the video playback, and transpose that to your own charts.
Wow, I'm lacking in my analysis, bro. I ain't gonna lie. Oh, I had that noted. And this is at equilibrium of the daily dealing range. We also have this inversion right there. Let's see from this dealing range high to low, just from this fractal. 50%. We've displaced about 50%, so we're likely going to take buy side at some point.
And you would see where it is that I'm showing you here. It'll be much more meaningful should you do it on your charts, not just looking at mine, especially by watching tomorrow's live price action. 5-minute chart here. Opening price right here at midnight. That's this level here. So New York midnight opening price. Ran above buy side here, and I mentioned we would be looking for 40.34 buy side, and it rallied up into that here. All of this is a Judas swing. We're moving above the New York midnight opening candle, opening price. Rallies up, buy side. Then we're going to be looking for 40.18 sell side, which is right below this low here. All of this back and forth price action finally giving up the ghost and trading back down into order flow in the form of that discount wick, consequent encroachment. And we're going to dig into a little bit more detail. And again, you can see the breaker.
Yeah, you have a 2022 model on the 5-minute here. You have sell side, market structure, imbalance right there.
Throughout the day to the last hour trading, which was influential once more there. All right, getting down to the brass tacks, I have a 1-minute chart here. It's in balance here. Extend that through again because we're not supply and demand. We cut through candles. That range I projected forward. And showed that on Twitter today as well. We talked about how 40.34 buy side would be in contention, and volume imbalance. I shared this on Twitter as well. Right in here, we were looking for 40.34 buy side, so really nice run up into that for a 5-handle run. Then stop dead in its tracks at the macro at 9.50, which is the high candle here, to 10.10. So that's our first macro after the opening bell at 9.30. Algorithmic delivery takes it right into buy side, and then at that time, we took our attention to 40.18 sell side. The market trades back down. Works inside that old imbalance. We cut through candles, and there's another volume imbalance right here. Again, draw that out in time. Hits it as resistance now. Trades softer. Another imbalance. I mentioned this real time in Twitter as well. The buys of the candles more or less respect the majority of that range. And then we had this one more little return back up into the original imbalance I mentioned here, inside of that bearish breaker. Okay, so again, all of this may be confusing. If you're just casually watching and you're not really trying to see where these levels are derived from, and not transposing them on your own charts, I promise you you're wasting your time. You have to do the work, taking the information, placing it on your chart.
I don't get the 1 minute data.
Charts, and then cycling through top down meaning from daily chart to hourly chart to 15-minute time frame to 5 minute to now 1 minute. So the market sells off here, attacks the sell side there for another 5 handle. So we had 5 handle run there and 5 handle run there. So that's 10 handles that I mentioned live on Twitter as it delivered. And then I said, okay, I'm done. I'm going to take my attention away from the charts. Trades back up into the imbalance here. So that would be an optimal trade entry. And also return back into a fair value gap. Market sells off, institutional order flow entry drill inside this area here. Doesn't fill in that gap. In other words, market aggressively trades lower. We have this wick in here. Okay, so it's a discount wick before trading down to opening range gap low. And I mentioned this on Twitter as well. I showed you the chart, how to derive that information. And the market comes back up, hits that beautifully. That's algorithmic price delivery. Sells off once more and goes down into the opening range gap low. And then ultimately later on, trades down into that old discount wick consequent encouragement, which is right here. And the current new week opening gap high, new week opening gap consequent encouragement, and new week opening gap low, shown here respectively. Here is the opening range gap shown to you at the 9:30 opening price, and with regular trading hours, you'll see that down here. If you have live data, you can toggle this. It'll be ET. Which is electronic trading hours, or regular trading hours, which is the RTH here. When you toggle that, it's going to show you where we closed the previous session, right here, and then we wait for the 9:30 opening. There's your opening range gap. And you can see how we performed there. We had initial drop down, drop was followed by the run up into the buy side. I mentioned real time. We hit that right at the candle high at 9:50. That's the algorithmic macro that I teach, which is 10 minutes to 10, and it continues to 10 minutes after 10. Within that 10 minutes prior and 10 minutes after the 10 o'clock hour, there will be a price.
I guess it's
price swing that originates with 9:50. That's the algorithmic macro that I teach, which is 10 minutes to 10, and it continues to 10 minutes after 10. Within that 10 minutes prior and 10 minutes after the 10 o'clock hour, there will be a price swing that originates and starts there, and it'll run for liquidity. We take buy side here, so where's going to go next? Sell side. And I call that live all on Twitter, and it's all there. You're welcome to go back and look at all that. I didn't do too many tweets today, so it'll be easy to track it and see it. And the market trades, again, back up into that fair value gap I mentioned here. You can take the tweets also and copy the link from the Twitter, and then right mouse button on a trading view chart, on a 1 minute chart, it'll plot my tweet real time right on the minute candle. You can see what I was talking about at the time in proper context. It's a very useful way of following along the logic, even after the fact. Like if you have to go to school, run a business, or working, or sleeping, you can go back and do all these backtesting ideas here. Okay, so my version of backtesting is all of this annotation. It's not pushing a button with a market replay type thing, nothing like that. That's a forward walk test. Before you would do a live, you're trading with real time and also demo. So there's a step between that, and that's not what we're talking about here. This is backtesting, my version of it, which is studying the price action, looking at all of the scenarios and mapping out the idea. With all this empty space here and here and over here, you'd be filling that in with your own chart, explaining what this return back to this consequent encouragement of that discount wick now acting as what? An inversion level resistance. Beautiful delivery. Now, this is what I tell the skeptics that watch this and you see a rectangle on my chart and they think right away it's supply and demand. It's not. For the folks that say it's support and resistance, it's not. This low, why did price not go just to that level right there and stop and turn on a dime? If it's support broken, turn resistance, why did it go up to the level I teach? Right there. Because the market's booked by algorithmic price delivery, not retail logic like support and resistance. Okay. The market then trades into the opening range gap low. Beautiful delivery there. And then consolidates going into the lunch hour. Speaking of lunch, here we have it. The market trades again off that consequent encouragement of that wick down into the opening range gap low. And for you notice the opening range gap low, when the market opens higher than where we closed on the previous session, meaning where we settle and where we open at 9:30 the next day, that is your opening range gap. It may be a gap higher or it may be a gap lower. In this case, we gap higher. So the opening range gap low is the previous day's settlement price or close. Okay, and then the difference is where we open at 9:30. The gap's higher when we open at 9:30 from the previous day's settlement price. Chances are we're probably going to look to see it trade back down into that range. It can go all the way down to the opening range gap low, or open it on the previous session, meaning where we settle and where we open at 9:30 the next day. That is your opening range gap. It may be a gap higher or it may be a gap lower. In this case, we gapped higher. So the opening range gap low is the previous day's settlement price or close. Okay, and then the difference is where we open at 9:30. The gap's higher when we open at 9:30 from the previous day's settlement price. Chances are we're probably going to look to see it trade back down into that range. It can go all the way down to the opening range gap low or beyond it if there's something else that it could reach for a discount. I've shown you this before. We have a low, lower low, higher low. This price run here, take your fib, drop it on the low, up to that high. It projects a swing high of negative 1.5, which comes to the price level of 4027 and 3/4. Extend that to the right. 4027 and 3/4 is the actual high tick of that candle, and that candle in the last hour of trading. Inside of that first fair value gap I mentioned. That's the rules, folks. That's how it's coded. And I know it doesn't sound fun when I keep repeating it, but at some point you're going to have to realize that these things are not random. Prior to that run up in here, we have a shift in market structure after 1 o'clock. Here's 1 o'clock. So now what we're going to do, we're going to run for the stops. Prior to what? During and prior to lunch. So we have all these buy side here, and all the way back up above here. So we're in consolidation right now in the daily chart. That's the reason why we're seeing these types of price action. Fair value gap, high to low, discount, trade down to it. Look at the bodies respecting it. Yes, we have a wick, and we have a wick there that just about closed it in, but the bodies are respecting the high end of that. That's beautiful. Price runs, takes out buy side, digs into the imbalance. Now, using this price run here to measure that projection, from here to here, taking out buy side here, that's suggested that that's a potential run. But if we go back to the old high back here early in the day at 4034, down to that low, it would be better for us to dig up into a premium, because we're in consolidation, buy side, buy side, buy side, and also with the swing high here and the old fair value gap. So there's a lot of confluence pointing to that 4027.75 level, which it delivers perfectly to the tick. 3 candles prior to it giving up the ghost. Also note that that run up here is above the New York midnight opening price. Okay, so you have to know what time it is in New York local time. Right at midnight, New York local time, that price, you want to have that annotated on your chart. Best short positions are going to be above it. Best long positions are going to be below it. That rule will serve you extremely well in the future. And finally, this is the last hour of trading for the New York session, or final hour New York PM session. Here's that 4027.75 level, and the macro that starts at 250 to 310. That means there's going to be a move that begins there. It's up in a premium. It's going to seek what? Discount. Here's your price low in that run. Equilibrium would be right in here. So right below that low would be nice. Interestingly enough, it trades down into that and retraces back up into the bearish breaker. This breaker is the one I showed you at the beginning of the video. We're extending it obviously across the entirety of the trading day. This is the live view prior to it giving up the ghost. Also note that that run up here is above the New York midnight opening price. Okay, so you have to know what time it is in New York local time. Right at midnight, New York local time, that price, you want to have that annotated on your chart. Best short positions are going to be above it. Best long positions are going to be below it. That rule will serve you extremely well in the future. And finally, this is the last hour of trading for the New York session, or final hour New York PM session. Here's that 4027.75 level, and the macro that starts at 250 to 310. That means there's going to be a move that begins there. It's up in a premium. It's going to seek what? Discount. Here's your price low in that run. Equilibrium will be right in here. So right below that low would be nice. Interestingly enough, it trades down into that and retraces back up into the bearish breaker. This breaker is the one I showed you at the beginning of the video. We're extending it obviously across the entirety of the trading day. So we have this break lower, swing low is taken, trades back up into this candle right here. That candle's high is the exact high of that one and that one. That is institutional order flow entry drill. All it has to do is match that price. So you could be a seller at that candle and that candle, looking for a price run below that low here and that low over here. Relative equal lows here. That's where sell side resides. And again, we have the opening range gap low over here, which is previous settlement price on Friday. Then we have, again, repricing to that inside the last portion of the final hour of PM session trading. Let's go back into the details here. Trading back up in that bearish breaker with also institutional order flow entry drill after hitting 4027.75 level perfectly. That's a nice short here. Volume imbalance, if you missed it, it trades back up into it there. Breaks lower. We have a wick. This is a discount wick that's going to act as an inversion level. So think of like support, broken, turn, resistance the real way. Then we have SIBI here, sell side imbalance, buy side efficiency, which is a fair value gap. I'm classifying it as what it is, a SIBI, S-I-B-I, sell side delivery. What's it inefficient on? Buy side. So we would expect price to deliver up to it. And look at that. Wouldn't you know it? It goes right to the tick price. Don't take my word for it. Measure that. Go in your time frame and measure the low of that candle to the open. Midpoint of that, 50%. Draw that out in time. That's exactly where it goes. Inside of a bearish breaker. We have buy side here. We have high, low, higher high. That last down closed candle. Extend it forward. We have a SIBI and a consequent encroachment on that wick. Boom. Delivery. Perfect. Price breaks lower. Last up closed candle prior to this displacement is a bearish order block. Trades up into that once, twice, gives up the ghost, and again one more time, repricing back down into the opening range gap low for a final hour New York session trading opportunity. Just a beautiful PM session. This one here is like a centerfold. Also notice, again, we're trading above, right here, above that New York midnight opening price. Short of the breaker, short of the breaker, short of the volume imbalance, breaks lower, below this low here. So there's displacement. So now you can use what? You can use the 2022 model, which would be high to low, equilibrium. Here's your fair value gap. Trades up into it there. What's going to aim for? Sell side, relative equal lows, and or the opening range gap low. And then boom. Just wonderful technicals. Just really, really nice to see algorithmic theory delivering as you see it here. Hope you found this insightful, and I'll talk to you next time. Be safe.
Wow.
Okay, practice. I'm trying to convince him. And
Those reviews are. That review is beautiful.
but show me. Daily. He builds the house. He's the builder. He's the architect. He's doing what he wants to do, and boom, burns it down. And because it's so cheap, $99. All you gotta do, $99, and it's all gone. You get beauty for your ashes. It doesn't hurt anymore. Everything I did wrong doesn't exist anymore. It's under run. It only cost me less than $100. Doing the same thing over and over again. When, by simply doing one contract, following the model, taking that piece of flesh from the market movement, and stopping. You can't break any rules. He did, what's today, Friday? Thursday. Thursday, he had a trade on after 4 o'clock. And apparently there's a rule that they say you can't trade after 4 o'clock, but you gotta close your trades at 4 o'clock. And he did well. And went to target, set through something, and went right to his target, and then found out that that didn't matter. He had to reset because he broke a rule about time. Listen, folks, trading in itself, okay? Trading in itself is very, very difficult to learn in the beginning. And for you all out here that are trying to rush into these funded account challenges, you're increasing the level of difficulty when you don't have a model. You don't trade with real risk management, real risk and trade management. I don't care what size account that you have with any of them. If you just trade with one contract, you'll never break their rules, and you'll make money. But greed and impatience. I gotta get through step 1. I gotta do it. It says I can do it in 5 days. I gotta do it. The rule was spend up to 2 weeks. Don't listen to that. It says you can trade 15 contracts. Don't listen to that. What makes this very, very hard for a new trader is the level of drawdown that they permit is stupid. Now, today, because my son was basically looking at me like, this is impossible. Like, it's impossible. So I had to step in, Mr. Possible. I said, listen, let's take a look at what's going on this morning, okay? You've been doing everything wrong. Let's just go back to this piece of paper here, and what does it say to do? All right, with that, I want to do this. All right, we'll do what you want to do as long as it agrees with what's on this paper. Do you agree? Okay. So I guided. I said, now look at this right here. Do you see the chart showing you this? Do you see that news at 8:30 caused this movement, and at 10 o'clock, we're expecting it to run again? It's going to do what? Well, you as my students know that I was looking for 4180 in ES. I wanted to see it trade there, and how it traded there would tell me how we closed the week. So we sat there, we watched it spike up, watched it work through 4177, NASDAQ plummeting, dollar raging higher. I said, now you have a setup. And suddenly, all the planets aligned. And immediately, just only 36% of the $9,000 that he's supposed to get before he's quote-unquote funded falls into his step 1 phase equity. Now, I don't know how this works because, like I said, I've never had a real interest in it. But apparently they have a rule, or this particular company has a rule, where you can't have more than 40% of the 9,000 made in one day. So I'm assuming if you were to make more money, now I'm saying this facetious because I don't know, but if that's true, like if you make more than 40% of the 9,000 in one day, does that fail you? Does that like cause you to break a rule, or they just don't count that and you just gotta keep moving? I don't know. But I plan on reading through all this stuff so that way I can sit down with him and hopefully next week he'll do better than he's been doing. But today I told him this is what you're looking for, and when you see it, push the button. I'd like to say that that was enough to satisfy him. But no. No. In some ways it felt like that bolstered the willingness to want to do his own way. Like he
Oh,
somehow saw something
look at
new.
that.
He learned something new from that. And therefore that piece of paper that has a simple set of rules that he has to follow need not be concerned with. So what is he exhibiting? A character flaw. Those of you that learn from me and you don't listen to what I'm telling you to do, follow the bias that I'm outlining. This is where I think the market's going to go, and you're fading that. And then crying, sending emails, posting things on Twitter, complaining to other people in videos about me. When you're doing everything opposite, and then struggling, and then trying to find the blame on me or something outside yourself. That's nonsense. You have to snap out of it. You have to snap. You can't do those things. Number one, the world isn't going to let you do that. You'll have a rude awakening. You can lie to yourself in your trading, but eventually you're going to see that person in the mirror, and it's going to hurt. When you have to come to grips with, you're burning it down. You're the one holding the gasoline. You're the one who has the lighter in your hand. You're doing it. Each time you're doing that, you're causing that fire that causes more damage, and everything has to be rebuilt all over again from scratch. But it's not just a reset. You're bringing something new each time. Depression, fear, concern of how many more you can afford. All those things you're bringing into that new reset. It's not just $99 anymore, is it? It's really expensive. Really expensive. And each time, it's going to get harder and harder. Because at some point, you're going to start doing the math on how much money you've thrown into resets and how far you're behind. So when you first start, if you're new, you've never really put any money in the marketplace, the idea seems novel. It's wonderful. Like, hey, wow, it's an opportunity for me to go in here and not really use any of my money. And then suddenly you discover you put a whole lot of your money into it, one reset at a time. Every new monthly due payment, and you want the maximum. So you want to give them $400 a month while doing nothing right. And you build up a list of resets, each one costing about $100, and not making anything. Not even getting to step 2, where you're considered funded. All that money being wasted, all that time being wasted, and all of that scar tissue being created in your subconscious about what it is that makes you a trader. And it's interesting. It's almost impossible for you to recognize that what you're doing is wrong. You're telling yourself what you're doing is right. It just has to be done longer, and it'll start working. If you just recalibrated that tenacity, that moxie, that thing that just says, I don't care, I'm doing this. If you applied that to a model that works with sound logic, you're invincible. You're invincible. Doesn't mean you won't have losing trades. It means even with losing trades, you're not going to deviate. You're going to stick to what works. It's proven itself to you. The backtesting has proven it. I have proven it. I've shown live, this is what it's going to do, and it does it. This is what time it's going to form, and it does. But if you're not going to reach for that logic, and what you're doing is costing you money and resetting and frustration and becoming more and more agitated by not following the rules. Imagine what would happen if you started following the rules. If you just simply did what you were told to do. How much easier would it become? At some point, you're going to have a whole pile of ashes. And you'll be sitting there looking at all the things that you've wasted time, energy, and money. And when you really sift through those ashes and honestly see what you've done, you really didn't use what I taught. You really didn't listen to the lectures and the advice about what not to do and what to do. You really didn't do that. But hey, look at that pile of ashes you got. You were doing something. You weren't wasting time studying, right? You were doing something. And the something you were doing wasn't profitable. And that weighs on you subconsciously, and over time, it'll make you toxic. And you'll start being spiteful. Not to yourself, you won't hold yourself accountable, but you'll point the finger at everyone else. Your friends, your family, me, our community, trading in general. Because it hurts too much to identify the fact that you did this to yourself. Nobody guided you incorrectly. You did everything wrong, and you made those decisions. Are you in a position to be accountable for that? Or you can say, yep, if I'm being honest, I made those mistakes on my own. Nobody told me to do that. I did it on my own. Because that's what a trader is. It's a person that says, I own my results, good or bad, I can live with myself because I'm following a model. I have a rule-based idea that I'm going to stick to that allows me to be objective. I'm not going to be swayed by my notions. I'm not going to be swayed by the psychological impact of what other people think I should do and how I should trade. Look at social media. I was gone for today, and I'm seeing people argue about me when I have said nothing. People are upset with me, and I haven't done anything. Now, I can cause a bunch of chaos, and I don't mind if they're talking about it then, but if I'm not even around, if I'm staying in my own lane, focusing on my family, people, it's not fair. I got to deal with you. I haven't done anything. And if it's not that, it's somebody else that's pretending to create something, and just rebranded something on my core content. Yeah, that's what the ghost has said. So I'm aware, obviously, that I have students I'm interviewing them, obviously. I have several more I got coming. I was going to do one today. I had asked the gentleman to let me know if he was going to be available today at 1 o'clock, and obviously my family precedence, and I wasn't able to confirm that, so I'll have to do that next week. But I have 3 of them scheduled next week for a sit-down and recording, so I'll stagger them going in the future, releasing them. They all know that they'll be sitting with me talking. And they've done things like these other accounts, and they've made money. So what I'm saying here, like, don't let it discourage you if that's what you're doing or plan on doing. But I think that if you are going to go that way, one contract is all you need to do. if you can't lose $3,000 as your max loss, and each point or handle in the ES $50, if you're trading with more than one contract, you are exponentially increasing the rate of impossibility for you to succeed long term, because you're willing to take on the larger risk because the payouts are better. I can get more money faster. Well, that could happen. That could happen. I'm not saying it can't. But what also could happen is you could be human. You could be a little off on the day, and the market could also behave just a little bit squirrely, do something just a little bit unexpected, and color outside the lines that you thought it was going to stay within. And the day that you chose to do 10 contracts stings and takes a little bit of your backside off. And then you got to correct all that. And it now becomes, oh, I'm further away from the finish line. Now I got to fix this. Whereas if you trade one contract, regardless of what size account funding you have, one contract, that's a lot of wiggle room. If you only lose 3,000 and you're trading with one contract, you can be horrible in your precision. As long as you're right on your draw and liquidity and you're trading in the right time of day, you can still eke out profitability. You don't need precision. But you have to have precision. Like my level of precision, if you're trying to trade 8 contracts or more, and you can only lose 3,000 before you burn it, most of you listening aren't in that skill set. And that's not a knock against you and me saying I'm superior here. I'm saying that the parameters that you're trying to place on yourself, you may not be versed in trading, know yourself well enough, and maybe not even be able to do a precise entry continuously over and over again because you haven't done it well enough. You haven't identified when it's not likely to be as precise as you would hope for, which is what I'm trying to teach this year by mentoring with live data, teaching you how to read the tape. So why would you want to increase the likelihood of burning everything down just to have one good, quick run? I got to step 2 real fast. Well done, you gambled. Well done. There's a lot of people that go to Vegas and they make money. That doesn't mean they were skilled. You want everything that you're doing in this industry, in this endeavor, this pursuit of excellence in trading to be that very focused there. Excellent in excellence. You want to be able to focus on being good at what you're doing, not showing up at the right time and getting lucky. You don't want happenstance. You don't want coincidence to be the common denominator in your success. That's not what you want. But if you're being honest with yourself, that's what you're asking the universe and fate to come into your favor when you're over leveraged, just trying to get through to step 1. That's what I've watched him do. I've watched him push and push and push and just try to get through real fast. Because it took him longer, he's speeding up more intensity and more fever to do everything backwards still, because panic is setting. And I just sat with him and reminded him today that there's no reason to feel that way. Think about it. You're going to pay this monthly due to whatever that company is. So why not just give yourself the full month? Does that make you a bad trader? Does it make you less of a trader than someone else? Who cares how long it takes them to do it and what they think that it should take you to do it? Because when you get funded, and if you make money and you do whatever those profit splits are, which I don't even know what the profit split is, I don't know. But whenever that is, and whatever that payout is you get, are you going to listen to that same person that's telling you what you should do, how you should do it, how fast you should do it? Are you going to let them tell you how to spend it? No. So why are you going to listen to them when they tell you what you should be doing to get through a specific time frame or duration, or model, or approach to doing so? All these things are distractions. They're all ways to keep your eye off of what it is you're trying to do, which is find consistency, stop burning down things, and receive beauty for ashes by doing what you're supposed to do and focusing on that. Not trying to rush it, not trying to add 20 funded accounts. Let's just start with 1. Let's just start with 1, trading with 1 contract, giving yourself time. Okay, I know some of you thinking, wait, man, wait. Listen, you said 1 contract, but they're asking for $400 a month. Come on, man, I can't get rich on that. They're in my pocket. They're going to be taking a portion of the profit split on top of that too. It ain't worth it then. It's not. You have to turn these odds around and place them in your favor. You got $3,000. $3,000 drawdown with 1 contract, that's a lot of wiggle room. That's very forgiving. And to make $400 over the course of a month with 1 contract is easy. So you don't know it because you're trading with larger leverage every time you're trying to do these combines to get through it real quick. Because you probably told yourself, all right, I'll break all these rules to get through it. I'll trade with 5 contracts. I'll trade with 8 contracts just to accelerate my way through step 1. But when I get to step 2, I'm going to be a good boy. I'm going to trade with no more than 2 contracts. Because it would be silly for me to lose step 2 funded by over leveraging. But you're not using that same logic going through the first part of it. Silly, isn't it? And this is really no different than what people do with their live accounts. Before they even send the money to the broker, they're like, I'm going to follow all the rules, I'm going to do this, I'm going to do that. And as soon as the account's opened up and you have the first losing trade, oh, well, that went out the window. What you say, the casino never closes? Well, that's exactly what I'm here for. Push it. What's the most contracts I can trade? That's what we're doing. All logic goes out the window when you're using real money. Which is why I tell you, you have to be bored with the results in demo. 6 months. If you just do it for a month, you're not really desensitized. You're not conditioned. You're not initiated. You just dabbled. That's equivalent to anybody else that starts in Forex or trading and they use a demo account. Oh, well, I could have made money like that. That sounds like a plan. No, let's go ahead and just put 5,000, 10,000 into an account. I'm probably going to make money. It doesn't work like that, does it? Suddenly, there's a scorecard. And it has a dollar sign right in front of it. You don't want to do all the wrong things multiple times and realize over the course of a month, none of the things that you did panned out. None of them resulted in step 2 funded. That's frustrating. You trade with one contract. I don't care who you see live streaming making money. You don't know if they're resetting accounts. You don't know if they're really trading with a funded account or trading with a practice account. He took trades. He thought he was in the compound account. And it turns out it was in a practice account that he didn't ask for. He did a reset early on. And then when he logged back in, it apparently defaulted to a practice account. So he was working with that account, made a little bit increase, and come to realize none of that was even going towards the combine. So you can imagine he was a little torqued up about that. I mean, I did everything I could not to laugh, but, you know, it is what it is. I mean, you're going to do silly stuff. Sometimes in the past, I pressed buy when I wanted to do sell. You're going to get disoriented, you're going to do silly stuff, okay? But imagine doing work, thinking that you've gained some ground, and it wasn't your live account, it was in a demo, that type of thing, right? So I think he's learning that all the things he's trying to do aren't going to work. And I'm hoping that this coming week, he'll get hammered more and finally just say, that's it. Like, I can't do it this way. I'm only going to do what you said. And I'll be satisfied. I'll be happy. Because I know that will yield him what he needs to build back, improve and repair what he's done to himself, and then replace it with positive reinforcement. And all that little bit of stuff he's done to himself will be just enough to remind him not to do it. Just a little bit of scar tissue. Just a little bit. That's healthy. But when you constantly just keep on... I have students that came to me that try to do other people's way of trading and such, and they've spent like $8,000, $10,000 in all of these funded account companies, hopping from one to the next and just paying all these things, and never one time got to a point where they could be in a position to be funded. So what's the point of doing this then? You should have just took that money and put it in a live account. Because you basically did the same thing. If you're not going to follow the rules, just flush it away anyway. But see, you're tricked. You're thinking, it's only $100. I can take this trade and over leverage it, because what happens? What happens if it works? I'm only really risking $99. That's what you're thinking, right? Because that's exactly what he was saying. And you are hooked like crack. I might not win, but I could. It's like the lottery. Everybody's gonna be out there playing these lottery games, like $400 million for the what do you call it? I don't know, one of those big games. It's supposed to be $400 million. Everybody talking about today. I was going into 7-Eleven, and the lady comes out and she goes, "Don't worry, I got the winning ticket right here." I'm like, okay, I didn't ask. I'm going in there to get milk. See you later. The mindset is, you know, the chances of you winning that is next to zero. In so many degrees, you're not winning. Let's put it that way. But people still pay to play that. Because the idea is, yeah, the odds are so far against me, but it only cost me $1. Now let's take a step back. Nobody's getting rich when that $1 being spent. And these funded companies aren't getting rich by your measly little $99. But they are getting rich with the masses that keep doing that same thing, just like the lottery administration. It's in their advantage to give you the freedom and rope to hang yourself. But they didn't kick the chair out from underneath you, so they're not the bad guy. They laid a single round of ammunition on a table in front of you. They laid an empty handgun on the table in front of you. They made this Russian roulette available for you to play, but you decided to pick the bullet up. You placed it in the chamber. You spun it and put it to your head. Whose fault is it when you pull the trigger? What consequence and result after you pushing that trade, doing that thing that you did? Who's going to have the responsibility when that trigger's pulled? Not them. Their hands are clean. They're getting paid. And they don't care if you go away, because there's going to be someone else that's going to jump in their spot, your spot, everyone else's spot that says, I'm tapped out, I can't afford to pay anymore. That same, I might not win, and there's a lot of things saying I can't likely succeed doing this, but if I win, I can get through the step 1 faster. Like that's somehow going to change your level of discipline, personal responsibility. And now you're going to suddenly follow the rules? You won't. Because now you're going to say, well, listen, I just took 10 contracts, and I made $1,500 on 3 handles. What seemed like seconds. It only took me seconds to do that. Let me just go in there with my live stage 2 funded account. I can just do that every day. That's not the model. That's not the model. You're going to make every excuse to do the wrong things. Like a married man that caught the eye of another woman that he knows he should not talk to. He knows where she's at. He's making excuses. Honey, we need bread. No, I got bread today. All right, I'm going to go get some soda. What do you need soda for? I don't know, I'm thirsty. You're doing anything you can to get out of the house to go find yourself in the position to be in that step 2 funded position where you can over leverage and play Russian roulette with a hoochie mama. That's human nature. That's a character flaw. You're inviting chaos. You're asking for it. In this case, you're buying it. You're paying for it. And while they may make available all these things, if you don't do the right thing by having less leverage, don't give them the opportunity to see you fail so quickly and easily. Because they know the majority of you are going to over leverage. They know you want to get to the part that makes money. And they have a 90% likelihood that you are never getting there. And even if you did, and you get lucky, maybe one payout, oh, great. Your greed's going to tap you there and say, okay, I need to make more. Or I need to go quicker this time. All they have to do is sit back and let circumstances be what they are. Recklessness and chaos shows up. And for a period of time, for those that are getting lucky with it, ego Ego's going to be that friend that leads you to ruin. I'm always going to be able to make money now. Look at me. We are. And unfortunately, that kind of mindset leads to ruin. So don't invite it. Don't make it about a spectacle. Don't make it about over-the-top types of results or Olympic-sized feats or speed at which you get to stage 2. Take your time. Relax. Just relax. One day like today, anybody that uses what I'm teaching could get funded to stage 2 in a day like today with one contract. That's not impossible. One contract I could have done today. But you're looking at a move like today, and you're thinking, if I had 5 contracts here, and 5 contracts here, and 5 contracts there, yeah, you could have. It could have been like that for you. But do you have that experience yet? Probably not. So don't have your expectations so high and lofty where it's easy for you to fall and not feel like you can do it. In other words, don't set yourself up for more than just a temporary failure, because traders and trading is a lifetime of failure. How you deal with that? I ask that question on my interviews now. You know, how do my students that are funded and consistently making money, how do they deal with losing? Everybody does something different. Some people take it harder than others. Other people say, oh, you know, it sucks, but I ain't worried about it. I'm going to do the next trade because that trade didn't lose enough for me to feel like I've been beaten. Now contrast that with, I'm not going to stick to a model. I'm going to over leverage. I'm going to keep pushing because it only costs me $99 to reset. Aren't they saying the same thing? No. The trader that has a model is taking very small calculated risks that sometimes does not pan out. And that small loss is insignificant in the grand scheme of their entire career as a trader, as a speculator. And they're not worried about trying to avoid the losing trade because the model and the rules say, do this, and this is what should happen. If it doesn't, you're not abandoning that model because it didn't pan out for you, that transaction. And the loss was insignificant. It will not have such a weight on your psyche. So that way when you look at price action, you won't be thinking, this is generally, in other times, this is a trade I will be taking. But I'm going to wait for confirmation now because I have to make sure. Why? Why would you feel that? Because you've taken a loss that's larger than you were comfortable with. If you're trading with a quote-unquote $150,000 account and you're using 5 handle stop loss on one contract, you're risking what?
Bro's doing this on his
$250.
phone.
That's not 3,000. That's a very, very small, insignificant amount. So it gives you wiggle room. How many 5 handles form over the course of a week? Lots of them. Some form at specific times of the day that are very predictable. You don't trade 30 minutes before midnight New York local time because you're done playing Xbox Live with your buddies. And now let's go see if I can do something in the market. You don't do that. You have business hours. You stick to them. Bank of America is not open 24 hours. Okay, they have banking hours. You don't want to create this atmosphere in your trading where you feel like you have to always know what the next move is going to be. Narrative is understanding what the algorithm is going to do in price next. It is not an every second of the day narrative. The narrative is when we go into New York session during this period, I'm looking for the algorithm to do a specific thing, behave a certain way, present an opportunity like the fair value gap, drawing to liquidity. That's a simple rule-based idea. It's time-based. Why would you want to complicate that? There's nothing easier than that. There really is nothing easier. Oh, you can just follow a moving average crossover. Okay. What time frame? What's your entry mechanism? Where's your stop? What are you reaching for? What's the target? See, I can play devil's advocate just like anybody else, and I can say something, and when I've said it, you have the luxury of coming back and saying, but what about this, and what about this, and what about this? So I cancel all that by sitting in front of you with a live 1-minute candlestick chart, and I tell you what's going to happen next. So all those other strawman arguments can't be used. We're all looking at that hard right edge. And you don't want to take these perfect opportunities to do all the wrong things, waste time, waste money, build up frustration, and now fear. Fear. When you first wanted to learn how to trade, were you scared? No. I mean, obviously you said, well, you know, sometimes you might lose money, but then you look into it further and see what's happening because you're convinced if you look hard enough, you would find a way to never lose money. Let me remind you that doesn't exist. But when you first started and you wanted to get into this industry and find out more about it, you felt like a child on Christmas Eve, like you couldn't wait to get more involved. And that's what it's like when students come to my YouTube channel. They get their hands in something like Model 2022, which is a hit the ground running approach. If you're brand new, if you've never gone through any of my videos, 2022 model, there's 40 videos. That's where you start because that right there will give you a 100% right now. Go into the charts and see it every day. You don't need to know anything about price action. Everything that's discussed in that 40 video series will give you enough to know that if that doesn't convince you that there's worth and value in what I'm teaching, if you don't see it there, don't waste any more time with me. Just move along, find somebody else, and I wish you good luck with it. I promise you, if you don't see the value in those 40 videos that communicates precision, time-based ideas, things that repeat, a logic of knowing where to get in, where's your stop loss, where do you take partials, where's your target, done. That's a complete 100%. Everything you're looking for when you buy a course, everything you're looking for when you join a mentorship, everything you're looking for if you're trying to buy a book that's supposed to touch that trade. That's everything. It's a one-stop, one-shop. There it is. And if you like that and you want to dig deeper, then go into the core content and all the other lessons I have on the YouTube channel. At whatever pace and whatever direction you want to go. Because you'll have something that you're going into the charts, backtesting and looking and studying, whether it be in old moves or real time. Because that 2022 model is perfect. It's pure. It's easy. It may not be easy for you when you're brand new because there's a lot of things you have to understand. But spend time with it and you'll see right away that that is the easiest thing there is in trading. And it checks all the boxes that you would want for precision and algorithmic theory. There's nothing to guess about. It's logic, It's not flawed. It's proven. It makes money, and other people are making fortunes with it now. Yeah, I said fortunes. 6 figures, in my opinion, that's a small fortune. We're not talking about Mickey Mouse, dollar menu wages. That's a significant amount of money. It's a respectable measure of money. We're not talking about $1,000 and $500 here and there, which is still in some people's eyes valuable. If you made an extra $500 a month, and that's all you could do, would you say, I don't want that $500? No, you wouldn't. So it's all about perspective. What you're looking for, you'll find it here. I'm not going to sugarcoat anything for you. I'm not going to pull any punches. I'm going to tell you it's going to be hard. It's going to take longer than you want it to. And you're going to learn in a setting that makes you no money. That's exactly how you want it. Doctors don't go out there and ask people to come off the street and say, I'm studying for my exam tomorrow. Can I cut open your abdomen and remove your spleen? No, that's not happening. They use cadavers, okay? So think, do you want a surgeon that has never did any kind of cutting at all on a body to put their scalpel into you? Nobody's going to feel safe with that. So what experience do they have if you're the patient one that they're going to now treat? You're patient one. You don't know this. They're not saying, hey, nice to meet you. Congratulations, you're my first patient. I've never done surgery before. So what time do you want to come in? No, I'm out of here. See you later. So but why would you expect anything different when you're treating? Like you're that surgeon in treating. You're that doctor. I'll have to remind myself about, people asking why I'm not calling everybody doctor. I'll just say it now, so I don't say it now. I'll probably forget about it. My 9th grade year in high school, I had a civics teacher. One of the coolest cats there was, man. He kind of reminded me of Martin Luther King, and he just was this real smooth, man. Just real smooth. Came in, smooth, like he just scooted around. Scooted through the hallways, scooted across the classroom. Sharp as a tack. Really witty. And every time we would come into his classroom, every gentleman that came in and greeted him, he'd turn to him, small little smirk, doctor. And that was one of the coolest things I saw. And it made me feel cool when he would say it to me, and I could see the expression on the other students, their face would, it would cause them to smile. And it resonated with me. It stuck. In my 9th grade year, and now when I greet my friends or associates that that work with me, that's why I do it. To me, it's one of those cool things that I saw someone that I looked up to, and it just resonated with me. Much like you all try to talk and sound like me because I've made an impression on you. Well, that's where I came from. So when I'm doing my interviews, I'm greeting them. That's where that came from. So anyway, you're going through this process of learning how to trade. You're that surgeon in development. Smooth, man, just real smooth. Came in, smooth, like he just scooted around. Scooted through the hallways, scooted across the classroom. Sharp as a tack. Really witty. And every time we would come into his classroom, every gentleman that came in and greeted him, he'd turn to him, small little smirk, doctor. And that was one of the coolest things I saw. And it made me feel cool when he would say it to me, and I could see the expression on the other students, their face would, it would cause them to smile. And it resonated with me. It stuck. In my 9th grade year, and now when I greet my friends or associates that that work with me, that's why I do it. To me, it's one of those cool things that I saw someone that I looked up to, and it just resonated with me. Much like you all try to talk and sound like me because I've made an impression on you. So that's where I came from. So when I'm doing my interviews, I'm greeting them. That's where that came from. So anyway, you're going through this process of learning how to trade. You're that surgeon in development. So learning how to do this in a condition where you can't cause any harm. The surgeon that's learning how to do a surgical procedure on a cadaver, are they afraid that they're going to put the cadaver in the ground or kill them? No. That body is dead. It's been submitted to the Department of Science, and they're making that body available to do whatever they want to do with it. That's a cadaver. So a surgeon works with a once living person, but no longer is living. It's expired. That body is lifeless, and they get to have all of the advantages of cutting on a real body, feeling the restrictions of certain types of tissues, even with a scalpel, how to navigate inside of a cavity of an abdomen or a rib cage or a brain without the risk of loss. In trading, you want to learn how to what? Navigate the marketplace and engage without having loss. Do you think the surgeon's first procedure on a living person, do you think they're calm, cool, and collected? No, but they're going to lean on all the experience they gathered with cutting on those cadavers. When they were doing their case studies in the textbooks, writing out their ideas, that's not the same. That's just you writing out your model. But then you go to that cadaver, which is a demo account or paper trading account. You're doing the theory in a setting that can't hurt you or anyone else. That's proper learning. You're doing it without any concern, psychologically or emotionally, about the outcome. You're focusing on doing what the theory suggests you're supposed to. What's the process? What's the protocol? You're following that. That's your model. Don't let anybody make fun of you and make you feel like, oh, I'm learning how to do this with a demo account. It doesn't matter. Your results are going to be yours. If your results are going to be unbelievably successful, there's going to be a lot of people that say that it ain't real. And are you going to care? Are you going to care when you start making real money if people don't believe that how you learned was a good or bad way? You don't care. I have more students that aren't on social media because they're off doing their own thing now. Look at the young people that are making themselves available to you in these interviews. They don't have to do those interviews. They're interviewed by these companies. I don't own those companies. We don't have some kind of conspiracy together. I mean, you heard me talk really in a very low-key, anti-approach to funded accounts, if you heard what I was saying earlier. Like, I'm not a fan of them, even though I have profitable students that use them. I'm not a fan of them. That's why I will never do business with any of them. I will never have an affiliation with them. I will never say, go and join this funded account and blah, 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 and here's a 20% off type thing. I don't want affiliations. And when I tell you something, it's my honest opinion. No one has influenced me. They're not paying for my opinion. I will never have my opinion paid for. And I represent no broker whatsoever. Period. I'm not introducing a broker. Anything I tell you is my opinion. And I'm not monetized with that opinion. And that's why, unfortunately, my opinion isn't liked by a lot of other folks because it infringes on the comfort they hold with their affiliations. And I don't have a problem with them having their affiliations. Listen, get your money, man, but don't hold me to that same level of, well, he must be in partnership with somebody else. I'm not. So I'm out here sharing my opinion. It doesn't mean my opinion's right. This is my opinion. You may take something I say and get a hair up your backside and say, well, I'm going to use this as a reason to prove ICT wrong. And then you create something entirely new. And that would be amazing. So it's not meant for me to be a reason for you not to do funded accounts. I'm just saying that everything that I felt most people would encounter, my son's experiencing that. So in many ways, I feel vindicated. And the only way I think he and anyone else will do well doing it is by never really over leveraging. Never really doing that. Trade with a very small number of contracts, even if they give you the freedom to do more. Because you're really not trading with $150,000. You're trading $3,000. And $3,000 is undercapitalized, grossly undercapitalized. And anyone that says other than that is full of grade A cow patties. That's just the way it is, folks. Drawdown is a real part of trading. And when you burn your funded account, and you burn your funded accounts, you'll feel like, well, I'm going to go back in, and I'm going to be a little bit more selective, but I'm not going to change anything I've done. If over-leveraging is part of it, you're going to fail. Just give it enough time, you're going to fail. If you listen to my students and other people that do this, they build up these, well, they have like a deck of cards at their disposal. Multiple funded accounts. Multiple ones. Because it allows them to have a card to play when one's roasted. When it's burned, they can't use that one anymore. They have something else they can do. How about just have one account? Don't over-leverage it. Don't demand more than it's going to pay out. Make enough money to go with a company like AMP, where it offers you real trading, very, very low margins. My son had experience with that company, and hey, it is what it is. You know, no broker's perfect. No broker's going to be perfect. You're going to complain about all of them, but that's the world, man. You're not going to have a silver lining that's seen by everyone in agreement. You're going to have your favorite things about a broker, and you're going to have these pet peeves that you don't like about them. Everybody's going to have that because they're the middleman. But I don't think your best interest is suited for only viewing funded accounts. And I just don't believe that that segment of our industry is going to be allowed to stay around in the capacity that we have it right now. And that's the reason why they're doing what they can to get what they can from whoever's willing to give it to them. Because the time's probably limited for them to do what they're doing. So if you're going to do that, do it the right way. Don't over leverage it. Make what you need to cover costs, and build up enough money to go with a real broker that allows you to trade with real funds in a real account that allows you to have more drawdown, like in the real world, greater than $3,000. Because $3,000 is nothing, literally nothing. I spent $3,000 this morning just shopping for things that would never really cost that much 5 years ago. But if I want to stock up on stuff, that's what it costs now. The $3,000 in trading, you were really undercapitalized, and you're paying monthly dues to be undercapitalized, and you can't trade past 4 o'clock. When, hey, sometimes earnings season, you'll see moves that are after hours, right? You'll never be able to capture any of that. Now, is that a deciding factor that should keep you from doing funded accounts? Probably not. But it's something that a real brokerage account doesn't place a limit on. So, just food for thought. I could have him in a stage 2 funded account like that. No problem at all. Easy peasy, lemon squeezy. But he's going through something. And I have to let the natural order of things push him to a point where he has to identify what he's doing isn't going to work. And today I proved that what I teach and what I do does in fact work. Even in a condition where you think that what you're doing will eventually materialize in the outcome you want, you probably don't have the resources, the patience, or the money to keep resetting until that thing unfolds like you hope it will. And he won't ever run out of money. What he'll run out of is trust in what he's doing is going to lead to the result that he's looking for. And I'm trying to let the natural process that everybody goes through this. Some more than others, some much harder than others, some are more stubborn. I was very stubborn. I wanted, I've said many times they name streets after me one way. And I wanted to have it my way. My way. And if I'm teaching, you can't come here and expect me to teach you a different way than I'm willing to teach. It isn't your way mentorship, it's my way. And if you don't like how I teach it, nothing's keeping you here. You can learn how to trade from somebody else. There's other stuff out there that works. Just have good money management. I promise you'll probably still make a little bit of money, but you're still gonna lose. And whatever you use to find profits, and whatever religious faith you want to place behind whatever it is you're doing, you're welcome to have at it. Be rich. Good luck with it. It isn't going to change what I view about the marketplace and my convictions about what should be done correctly and what things shouldn't be done incorrectly. All these things, I've developed this opinion over 3 decades, and I'm not going to listen to somebody who just started up and they somehow know more about how I should behave or view the marketplace in their infancy as a couple months in observing price action, or coming from another school of thought and having never really spent a full year in it. But they're not going to change or impact my opinion about what it is I hold about the markets. And it won't be like that for you either. It's going to be like, okay, your opinion, I understand, I respect it, but I'm not going to do anything with it. So there it is. And I'm hoping that what I'm saying here tonight doesn't discourage, because like I said, I'm going to be talking to students that have done funded accounts next week, and you've already seen these individuals that I've already interviewed, and they're right from my private mentorship. Like, they paid me to learn what they do and have made money with it. I have more of them next week. If you have learned the 2022 model and you did not join my private mentorship, which no one can, it's not happening anymore, so just relax. We're mentoring just like this now. If you made money and you've been profitable with your trading, whether it be with your own funds or through funded account companies, and you want to be interviewed, I'd love to sit down with you. But it just seems like that I'm only getting my private mentorship students, which unfortunately that gives the impression that nobody can be profitable like with the 2022 model, which that's not true. It's just that model really clicked for a lot of my students that were trying to find their own model. And mentorship, when they paid me, I was giving them everything that I was willing to share as components. But I also taught them how to take each component to build their own model. And for the students that were in that mentorship, I had a very loose overview discussed in a commentary about that very model. I was leading people to just do that very thing, like create that model. So I suggested the pieces, but I didn't put it out there, step by step by step by step. And if anybody's out there telling you that they're going to sell you access to videos where I've done that, they're lying to you, because I didn't do that. And my mentorship students will tell you right now on Twitter that I did not do that. I called the market, just like you see me do daily, every single day. I did live streams the first year, doing what you see me doing in these live streams, and the same type of attitude that I got from some students you still see in the community here. You didn't take any trades. You talked for 2 hours, you didn't take any trades. I called all the logic as to why the market should behave a certain way. That's important. You need to have all that. Otherwise, the entries won't make any sense. You won't know what to reach for. You won't know how to find your model. So opinions, they're always going to be held by other people. My opinion of funded accounts and those companies that offer them, I am personally not a fan of them. If my son turns it around and makes money, I'm still not a fan of it. I'm of the opinion that, yes, most of you that use them probably don't have the funds to go and do that. I understand that. But if you're going to do it the right way, so that way you can get something out of it. Build up enough scratch money, whatever, and go with a real brokerage firm. So that way you know it's your money, you have control, you're not limited to some unrealistic small little drawdown. Like it always goes up the same amount, no matter how much you make. It's not increasing. It's always that small little, ultra small stop loss. That's how I look at it. I look at that as a very, very, very tight stop loss. And look at how I teach. I don't teach you to do that, do I? I don't teach you to hurry up and ram that stop loss underneath the profitable position, being fearful that it's going to stop you out, because it's probably going to stop you out, and you won't be able to see what the appreciation and equity going higher. It stops you out too quickly because you're strangling the trade. That's what these funded account companies do to you.
Whew, it's been 8 hours, bro. It's been a good stream so far. I don't know how much longer I'm gonna go. I might take like a little break. Also, still just backtesting the 2023 mentorship. Let's just take a real quick break. It's just turn 1, and I want to look at live price action and just. This is kind of what I was talking about earlier, though. And I'll journal this for sure. But basically, when I would like what I've noticed over the charts is whenever we have a run like this overnight, where it's just kind of like you see the slope to that thing, it's like pretty high slope on that. That's the only way I can describe it. The liquidity that we refer to throughout the day is the liquidity that we make within the session. It made sense today. We have this low and high. We're stuck within this doing range, so we come down. We take this low. We don't really come down to a specific level here. 4 hour. We don't really have anything there. Well, 4 hour fair value gap there. So we have 4 hour fair value gap. Then we change our state delivery. Where's the 15-minute order block? All the way up here. Yeah, I don't really like this. This is price action. You know, it's just price action that doesn't really. I don't really want to take it, but you see 950 to 1010. We have a displacement leg lower. Do that little SMT. We reframe that handle move there. You might have got stopped out, or you would have got stopped out. You could have taken a loss, maybe partials along the way. And then this move at 1050 to 1110, 950 macro, we've had AM consolidation so far. So we've been within this doing range. The 1050 macro then allows for expansion. And yeah, we end up seeing expansion here in the 1050 macro, and then here we consolidate. Now we're back in that new day opening gap. I really don't expect much for the rest of the day. Maybe a power hour or 3 p.m. If you look at the hourly chart on ES, it's just, in my opinion, isn't appealing. It isn't probable. It isn't. Nothing pops out at me, so therefore I'm not going to look to engage in a day like today. There's always going to be better days in the market, and today just isn't one of them. Today is just not a day that there should be something that's forced. Today's the type of day to enjoy, or sit here and backtest for 30 hours straight. That's probably the best to do.
And anybody that wants to say otherwise, you're welcome to your opinion, but you're never going to convince me that it's anything but that. They're placing so many odds in your favor of failing, but they market it like this is the greatest advantage in the world. Look at this and look at that. Look what we do. We provide this. You don't have the money? Use our money. Really? That small, ultra small trailing stop loss, maximum trailing loss, or something. I don't know the term, something like that. That is equivalent to a jammed up, super tight stop loss in a trend that you're long in, and it's going right below the last couple ticks. That's what you're doing in these funded accounts. And when you add more contracts, you're all but guaranteeing you're getting stopped out. And you're going to break a rule, and you got to pay a reset. It's like getting margin called, and you're paying for it, but looking at it like it's a good thing. I'm sorry if that ruffles feathers. I'm not trying to do that. And I know some people are probably already preparing some kind of tweet response, this, that, and other thing. It's my opinion. I've watched what's going on in my son's account. I've seen he's broken every rule, and 2 of those rules don't make any damn sense to me. You can't trade after 4 o'clock. Dude, what are you talking about? Like, if you have a runner and you leave a small portion on, and it's an earnings season, sometimes you have these really sudden boom, like it'll happen, but you'll never have that ever. If they tell you got to close the trade at 4 o'clock or whatever it is, I don't know, it's just like 4 o'clock. He said he did something past 4 o'clock, and it was a rule that he said it was broken, and he made money hypothetically because it went to his target, but he failed. Now tell me in the real world how that makes any sense. That's like the same people out there that argue and say partial profits are stupid. Partial profits are 100% profitable. Like, that doesn't make any sense. Trading is hard enough already for new traders. It's already hard enough. Don't compound the difficulty by forcing your results to perform in a ultra trailed stop loss, which is what these companies are placing you underneath. They're charging you money to trade in such a difficult parameter if you're trying to trade with leverage. The way you beat it is don't use the leverage. That's the only way you're going to beat it. 1 contract. 2 at most, but 1 contract. Your losses won't be so large that you can't fix them easily with 1 contract, and they can't screw you out of that account that you're working towards getting funded or a funded account. Because that same account, trailed stop loss thing, my understanding, I might be wrong, so I'm open to being corrected here, but it seems like that never goes away. So you're always going to have this limit of unrealistic drawdown that completely ends your career. When in a real account with your own money, you're not going to stop because you have 5% loss. Let's just be real. It's not happening. You're going to trade. So it's already making things that are difficult next to impossible for an impulsive gambler that doesn't have an idea how to trade or use a model. And that's why there's such a high rate of failure in that. That's why you don't see a lot of other people out there being interviewed. Yeah, you're seeing people interviewed, you're seeing people make money, but the ones that are really killing it, they're disciplined. They're not guessing, they're not gambling, they're doing things with a model, and they're not trying to blow up the account overnight. They're working towards building up incrementally and outpacing the cost that they know they're going to have to pay, and they're building it up. And I promise you, they probably have a game plan that they're doing that to take it from there and placing it with a real brokerage firm, which is what they should do. In my opinion, that's what you should do. Because tomorrow's not promised to no one. And that segment of our industry, that could change overnight. They could say, you know what, this isn't happening anymore, and they have to comply. Think about that. That would be upsetting now. What if your frame of trading right now is only on the basis of funded accounts? And what would happen if they said, this is no longer allowed? You got to stop doing it. Shut down all operations. How would that impact your trading and your ability to make money? Something to think about. So, I really wanted to sit down and have like a kumbaya moment, sharing a personal thing that you would never know about. Like, I didn't need to tell you about my son. You don't need to know about that. It's not your damn business. But it's useful as a mentor because I'm showing you that if you do all the wrong things, no matter who you are, what pedigree you come from, you're still not going to see the results you want. And I'm showing you a side of me that, I'll probably regret it months from now because it'll be taken out of context, and it'll probably be taken out of context tonight or tomorrow, who cares? But I'm sharing my frustration. Like, I don't know how to fix it. Like, I can't do anything to change what's not being done or what's being done. It feels I feel powerless, in a way where I know my words and my instructions and my encouragement are not going to be helpful. He's going to do whatever he wants to do.
Bring out the belt. Bring out the belt.
I'm trying to come to terms with that because, they're all growing into their own adult. They're growing into their own person, and while they may have certain characteristics of me, they're all individual, and they all have their own unique qualities that make them who they are. Even though they're my kids, they all have certain quirky little things that make them who they are. And frankly, I was hoping I was going to have a lot more influence, at least in this setting. And I'm discovering that my strength in what I thought was going to be my influential advantage to be able to guide them and avoid all the things that I know is problematic and prevent them from having all these problems and struggles and be easier for them to learn it. It's much like some of you, they just want to do it their way. And I guess in a lot of ways I can appreciate it because that's how I was. But I don't know. I mean, you sit down, you say, now watch this. This is the thing we're following. This is the list of procedures and protocols. And winning, winning, winning. Now you do it. Okay. Throw the piece of paper out the window. Let's start with a new language. Let's trade a different time of the day. Let's use a different market. What is going on here? What just happened? Like, who are you? Are you my boy? What's wrong with you? Who are you? You're an imposter. So, human nature, it's a real thing, and dad doesn't fix it. ICT isn't enough to overcome it. They have to break themselves. They have to burn it down enough times and then sit there with the ashes, and come to grips with they were the ones that did it to themselves. They are the ones that are going to have to come out of all that, wash themselves of it. And that's what I had to do. I wasn't spared any of that. And you think that you're going to spare yourself that uncomfortable period. Because you're going to do it to yourself. It's some time in the future, you're going to eventually trade in a setting that is taking on real monetary risk and or trading in the pseudo environment of a funded account, trying to get funded, where you have something to lose. What are you losing? The money you're putting into it. You got to pay that monthly due, and you got to pay that reset every time you need to utilize it. But have you considered, for those of you that have done multiple resets over and over and over again, is there a line that you're not going to cross? I won't reset 7 times. I won't do it a 10th time. For some of you, I won't do it after 3 times. 3 times, I'm done. I'm just going to have to do something else. What is that limit for you? Have you considered what it is? Because if you don't have the right mindset and a predetermined exit strategy, like when do you call it quits and say, okay, this endeavor, this approach to doing it isn't meeting what I need, and I can't hit that objective. So therefore, I'm going to stop all funding to it, that's what an entrepreneur does. They say, I'm not going to waste any more money in this. This is not yielding a return for me. So I'm not going to water it because it's not going to produce any more fruit. So what is it for you that does that? Where's the limit that you won't cross? There's a number. There's an amount of money that you're willing to invest in it. And when you hit that number, I don't care what video I make or what I do in a live stream or somebody else does or whatever they're selling, you ain't never doing it again. Do you ever think about that? It should be something you have in mind, because you shouldn't treat it like a cable TV bill or your Netflix bill. I'm just going to keep making the payment. It'll happen for me one day. I'll eventually get what I need. Maybe. But in reality, some of you, it won't ever happen. And that's what makes me unpleasant as a mentor, because I'm not going to sugarcoat it. Some of you want to do this, but you don't want to work for it. Some of you want to do this, but you don't want to pay for live data. Some of you want to do this, but you don't want to invest the time into it. Some of you want to make money and replace your job, but you don't want to defer the things that's going to require your time to study. Your girl money on the weekend, that can't happen. All the weekend and over the week, going out to the clubs and hang out with this one, hang out with that one, and you should be studying. Some of you ain't going to work for it. Some of you are going to say you're going to do it. You're going to talk a good game online with me, with other people in the community, and you won't do anything with it. You can't pretend. You can't go through the process of pretending that you're going to do it. Pretending and going through the motions on social media. I'm a trader. I'm a student. I'm a funded trader. I'm this and I'm that. Are you really working? Are you really studying? Are you really trying to prune all the bad things out of you that are character flaws? Keeping up with who is doing what on social media. Who's making money today and how much? Who had the biggest drawdown? Who? Pretend. You can't go through the process of pretending that you're going to do it. Pretending and going through the motions on social media. I'm a trader. I'm a student. I'm a funded trader. I'm this and I'm that. Are you really working? Are you really studying? Are you really trying to prune all the bad things out of you that are character flaws? Keeping up with who is doing what on social media. Who's making money today and how much? Who had the biggest drawdown? Who lost today? These are all things that really don't do anything to make you better. And nobody's keeping score with that stuff. Nobody cares. Keep all the drama out of it. Whatever it is you're doing in trading, keep it out. That's why I literally cannot wait. I said this to my older students the other day. I said, I can't wait till November. I'm so drained by social media. I have channels that I follow on YouTube that are not even traded, like they're not trading channels. They're just, well, a lot of different things. I like certain car channels, homesteading YouTube channels. I listen to some Christian channels that follow things in the news and try to make a parallel to scriptures and things like that. And it's funny to see how wrong they are. But to read the comment section of everyone else's videos, you could be doing something very wholesome, charge no money, kindness, polite, never even use a curse word, never talk bad about anybody else. And invariably, you'll see dozens of miserable people in the comment section attacking either the person that's doing the video, saying they should have did this and why ain't you doing that, or they're attacking other people in the comment section that are just being part of the community. And that's what I'm seeing more of. I'm seeing it in public. Like I said this morning, we were out shopping, and the rudeness of people is off the charts now. Madness. And I've always been an introvert. I might not sound like an introvert because I'm talking about something I love, which is markets and such. But if you were to meet me in the public setting, you would never identify me as an inner circle trader. You would never say, that's that guy. Because I'm reserved. I'm quiet. I'm not trying to draw attention to myself. And I see how people are becoming much more toxic. And I want to be my old reclusive self in November. I'm looking forward to that. Because the world's getting uglier and people are getting very, very agitated over the smallest things, which means that we're at a boiling point. And I don't want to talk about the topics the last time I did, since I mentioned a specific person. They killed the stream and the space was ended. I didn't end it, it was ended. And I've contemplated talking about using my SoundCloud account for those types of discussions. I don't want to put them on here because they've already, and 2 times they've done this. And the last time I was on Twitter, the reason why I left Twitter years ago is because I was telling everybody in 2019 what we all went through with COVID and the whole world coming to a screeching halt and all that stuff. I didn't say COVID, but I said, we got something coming bad. It's going to be worse than 9/11 and every country's going to feel it and yada, yada, yada. I was putting up posts and they weren't letting those posts go through. So that was the first time I ever felt like anything I say is being watched by people that can say, you're not allowed to say that. And I was the first one I've ever been censored. Like, I've never felt censorship before. So I felt uncomfortable with that. I was like, I'm not drawing any more attention to myself with this. I said, I'm done. Nobody drove me off of Twitter. Nobody ever drove me off of Twitter, and nobody drove me off now, and they won't. I'm scheduling my departure. It's the 2nd Friday of November of this year. That's when I'm leaving Twitter. My tweets will stay up. I've deleted no tweets. I don't edit. I don't have a payment with Twitter where I can edit my tweets. Everything is exactly how I made them. Typos, incorrect spelling, the whole thing. But I don't want to talk about some of the topics that I've done before in the past on this medium, because I know it's under new management, but I'm not convinced new management is anything different. It's just another mask. So if I lose this account because they say I say too much, or I talk about certain things, one of the concerns I felt uncomfortable when I learned that certain members of the United Nations were actually listening to me on the Twitter feed, and I'm just a guy who talks about the markets. I'm not part of any kind of leadership like that, and why they would be wanting to listen to me and why they were in my 3-hour-long Twitter spaces. Like, it would be one thing to say, okay, why is there a lot of people listening to this space? But they're in there the whole time. So that was a little unnerving. And then when I'm talking about things that are not real popular, and then I'm talking about certain subject matters, and then my Twitter space gets terminated, I feel like I'm back in that same spot again. So I'm not going to talk about those things here. I can talk about that kind of stuff on my SoundCloud, and it's not monetized, so it's not like me saying, come over here so I can make money. I'm not making money off of this. I want to do these things. I want to talk. I want to give you my opinion, number one. That's first and foremost. That's all it is. But I also kind of want to guide you through the growth and the growing pains that you're going to go through doing what it is that we do, learning something that's really incredibly difficult. And you have to submit to them a lot of time, a lot more time than you want to put through initially. And it's a medium with SoundCloud. If they were to shut that down, I don't care. I don't care. But I have a voice here on Twitter that I want to keep until the end of the year in November. That medium I want to keep. So that way everything I said is archived here. It's public. Everybody can see what I called. Everyone can see what I was looking for real time. You can't hide it. I haven't done anything. Nothing's been changed. And nothing has been hidden from you. There wasn't a plan A, plan B. It's all here. The last time I left Twitter, I told everybody a week in advance. I said, I'm going to be removing my Twitter account. If you want any of my tweets, you have until Saturday to copy them. I didn't just pull the plug. I let everybody know this is the way it is. When I shut down my mentorship, I said, you have this many months to collect what you want because it's done. I didn't pull the plug like that. I'm telling you when I'm done teaching. It's the 2nd Friday in November of 2023. I'm telling you when I'm stopping. So everything's always been this way. I've always done these things, but I don't feel comfortable talking about some of the things I felt I would be able to do because it was already mentioned on Twitter. And I don't view myself as someone that would be worth messing with. I'm just a simple guy. I got a very, very good skill set that I'm trying to share, and I'm trying to do it for free, and I'm trying to do it in a way where I can find it fun. It provides me a sense of satisfaction to stop people that have ripped off my content and try to market it as their own, because now they can see that I'm the person that put that out there, and you all have the advantage of being with me for free and see if it's worth your time and investment in it. If it's not, no harm, no foul. Good luck with whatever you do. But I don't want to put myself in a situation where I'm just going to say it. Some dude on Twitter posted something about a candidate in 2016, and he's facing 10 years in prison for something that wasn't really all that big of a deal. In my opinion, it wasn't. And we can't make a joke about anything. Like, you can't joke about certain things. You can't say certain things. And to me, we don't have freedom of speech if that's the case. Certain speeches aren't free. You're free to say whatever you want, but be prepared to accept the consequences of your free speech. So I'm not going to use this medium to talk about the things that in the past I used this medium for. So without losing my voice to you, about prompting you real time and being like I'm a friend, I can send you a text message. Like when I post a tweet and you're following me on Twitter, it's the same as if I had your personal phone number and I sent you a message, hey, look at the ES at this minute, this fire you got. It's like we're best friends. We've known each other for a long time and I have your number and I'm sending you a text message. I like that access to you because it's immediate, it's real time. And if I talk about something here, so you really want me to ramp that part of what I do up. I don't want to do that because we're getting to Orwellian levels. And I don't want to be a voice that they say, yeah, this guy needs to be tapped and he needs to be told he can't do that anymore in a really convincing way. Like, I don't need to do that. Like, I already see what's coming. And all those things that other people are enduring I have other things I got to do. I don't want to be bothered with all that crap. I've already mentioned this stuff, in 2016. I already laid all this stuff out and said what we're dealing with right now. It's happening. All that stuff I talked about, and everyone made fun of me, and I didn't fully understand why I was saying what I was saying at the time, but it all came to pass, and is coming to pass right now. Like, we're seeing all this stuff, and I don't have an answer for it. Like, I know some of you have this real high and lofty opinion of me. I don't know. Like, I have no idea where to put the money I have, because if things go where I think it's going, it's going to affect everybody, and I don't believe crypto is the answer. I know some of you are probably you're typing out the tweet, put it in Bitcoin, put it in Ethereum, put it in XRP, and XRP is going to be whatever. But buy gold, buy silver, buy this, buy that. My trust is not in money. I don't have all the answers. The things I know about, I talk about. If I don't know something, I'm not going to talk about it. I'm not going to pretend that I do, which makes me a boring kind of guy, and that's fine. I don't claim to know everything, but the things I talk about, I feel like I'm an authority figure on it. Otherwise, I'm not going to talk about it. That's why I sound arrogant, because it's really from a position and stance of authority. I know what I'm talking about. I show you, I prove it to you. You see the logic coming to pass in the charts. It's real time, right to the second, right to the minute, right then and there. But all this stuff that's coming down the pike, we're not getting into too many details. I mean, if you just take a look, it's coming. They're not hiding it now. Your sense of freedom is about to be redefined. And I'm not sure that direction is something that we want to be going in. There's a lot of tension in the world. There's a lot of anger building up, and that's going to increase. And social media presents the perfect opportunity for two opinions to come together, and where it would have been fun in the past to rib another guy or girl and make fun of them and everybody laugh about it. It's what it is, trolling. I was a troll. I don't want to do that now, because the consequences that they're placing on simple little gags, simple little things that to rib another person or make fun of someone else or make light of something, they've turned it into a federal offense now. No, you're talking about they did this and they did that. I know the argument's going to be in relation to the guy who's facing federal charges for 10 years in prison for election interference. Listen, I understand the new generation are really not educated. They're not. And my oldest is my daughter, and I can tell you college was the worst investment ever, because her whole outlook, she likes socialism, and that's a point of contention for her and I. And we are not allowed to have certain conversations like that because my wife won't allow it. But she is indoctrinated in socialism. She's been taught that in college. That's what they're breeding that mindset. And it's unfortunate, because I'm not a subscriber to that. I don't think that's the way any country should go. And every country that's done it falls. If you look at the order of events and how things transpired in Venezuela on a timeline basis, we're near the end of it. Venezuela used to be amazingly rich. It was one of the richest countries in the world. Everything was wonderful for it. And then they put their sights on it. And everything that's going on right now in America, we're following that script. Just like I said in 2016, we would be Venezuela 2.0. And it's repeating itself. Is it because I was clairvoyant? No. These game plans are the same rule book they work with all the time. It's the same stuff, but when they don't teach history anymore, you don't recognize it. You can't even buy the history books I have anymore. I'm going to get a list of names and people. What books do you have? Can you make PDFs of the book? No, I'm not going to do that. But I'm growing more and more uncomfortable. Whereas back then, and even in the early stages of all the stuff and the Corona stuff, I was bold. I would say whatever I felt like saying, and I didn't care. I don't have that same carefree feel about it anymore. I'm not paranoid. I'm just not trying to draw more attention to myself than it's necessary. I have something I want to accomplish this year. And once I'm done, I want us to have the full, complete experience together. That way I haven't been hindered and nothing interrupted it. So I'm trying to stay in my lane. The break that I had during Passover was me basically trying to stay focused on what it is I'm trying to accomplish this year. Get through it, teach you all what I want to teach, and present a way of study. That way people can come to that channel and that list of tweets that show things in the past and learn from it. And it don't cost you anything. And if you don't like it after spending some time with it, that's fine. But it didn't cost you any form of sacrifice. You can test it, you can see it, you can see it's been proven, and other people have proven it works. So it's not a flawed logic. It's not a contrived logic. And I have a lot more people coming with the receipts that it works. And they're doing it with markets I don't ever really touch or talk about, which is, again, proof of transferred understanding and knowledge. So, anyway, there's a lot of things I want to talk about, but I can't do it on this medium. So, like I said, I'm probably going to start doing once a week some kind of I guess it would be considered my tinfoil hat discussions. And it's a wonderful segregation from the trading discussions. So that way, if it's not your cup of tea, you have no business going over to my SoundCloud account. But if you like that type of thing, and you just want to hear what I'm looking at, what I'm pondering, what I've found interesting, noteworthy, or where my concern is, that's what I'll do over there. There's no ads, there's no monetization of it. And if for whatever reason that account gets taken down, which I can't even imagine why it would, but if it did, I don't care. It doesn't affect this platform here, which is what I'm utilizing throughout the rest of the year. So that's the business there. And I will, I guess, catch up with you on Monday.
So when it comes to breakaway gaps, I get a lot of questions asking how do I know which fair value gap to trade, which ones to stay open, and I promise you guys it's really simple. It's just based on momentum and order flow. So when it comes to breakaway gaps, if we have an instance like this where we have two fair value gaps here, first it's important to note that breakaway gaps are useless if you don't have a bias in place already. If you don't have a clear draw on liquidity, if you don't have a directional bias, breakaway gaps
Why
are
is it so
of no
gray?
use. Okay, why is that? You want to see breakaway gaps form in the direction of your bias. So here we are in the last hour of trading, 3:15 to 3:45, and we've traded into, if you watched yesterday's market review, up here we had a 15-minute fair value gap. Okay, and we traded up into that, and then you see it starting to reverse. So let's say I draw on liquidity our lunch lows. Okay, that's this low down here. We need that. That's important. If we're looking at breakaway gaps, we need to know where our drawn liquidity is. We have to have a bias because that's narrative. So if we're looking for a sell side down here to be taken during the final hour of trading, and we're looking for a setup between 3:15 and 3:45, all right, we get to our charts here, and we see this move here. Your chart is going to look like this. Now, how do you know which fair value gap to trade? Do I trade up here? Some people like to trade bearish order blocks. They may be waiting for price to come all the way back to this up close candle. Okay. Where do you get your entry? Well, this fair value gap here is a breakaway gap. You don't want to see this traded to. Okay, if we ever have two fair value gaps like this, and this is like a large momentum candle, leaving this kind of slow rally higher, really kind of lethargic, and we get some big displacement here, you want to see that stay open. This lower one here is where you always want to get your entry, but your stop loss has to be above consequent encroachment of this higher fair value gap, because price can trade up into this fair value gap, yes, but it can wick into this upper one here and then sell off. So whenever I have an instance like this, my entries always look like this. Entering at the low of the fair value gap, I'll always measure consequent encroachment, and my stop loss is going just above that. Okay, so you don't have to put your stop loss above this swing high. That's way too much risk. Above consequent encroachment, and then boom, you're tagged in. The idea is we're looking for sell side to be hit down here. This higher fair value gap is a breakaway gap, a lot of momentum, a lot of speed. Okay, for bearish, it doesn't make sense to leave this price action here with a lot of speed, a lot of force. It doesn't make sense for us to explode away from it and then come all the way back and touch this last up close candle. That's not signs of heavy order flow. Okay, we're bearish, we want to see sell side. We want heavy, fast order flow targeting sell side. So we don't want to see an optimal trade entry here. I know a lot of people trade that. Okay, I don't want to see price come back up to a 79% retracement level, because if we do that, we're trading past consequent encroachment of the breakaway gap, not what we want to see. Okay, but let's get some more examples here. All right here. I also get questions. People ask, okay, what if it trades down into the breakaway gap? Are you not using that as an entry? Is that not a trade? Most times, I don't enter breakaway gaps because I'm using that as insight. So let's say right here, this fair value gap, breakaway gap. Why is it breakaway gap? Let's assume I don't have any daily levels pulled up, but just using what we have on the chart, we've taken out sell side. This is lunch lows, all right? And let's say, just for the sake of this teaching point, we're trading down into like an hourly fair value gap down here. All right, taking out sell side, trading into a higher time frame PD array. What do we have here? Whoops. Oh my gosh, I can't work trading view today. This is a consolidation. Fair value gap, breakaway gap. Just because it's a fair value gap doesn't make it a breakaway gap. It's because it's in the direction of our bias. We have clean highs up here that formed during lunch, way too smooth. We've taken out sell side, trading to a higher time frame PD array, and we're getting a fair value gap in the direction of our bias, which is short-term bullish. This is a breakaway gap. Ideally, I want to see this stay open. Me personally, I don't like trading this one here. This is the fair value gap I like to get my entry in. The one that rests just above a breakaway gap, that's the one I like to see send us higher. But I'm using this as insight. So price can trade down. That's not a problem. Okay. I'm watching consequent encroachment and below. So as this candle is trading live, it's trading down, I'm not buying that because I want to see if we leave this fair value gap open. Now, if we leave this fair value gap open and we start to run away, that's my confirmation. Okay, that's my market structure shift. That's my verification, confluence, whatever you want to call it. If we leave this fair value gap open and start to move away, my mindset is I'm looking for the next buying opportunity to go long, trusting that we're not trading back down here. So fair value gap here, I'll probably use that as my entry. Same rules apply. Buy the high of this fair value gap just to make sure you get into the trade, and you don't have to put your stop loss underneath this low all the way down here. Put it just below consequent encroachment here. Is that not a good entry? Maybe a drawdown, what is that, maybe 8 handles or so? Target your equal highs up here. Buy side. Alright, so if we know we've been consolidating, okay, our bias is already bullish, we're already expecting higher prices, dollar's looking heavy, and we're consolidating like this, consolidating, and boom, we get this massive candle. I want you to think of it like this. Imagine whenever you see a large candle like this, explosive candle outside of a consolidation, and is in line with your bias. Okay, our bias was bullish. We're getting this large momentum candle, large fair value gap in the direction of our bias. I want you to see that as like a train. Okay, think of a fast train going 300 miles an hour. It's a rocket, right? It's blasting through super fast. Trains aren't going to go 200 miles an hour this way, stop on a dime, and come all the way back down here. That's not what we want to see. Okay, trains are fast, one way, like it's in a hurry. Trains are going, it's moving. Okay, so I'm seeing breakaway gaps as like a train. Consolidating, we're bouncing around, not doing anything. Train comes through, boom, blast through it. I want to see majority of this fair value gap, if not all of this fair value gap, stay open. Okay, that's my mindset behind a breakaway gap. So we get a massive, fast train here, blasting all the way through. We drop down. This is fine. That's a buying opportunity. I want consequent encroachment. Okay, midpoint of this fair value gap and below. I want to see that stay open. That shows me signs that order flow is bullish. Clearing out the sell side, trading inside that daily fair value gap. We rally. Fair value gap here. It's a breakaway gap. Why is that a breakaway gap? What were we doing before we get this fair value gap? First of all, our bias is bullish. We already established that. We're consolidating. Consolidating, boring price action, not doing anything. Boom, massive train blasting through. Fair value gap, hello. I want to see that stay open. Okay, this train is leaving. We don't want to see a train blast through here and then turn around and come back, fill it in. That's not bullish. That's not what we want to see. This train is gone. It needs to get out of here. We're leaving this area. We're leaving the consolidation. I don't want to see it come back. I want to see that stay open. That's what we get. This fair value gap here, that's permissible. We can trade into that. This one here needs to stay open, needs to stay unfilled. This one right here, the upper one, I'm interested in watching how price trades here. All right, breakaway gap, buying opportunity, trading to the daily.
Low key. I really don't see anything that I like today. If anything, I would say maybe possible 3 p.m. 3 p.m. we could get something. This doesn't, in my opinion, look like generated liquidity. I mean, it's kind of the same thing. Low resistance liquidity, in my opinion, it doesn't look like this. This is not low resistance liquidity. Like same thing with this. Like this, in my opinion, isn't low resistance liquidity. Like the slope is too high. It's too fast. Like especially this. I wouldn't see that as maybe a low resistance. Low resistance, I would like to see something more like this, more steady, gradual, and then it's broken, which is just a trend line break and retest for sure. Let's look at some examples of some low resistance liquidity runs right here. You see how it's like a little more gradual here, and then we end up breaking trend line, and then we end up retesting that trend line, and I made $80,000 on that trend line retest. I mean, even support. I mean, even like those types of concepts, they're a little gradual there. Okay. I think I'm just gonna like take a break. I'm gonna take a break for like 10 minutes. I'll come back because I think a break's definitely valid. I don't know. I might like. I kind of want to go for a run right now, and then come back later. But then I don't want to like start my stream and then or end my stream and then start it again. So I'm gonna take like a little chill break here, and then I'll come back. We'll come back later within like 10 minutes. I'll leave the charts up so that we can have some live data in this stream. Oh, 130 just opened, so we have a 130 opening price. Yeah, so I'll be back in a minute, and we'll see what the charts do, and then, or I only like to annotate my charts at the end of the day. That's when I like to annotate my charts, like after the market closes, so then I get like a full insight on what actually happened, the type of profile that we had and stuff like that. So I guess we'll see. So I'll be back in a minute. We back. Looking like a 3-minute break.
Try to have a relaxing weekend. Don't do too much studying. Have a little bit of a downtime and reset yourself. Until talk to you next time. Be safe. Well, it is a great and sunny day here in Florida. ICT coming in as a Floridian this morning. I'm 50 years old. I don't look at everyone else and say I want to do that because they're doing it. I look at my history, the human in me, the things I've always wrestled with, and I know that every single time I've hurt myself, it's because I wanted to do something that was not asked of me. In times where I should have done nothing, and I knew better. And now not because I'm opening this out, I opened this up in the beginning of this Twitter space. I said that I'm not obligated to you. As a reminder, I'm not saying it to be condescending, but I'm not obligated to you, and I'm telling you that because I'm reminding myself. I'm reminding myself that I don't have to do anything for you, but I love doing it. And there's a line that gets blurred sometimes because I listen to people that you all tell me not to listen to, but I want to help them because they don't believe either what I'm doing or what I teach, despite people making fortunes with it and crediting their success to the things they learn from me, which I'm so thankful for. And I've converted a lot of people to this school of thought, not because they like me, because there's people out there that are making money using my stuff, but they don't want to say my name. They don't want to give any kind of credit to it. And they'd like to say it's always been there, but they're still using my vernacular, my terminology, and my concepts. That's the thing that gets under my skin. That's what, frankly, pisses me off and causes me to be the abrasive ICT. And I don't like being that person. I don't like being a drag for the students who are here to try to learn. But I'm sharing this because I want you to know that you're going to go through this. Not me, ICT. I'm not like you. I don't have to listen. Start making money. Start making money and start noticing people out there doing things that are nonsensical. Like things that make no sense at all. And they're in there saying that they're this and they're that. They can do this and they can do that. When you know better and you're quietly doing it on your own and you're doing things that they would never believe, then you'll think differently. But what happens when you get in that condition where maybe you didn't foresee the difficulty in price and now you're in it and you just know that trade that trade that you're in just simply will not move, but it hasn't gone to your stop loss, but it won't move. But you know it's giving you every indication it's not going to go for you. Not no matter what you want in terms of profits. It's probably going to go for your stop. But what do you do in that situation? Well, I can tell you as a young man, I was many times praying, God, please let this trade not stop me. Please let this trade go to my profit. And I promise I will stop trading this day. But I wasn't saying about overnight trading pullbacks. I didn't say anything about that. So technically, I was being honest to some degree. But as soon as we cross midnight, I'm going to go right back down again if he gets me out of it. And many times that prayer went unanswered. And I got stopped out. And I knew I should have got out of the trade. But I wouldn't take it off. What's the problem with that? And I hope you can appreciate me using my own examples and not talking about things hypothetically where you can feel victimized because you know you've gone through this yourself. But I want you to reflect on how you've endured this and what you were doing, what you were thinking, what you were dismissing as, no. That's just me not being patient for the trade. That's not me following model. So I got to stick to my plan, my trading plan, and push my edge. See, when I was in those environments and in those trades, I didn't want to get out because I was afraid if I got out, I'd be wrong. And you probably hear YouTubers or see people type it out in their Discord rooms, their Telegram channels. I can't think of anything else off the top of my head, whatever medium they would use, but or maybe a Twitter space like this. And you hear them or read them say, I know as soon as I get out of this, it's going to move. When they say those things, they're channeling ignorance. They're manifesting it. They're basically showing you their cards that they don't know what they're doing. Because if they did know what they were doing, it wouldn't matter if they got out and it moved. When I was a younger man and I fell victim to this, I was afraid to get out of the trades, even though I knew they were against me. The probabilities have shifted. Are you aware of it while you're in trade? That's what I'm teaching you. Those lessons can't be taught through a paragraph or a tweet with 130 characters or less. I can't do one single video and say, here it is. It's condensed in a nice little neat, easy ICT, real fast 5-minute trainer. The easiest way to do it, never have to worry about it again. That's the new flavor right now. You're not going to get it that way. You can't get it that way. It's something that has to be endured. Certain lessons have to be walked, and you have to feel it. You have to have that uncertainty. You have to know what it feels like to be in that environment and how you react in it. Some of you won't have these instances where you feel powerless to get out of it. You'll think, okay, this isn't working. I'm going to just kill the trade. That right there, that is excellence. I wish I had that when I was younger. I didn't. I did not have that. I had no one telling me like I'm telling you right now listening. That's what you want to do. Believe me when I tell you that is the answer, that's the solution, that's the thing you're supposed to do. And you're also indifferent to what happens after you get out. It's a bad relationship. What makes people go through all the turmoil after they break up with someone? When it's a bad relationship and you break up, the person or persons spend all that time afterwards when you're no longer together and you're thinking, what could have been if we stayed together? If he just would have stayed in our bed and not ventured out and did something else. If she would just understand me, you're doing something that isn't going to result in anything except for misery. So why do the same thing in trading? That's what you're doing. You're recognizing, whether you realize it or not, even if you're new, you just know something's wrong. You are, but you won't admit it. Just like I couldn't admit it. My grandfather recently passed away at the time when I started. So I get all of this pressure placed on me as a young man, lost my father figure, lost my first wife, and I had something to prove. So I had all the most amazing disadvantages going into this. Plus, I hated where I was in life. So I know what it's like to feel pressure to change the way you are and where you are and how you live. I know. I know what it's like to grow up and not have that family element supporting you. I know. Even being successful like I am now. For decades, my mother didn't care. At some point, it doesn't matter. I don't worry about my mom. I don't worry about my father who's in prison I'll never be able to spend time with. They weren't supposed to have children. I wasn't supposed to be here. I was supposed to be aborted. But because a threat by my biological father, my mother gave birth to me and never raised me. You can have all of your disadvantages, all the excuses of why you think you won't be able to do this, and it's all a lie. That's something for you to reach for because you don't follow the rules. Because when I don't follow the rules, I fail. I can fail just like the newest person that starts in this. If I don't submit myself to the rules and engage when I'm supposed to engage and not engage when I'm not supposed to engage, because I know me. This is why you cannot learn this in a workshop over a week. You can't learn this in a month. You can't learn it in 120 days. You can't learn it in 6 months. You can't learn it in 1 year. But at 1 year, you get a good foundation, and that's when real learning starts. And I have never, one time, sugarcoated that. And so many people out there are trying to take what I've taught and still actively teaching. And you're trying to condense it down to something to market it to people. The real fast approach, I swear to God almighty, if there was an easier, faster way, I would do it. It would come right out of my lips and it would be done. I wasted time in the beginning doing that. Just like those environments where if you get in a market environment where it's not conducive for a low resistance liquidity, where it just runs so easy, like a hot knife through butter just slices right through it, no problem at all, going right to where you knew it was going to go, and doing it faster than you were hoping to do it. That's what I'm teaching you to look for. But they're not every day like that. Those exist sporadically, in the right times and the right settings. And because of all the uncertainty that we're seeing in the world right now, believe me, folks, we are witnessing the largest upheaval in the financial markets and financial systems, plural, globally. There's never been what we're about to endure. So you have to be careful. And I'm trying to be much more careful because of that. But if you get yourself in a situation, you may not believe in God, but somehow those 3 letters will come out of your mouth. Oh, God. Oh, Jesus. It's funny. I've listened to Muslims doing live streams, and they'll utter his name, which is interesting. What are you doing? You're looking outside yourself, and you're resisting. You're resisting the very thing that your conscience is telling you to do. Get the hell out of that trade. You know what's coming. Regret, loss, pain. But you want to arm wrestle it. You don't want to seem weak. I'm going down. They're going to carry me out on my shield. Well done. You blow your account. Maybe not on that trade. But the 6 or 7 trades after that one, that's what's coming. Why? Because you arm wrestled in an environment that you can't win. See, my tools in the right setting are flawless. That's why I can beat to the tick. But have you noticed that it's not every single day that it's like that? Now, wait. Stop right there. Your motto is every week, every day, and it won't stop. You're right. But the market you're trading, that particular market, won't be every week, every day. This is always occurring every day and every week, somewhere. Oh, well, you're out there. Of course, I didn't say anything other than that. That's how it's always been. When I was teaching Forex and primarily focused on Forex, I had 2 pairs. Euro might not go to the tick, but cable did. And vice versa. And there were some times where both those 2 pairs that I worked with my group, sometimes Aussie Dollar did something perfect. You can't have an everyday day trading expectation of precision. You can't. You're just starting, okay? You can't do that. In the beginning, you have so many obstacles in front of you, you have no idea the difficulty in this. And it starts between your ears. And it remains between your ears. That 7-pound universe, that gray matter that we call our brain, has a wonderful, wonderful capability of telling you things at the wrong time. And sometimes it tells you exactly what you need to hear, and then you ignore it. So if you're in market environments where by rules, the ones I've taught you and I've even told you, and it breaks my heart to see these people tweeting to me, I lost this much money. I'm not trading. Why did you do it? You know your own reasons, and that's the thing that everybody has to learn about themselves. But you want to pretend that you're not going to be that person. You're not going to be one of those statistics that have all these other flaws inside them. Some of you may have mental illnesses that are beyond the scope of mine, and you have to wrestle harder and do things much more. Well, the word escapes me. It'll be harder for you, but you won't know that. You won't know that until you go through it. And buying courses and watching my videos or watching anybody else's videos or using this application they created or following signals from somebody else, that will not make you exempt. No one's exempt from this. People fail because they don't incorporate their own flesh, because that's what's going to do you in. How many people do you know that educate, pretend to be a mentor, will sit out here and tell you their own flaws? They'll never do that. Because number one, that will put a damper on sales. It'll make you question, oh, maybe this is the person I need to learn from. I would counsel you, anyone in any industry, any kind of endeavor whatsoever, if they're willing to show you where their weaknesses are and if they can identify them and then navigate with them, that's someone you can learn from. I'm telling you, I wish to God I had someone like I'm trying to be for you when I was coming up. There was no one. I had 4 VCR tapes with Larry Williams and one Secrets of Short-Term Trading. He did like I don't know if he was a keynote speaker. As a matter of fact, exactly what it was. He was a keynote speaker for some event. And those are the tapes I had. I had a course by Don Fishback, 90% Options Trading, which is trash. Don, if you listen, I don't mean to be disrespectful, but it really was garbage. And the books that I wasted money on. And I said many times, why do I keep them? Because they have sentimental value. Not because there's any value between the covers of those books. But I spent a lot of money. I worked hard to make the money to buy those books over the years, collecting them. And I just can't bring it to throw them away. and they're not valuable enough to give anybody. Say, here, I don't want to have this anymore. Here, you learn from this. This is all trash. It's all garbage. You want to hear how to do something? Let the story start with, here's what not to do. And if you want to find out real quick, if you're ready or someone else is ready to learn, if their attention span will not permit them to listen to someone tell you or others, this is what you want to avoid. You, that person listening that feels that way, you are the waste of time. You are. Because the point I've gotten to from the beginning of this discussion, it's going to be far more harder than you think it's ever going to be. And I've told everyone that's ever listened to me in the last 3 years, this is extremely hard. 30 years I've been doing this. These candlesticks are not new to me. But the way the markets are behaving is, and anybody that's been trading for a longer period than 2 years, 3 years, some of you just now started. You have no idea what you're walking into and how much harder it is. Anyone that has been trading for a long period of time, and I'm saying 5 years or more, I think it's a fair amount of time. You're not new. And you have seen market environments that are not like this. You know what I'm talking about. You know exactly what I'm referring to. And it's not some kind of cryptic message. This market is behaving differently. It is going to be hard for you to learn in this environment. But learning in this environment will make you so much better. So much better than it was for me. And we had, well, by definition, in terms of what we've seen in recent years in terms of volatility, it was like a snail's crawl. If you got 3 handles in the day, and you did well. That was a good move in the morning. 3 handles. 3 handles. People's stop losses are bigger than that now. But that's the way it was back then. But the volatility you have today needs to be respected. Because it can do wild stuff in a short span of time. And you'll be in that situation praying to a God you never believed in. But now, you're reaching for him now. And your heavens will be like brass. And sometimes it'll be for people that are believers in the same faith that I have. And you just want to get out of that situation. Oh God, please let this trade pan out for me. Please just let me not get stopped out on this one. I won't trade the rest of the week if I just get this one. Lying. And that prayer gets unanswered. Because your heavens are like brass. What happens then? You look down, and a new idea comes to mind. You're going to plant the seed again in that risk. But now, the ground's like iron. You can't turn the soil over. You can't cultivate it. You can't put a new trade on because why? Fear. Paralysis. What do you do in that situation? See, as a new trader, a new developing student, you don't know what to do. So what are you going to be left to do? Impulsive decisions. Well, let me just go in here and figure it out. I'll find my way through it. Yeah. Right on through. Another blown account. Well done. How many times do you have to do that before you learn a lesson? I watch people tweeting to others and me talking about doing that same thing in environments that I've openly said we're in low probability. They're trying to pyramid. They're trying to trade with larger leverage. They're trying to trade every session, every day. Trying to trade every macro. ICT said between this time, there's something I'm getting them doing. Okay. You have to have some kind of premise to be acting on. You don't know what to expect. You're new. You have no idea what you're doing. Trying to engage in an environment that I'm not willing to touch myself. So what is that teaching you about yourself? You're reckless. You're reckless and you're impulsive. Are you willing to observe that and identify it? If that's who you are that's listening to me. Are you willing to let yourself identify that weakness in you? Trust me, it's okay to identify weaknesses. You want to do that in the comfort of a demo. That's why I teach like this, folks. You have no idea who you are. You're going to get in these markets and think you're... Well, I was going to say John Wayne, but that really dates me now, doesn't it? You think you're John Wick, there you go. You think you're John Wick, you're going to go out there and get your ass licked. And you're frustrated. Oh, I'll just reset my account. It's only $100 or so. And I'm going to do the same thing I just did because all I did was enter too early or too late. Or I put my stop loss in the wrong position. Wrong. You're trading in an environment that's not conducive for high probability, but you can't see that. You can't recognize that because you're not listening when the guy that's talking to you is telling you these things in advance. He's taking a road trip. 1,100 miles away. Not touching the market, but you're in there blowing your phone to account. Where's the logic in that? But ICT, you're not the only one who can find profitable trades. You're right. But why are you trying to push with my concept in an environment I'm not trying to touch? I've already said it. If you win, it's coincidence. And that's painful for some of you to hear that. It's like, there's no way. It's not coincidence. It's skill. I'm a monster. I'm being made into a monster. Like you said, I'll go be a monster. Yeah, okay. But you don't want to wreak havoc on your own account. Like Godzilla stomping around in Tokyo, destroying everything. That's your equity curve. You just totally dismantled it. In a short span of time, in the last 2 weeks, how much damage have you done? Not me, not your broker, not the method or the concepts. How much damage did you do? Uh-oh. That's a roll call for responsibility. Nobody wants to take initiative and stand up and say, yeah, I did it. But the ones that are ready to do that, they're ready to learn. I ignored it too. I tried to find some kind of external reasons why I was failing as a young man. And I promise you, knowing what I know now looking back, it was always me. There was no other contributing factor. It was me. And when you come to grips with that, and you accept it, it's liberating. Because then and only then can you start fixing the issues. But you have to be able to identify them and stop ignoring them or pretending they're not there. That's the reason why you're not finding success. You're arm wrestling things that need to be dealt with in you, the person. Every single one of my failed students are failures because they themselves won't listen. Because if what I teach is flawed logic, it wouldn't be the fastest thing spreading all over the industry in terms of trading. People would not be passing all these funded accounts, getting on leaderboards, taking wild withdrawals from their efforts doing it. They would all be failing, wouldn't they? What are they doing differently? They're taking it serious. They're treating it like a business. They're not in there gambling. They're not in there thinking, well, all I gotta do is reset the account. All I gotta do is pay the $100 to reset. If I get an affiliate program, I can do it and not have to pay for resets. Think. Where are you in all of that? You have to find yourself, and I can't do it for you. No mentor can. No teacher can do that. You have to allow yourself the time to find out who you are, how you're going to derail yourself. And you will. And you'll know right when it's about to happen. And that's why you're supposed to journal. And for the folks that don't want to journal, oh, I ain't got time for journaling. got money to make, man. You got time to journal. I ain't writing books. I guarantee you these people don't make money. Not consistently. I promise you they don't make money. Every high-tech position in the world, all of them, keep data on their performance, KPIs. Every industry. Every food producer, every commodity manufacturer or producer, any kind of company, they all have performance stats. That means they're doing what? They're journaling. Now, for the folks that don't want to journal in their trades and their development, doesn't that make you feel stupid? Like you're going to walk through this, no real effort, it's just going to fall in your lap. It's going to be easy. Why do that? I got to spend time writing in the journals. I can't make money on those old moves anyway. Why do you want to do that? You're going to continuously work the rest of your life. And you're going to be even more miserable because you won't find success in this. And you won't be successful in your job. And you'll be miserable. The rest of your life, you've been relegated to the shared desk with Carl. Imagine that. The last thing you see before retirement is him smiling saying, I told you never get out of here. There's going to be times when your heavens are like grass and the ground you stand on is going to be like iron. What do? You take a road trip, baby. You take a road trip, you go on a fishing trip, you go into your hobbies that are outside the marketplace. Pour your time and attention into your family or your friends, apart from the market. It's good. It's good to do it. It allows you to recalibrate and reset your mindset. And you give yourself permission to forgive yourself for not doing it sooner. I'm not obligated to do any of this for you. Just like you're not obligated to trade every day. Have you ever given yourself permission? I'm giving it to you right now. You have my permission as your mentor to not trade every day. In fact, that should be a goal for you. When you make money and you're new, stop. Let the week close and profit. That's a skill set. It's teaching patience. It's teaching enough to be content with enough. But ICT, it was only $1,100. I could have made, right, but did you make $1,100 with your job after taxes? No. So why are you going to risk it? You're not skilled yet. You're finding yourself. You have to continuously instill this cheerleading mindset as you're growing up in who you are eventually going to be as a trader. You have to cheerlead yourself. You have to do that through journaling. Spend time looking at when you got it right. You're going to need those times. You're going to doubt yourself. You're going to doubt your future performance. If you try to trade every single day and you start going in the drawdown, here's another permission. You don't have to fix your drawdown right now. What? Yeah, you don't have to. Who says you had to do it right now? Who says you had to fix the drawdown and bring it completely back this week or this month? Who said that? You did. Or the people you hear others on social media crow on about, oh, this and that. Who's running your business? Them or you? Think. Because if you're letting other people on social media impact your decisions about when and how you're going to trade, you're not running your business.
Oh, that's fat.
If you're not running your business, who is? The people that don't care about it. And if they don't care about your business, believe me, they only care enough to see it fail.
It's
It would be
my
nothing more
business.
pleasurable for them to see you fail and go on social media and complain and belly ache. Oh, I did it to myself. And they feel great about themselves because they're failing in privacy. So when your heavens are like grass and you can't find your way out of a position you're in terms of profit, close trade. As soon as you recognize that you feel like you got to pray for the outcome of that trade to be different than what you think is already going to happen, because you know, you're looking at the charts, you see it. Something in the underpinnings of the marketplace have shifted. You recognized it, and now your conscience is telling you it's time to hit the exit ramp. Just don't take the exit in South Carolina. I did. You have to stop, remove yourself from the risk, and walk away from it. And it doesn't mean immediately look for another pair or another market to trade and try to plant yourself in risk again, because the ground you're standing on is now iron. You can't turn the soil over and place good money in terms of seed for risk and expect to get the results that you didn't make up in the first trade. Why? Why not do that? Because your mindset is now the story. Because you feel performance anxiety. You put on a trade, it didn't work for you. So now, as a young man, especially, I noticed the ladies that are students of mine, they generally don't have this characteristic in them. Like they're willing to accept they're wrong. They don't like when they lose money. That's the thing they don't like. Where men, they don't like losing, but they don't mind taking on big losses. They don't like the aspect of it being wrong. So there's this, we may be arguing semantics, and I guess some of you could present that as an argument. I don't see it that way. I see it as the men, they have this, they want to be right. Women's not so much. They don't care about being right. They don't want to lose money. Where men, they don't care about losing money. They could lose money as long as they end the day being right. They can go down a severe drawdown and come back. Yeah, look what I was able to do. I was down 38% in intraday. Took 16 trades, but the last two, I got it all back, baby. Woo-hoo, holla. And the ladies in my fold do not ever want to go through a major drawdown like that, and they don't care if they're wrong. So, where are you in that spectrum? Where are you in that mindset? Some of you don't know. You haven't been doing it long enough. And that's why it takes a lot longer to learn this than everybody else promotes it to be. You can be so successful, live the life of your dreams. It's Lambo lifestyle. But none of them are telling you the adversities you're going to go through. They're not going to tell you how to deal with it. What's permissible? What's realistic? 5 handles, not 200 to 1 or multiple setups. Everything I teach you is meant to meet the practical expectations of meeting ends.
Is this -4?
Meeting 1 bill a month. Whatever the lowest bill is, that's what you aim for first. But something happens. Something happens in your mind when you first start dealing with these charts and you're demoing, or you're rushing through that part by never doing the demoing, which is to teach you. You're learning who you are in the demo. That's why I can't stand these neophytes out there pretending to be mentors telling people, you can't learn how to trade with a demo. You got to put some money, you got to put some skin in the race. Okay, I've done that, and it fails miserably. And it gives you all of these anxiety-inducing things that you would never have had if you wouldn't have did that. I didn't know the mistakes I had in me and the capability of me screwing it up because I never risked real money before as a younger man. I jumped in way sooner than I should have. I literally did like 2-3 weeks of just back testing paper trades. That's it. And I did one walk forward, I think a week or maybe a week and a half at most, not even 2 weeks. And I convinced myself I was ready to put money into a live account. $2,600 on a Nations Bank, which doesn't exist anymore, Nations Bank credit card. Now tell me the sense in that. Zero. And it's no surprise. My first trade was impulsively in a market that I was never really interested in. Orange juice. It's too thin. It wasn't even seasonally, looking back at it, seasonally, it wasn't even in a position where it could do anything. And I traded in a vehicle I had no experience in, options. But I had to do it. I got the account open. It's been 2 days. I better take a trade. And overnight, 50% of that account gone. Not the account, but the options premium. I paid $1,500 for an orange juice option, which is extremely expensive. So I bought an overvalued option. I didn't know it. And overnight, lost $750 of that option premium. And then closed the account that day. Wonderful lesson. Perfect illustration of what not to do. I wish we had demos back then. We had to do everything on paper, write it down in a notebook. That's how we did it. Make our own charts. We had to draw the high, low, open, close tick on every single chart. If we traded it or monitored it, that's how we did it. You have no idea the advantages that you have today, but you won't use them. You're trying to rush through still. Don't learn how to trade with a demo account. Learn the broker with the demo, and then go in with real money, even if it's a little bit of money. That's someone that is absolutely not making money consistently. They don't know how to trade, and you should not be listening to them. And I don't care who they are, how many people follow them, how much they're liked right now. I don't care. And you hate me, I don't care. That's real. Because that's someone that doesn't even know what they're talking about. You have so many things going on in your mind that you're going to bring to this that are going to derail you, and you have to know what they are, and you cannot discover that without pain and loss or building in fear, anxiety-inducing concerns for your equity. With live money, you do that, you're going to be scared money. In the beginning, my second account that opened up, I was terrified. Yeah. I worked 2 jobs, pizza delivery, everything I could. Picked up cans, turned them in, and redeemed them for money. I did all that stuff, folks. I did all of that. Walked down streets picking up soda cans, beer cans, all that stuff. I did that just to get whatever I could scraped up. So don't talk to me about, you don't know what it's like ICT. You don't know what it's like. You don't know what I did. You don't know what I went through. But that second account, I was terrified. Terrified. I was afraid of every possible entry. And you're wondering, why the hell does ICT have all these concepts? Because I had to cope with it. I wanted to have an arsenal. My weakness was fear of knowing when to get in. Bro, let me tell you something. I got 81 ways to get into a trade. 81. And that's why these jokers on the internet will say, oh, he's got something, always explain why the market. You're damn right I do. I know it like the back of my hand. But I also know when it's likely to slap me around, I'm not playing. No, thank you. I've been there before. You haven't. You're too new. You don't even know what it looks like. But I'm sharing that experience with you. I'm allowing you to find yourself in a closed circuit environment where you are not incurring monetary risk. That's why I teach with a demo. That's why it's the best way to learn. That's where you need to learn in a laboratory experiment setting where you cannot lose money and build anxiety-inducing mindsets that's going to be a prevention to you finding success. How much plainer do I have to make it, folks? Stop listening to these kids pretending to be money millionaire mentors, okay? They literally just graduated school. They probably dropped out of college. They have no idea what they're talking about. The only money they got in their accounts is from whatever they sold. Whatever their affiliate programs are. They're multi-level marketing garbage. They're not trading. They cannot trade. They will not show you what the market's going to do. They cannot do it. So why the hell are you listening to their advice? Because you see them pretending with their pomp. Their rented cars. I own my cars. I own my home. There's no note on my cars. There's no note on my homes. And I show you where it's going to go, I execute on it, and I use the logic. And I'm telling you when it's not right for me. By example, I stopped. I walked away. Now think. Who do you want to learn from? Somebody that can walk the walk and talk the talk and press stop and know why and have no concerns for, oh, I may miss something. I don't have any fear of missing out. You never hear me say, whoa, why did that happen? Why did that slap in the ES just happen? No, I'm not surprised by that. But I can go into a week where I'm expecting certain things to happen and they don't manifest. Okay, I'm not surprised by that. I'm just not interested. See the difference there? That's experience. That's 30 years, baby, of doing the same stuff all the time, expecting the expected results at the end of it. But if it's going to show me signatures that are not supporting what I'm teaching you, that's not an invitation for you to find a new way of doing it. All these new guys and gals out there trying to reinvent the wheel. I've already gave you the wheel. You have to build a car on top of it. And some of you don't want a Lamborghini. Some of you are just okay with a pickup truck, a Volkswagen, a Jeep, or even, well, I won't go there. What's he going to say? What's he going to say? I see, please tell me what you're going to say. No, I'm not going to do that. But there's a learning curve to this that nobody really expects to exist until they step into it. And they don't like it. It's a reminder to them that everything worth doing requires a lot more effort than you thought it was going to take. There's no shortcut to this, folks. I am the shortcut. I promise you, even though it seems like it's long-winded all the time, this is the shortcut. You cannot make it simpler than this. You're waiting for the market to go up to run stops, or reprice to inefficiency. It's going to drop to run stops, or reprice to inefficiency, or it's going to go sideways. And guess what? When the market's going to go sideways, ICT is doing something else. Now imagine for a second. Imagine that you paid me money for the month of April. I would have to do something, right? I would have to perform. I would have to sit down and give you my opinion. Guess what? That doesn't have to happen anymore. I don't do that anymore. That's why I'm never charging ever for education. When I'm done in November, I'm done. I'm done. I have so much enjoyed the last 2 weeks of just simply saying, that's my life. That's what I want to get back to. I didn't ask you for your permission to do what I did. I don't need to ask for it. But I did what I had to do from a psychological point of view, where I'm reminding myself that I'm in control of me. And since 2016, I have not felt in control of my own life. I've allowed people all around the world to conduct my life for me, tell me when I had to be somewhere, what I had to do, answer emails. I can't even keep up with emails. It's too many of you. And it just feels so good for me as a man to be able to unplug. I needed it. Like, I needed it. It was so good to be out there with my kids and just having conversations with them. And I broke down. We were in a restaurant. And one of my sons said to me, Dad, I've never seen this with you before. And I said, what? He goes, like, you're sitting down, you're talking to us, and you're not even talking about the market, you're not talking about your students. It's just like you're talking to us. And I lost it. So as much as I love doing this with you all, I love doing that with them more. Can I be honest by saying that I sometimes feel guilty about that? And I shouldn't. They're my kids. But I have built this life all around trading since I was 20 years old. And I was not the best father. I was not the best husband. I've never done anything outside my relationship. And I've always provided for my kids, but I was not there. In the house with them, but I was not there. So it's not always about money that you need to learn lessons about. Because you can be wildly successful, be a pillar in the community of the industry that you're in, and be an utter failure as a father, a husband, a wife. And no amount of money, none of that can wipe it away. You have no idea how hard this industry is because you don't know how hard you're going to make it on yourself. That's the variable. And nobody ever writes that in their books. How about every one of them? They're never going to place that clarity on it because they have something else to sell later on. And the reality is, if you're wildly successful, never done anything outside my relationship, and I've always provided for my kids, but I was not there. In the house with them, but I was not there. So it's not always about money that you need to learn lessons about. Because you can be wildly successful, be a pillar in the community of the industry that you're in, and be an utter failure as a father, a husband, a wife, and no amount of money, none of that can wipe it away. You have no idea how hard this industry is because you don't know how hard you're going to make it on yourself. That's the variable, and nobody ever writes that in their books. How about every one of them? They're never going to place that clarity on it because they have something else to sell later on. And the reality is, if you were told this in the beginning, and you're not going to be willing to make the sacrifices, is really what it is. You have to sacrifice your wants because you call them needs. No, I need to do this ICT. You don't understand. No, I understand. But you need to understand. Just simply because you want it and you call it needing it, that's already a problem. Because when you say the word need is going to be, I need to take a trade. I need to get that drawdown back right now. I need to go and reset my account. I need to do this. You don't need to do anything except for learn. You need to listen to me. I'm not giving you bad advice. I'm not trying to prolong your success. I'm not trying to steer you away from something else that might be better, because if you can find it, go do it. If you find something better than I got, tell me about it. I'll look at it and I'll stop what I'm doing and do that. I swear to God, that's what I'll do. But I've already been down that road before, folks. I've already been down that road dozens of times before I left my 20s. And I'll be 51 in August. This dog is set in his ways, and I'm changing this industry. And you're all part of it. You're on the ride with me. We're blazing a trail together. And that's freaking awesome. That's awesome. We're laying down a legacy where people are literally doing things in a controlled manner, learning how to do this in a safe setting, and you're watching students walk out there in the real world and put it to task. And they're changing their lives with it, independent of whatever I think is going to be in the marketplace. That's awesome. Your success story is waiting, but you can't hurry it up. You can't usher it any faster than it's going to be. And the speed at which you receive it or get to it is unique to you, and be comfortable with that. The harder you push to make it sooner, you're just pushing it further down the line. I swear it's the way it is. You just got to enjoy the process, go through it, and one day you'll know you're ready. You won't feel impulsive about anything. You're comfortable. You'll be able to navigate. You'll know this is a market in a condition right now. You don't want to touch it. And you don't care who else is making money. Who cares? Well done. Good job that you made money. It doesn't mean I have to do anything. It doesn't mean I'm less of a trader. What? That's not what you see on social media, is it? I don't want you to think that way. I don't promote that idea. Your results are yours. I can't sleep in your bed and wrestle with falling asleep because the drawdown you've taken on. And I can't relish in the successes of the profits that you made in your trades because I didn't incur the risk. So why are you trying to do that with other people's results? You're minding their business. They're minding theirs. You mind yours. Some of you won't ever be in business because you're doing stupid stuff like that. You're trying to keep up with the Joneses. You're rushing too soon. And then when you find yourself in a situation that you know in your heart that you're rushing, you shouldn't be there risking real money or trying to get a funded account passed. You don't know what you're doing yet. Why even bother with that until you know exactly what you're doing? How you're going to mess yourself up. You have to learn who you are. the last time we talked, I was in Florida, and I said to you that Alexander Elder's book, Trading for a Living, the first portion of that book, in my opinion, that's the gem. He talks about alcoholism and the effects of it and the way it affects people, families, relationships, all that business. I've never been drunk in my life, but I've watched everybody in my family be under the influence of either drugs or alcohol.
Yo, what's good,
And
Ed?
you'd be surprised to see how some of them
Oh, I'm
were
chilling.
totally
I'm
different
chilling.
people when they were drunk.
I don't know when you typed that.
Absolutely.
I
You
haven't
would
been
never
checking
recognize
chat.
this.
I limited my
Totally nasty
chat.
drunks, like crazy violent drunk. And they would say, "Oh, it's the whiskey talking." No, that's not. That's not whiskey talking. Whiskey just numbed them enough to let them have no inhibitions. Without inhibitions, the real person manifests themselves. And that's what happens when you get with trading with live money. You're drunk. You're driving drunk right now with a live account with no experience. You're under the influence of what? Trying to make money. And nobody's there that can take the keys from you. So you have to know these things before you do it. Because you don't want to find out that you are a nasty, violent drunk that crashes when you get with live money. That's why you have to do this in demo. You're going to find your character flaws that causes those same individuals to go to alcohol to self-medicate. They know what's going on, but they won't share it with anybody to help get themselves through it. Failed relationship, midlife crisis, anxiety, generalized anxiety, I'm sure is a major contributing factor. But all those things and other things that the list is too long. You've been hurt, you've been scarred, a bad relationship, you broke up, you're lonely, whatever that is, leads them to alcohol or substance abuse. And trading is in that too. It is the same thing, folks. It's the same thing. I have never been drunk with alcohol. Now, I guess you can say I've been, high from CBD oil. It had THC in it, and I needed it for my back. It was very much appreciated. I haven't done it in 2 years or more now. But I can tell you this, if I have another episode where I was going through it like I did then, I would gladly do it. And I was opposed to anything marijuana. I don't smoke it. I've never smoked anything like that. But I'm not against it. I don't think you should be trading under the influence of it because I was really relaxed. But the point is, trading with live money, if you don't know yourself, you don't know your model, and you don't know the way the market is behaving, and you haven't seen at least 4 quarters or a full year of what seasonality looks like, you have no baseline. You have no idea. So that's equivalent to you flying into a city you've never been, heartbroken, angry because someone left you, you got fired, you got a cancer diagnosis, 6 months to live, and now you're in a hotel where there is a high-end bar right across the street. What are you going to do? You're going to go there and medicate yourself. But how are you going to conduct yourself after that? You don't know. So why would you do that with live money? You don't know what you're going to do to yourself. And you don't know the consequences that you're going to do to yourself as a result of whatever it is you do while you're drunk. Trading with live money, losing that, the pain that that's going to bring on because you weren't ready, and you're going to know that you weren't ready when you were ignoring that you knew beforehand. And that's going to present all kinds of scar tissue. That's going to promote you to do what? Make bad decisions. And now you have fear. When teaching my students to operate and learn about themselves in a demo, that's what a demo is there for. But they tell you, here, learn our platform, learn how to trade the patterns that you do with the demo. Well, you think you watched a video by me or someone else or read a book, because that's what I did. Well, I know what that looks like, 1, 2, 3 top. Oh yeah, it's a descending wedge and that's a head and shoulder. I'm ready. You're not, I wasn't. This is the way it is, folks. But the demo is there for you to discover who you are. What makes you tick? Where are you impulsive? See, that's what it takes to do this. And anybody that tells you otherwise is full of shit. And that's just the way it is. They have some kind of ulterior motive. They have something to sell you. They want to derail you. But I'm telling you, you can do this. But you're going to have to submit to a lot more time than you want to. But once you learn how to do it and you know what sets you off, what makes you feel impulsive, what are the triggering mechanisms in your personal life, in your thinking?
So buy
Are
side
you
gets
wrestling
taken
with
at
it?
9:30.
That makes you do
Come
certain
back
things
down.
that are not supportive for
Come
a
back up. Retrace
successful endeavor in
information.
trading, that you have to now find coping mechanisms. Are you a drunk? Are you a drug user? If you are, you need to tackle that because trading will not work with that. Are you in a toxic relationship? If it is that you're in a toxic relationship, you either fix the relationship.
Wow, then 50% consequence for that
And
Sibi.
if you've been, removed against your choice from a relationship because they left you, or you had to leave because it was a toxic relationship, you have to let that go and forgive them and forgive yourself and move on. Because if you're feeling all those things, those pressures and regrets, and what if thinking if we stayed together, or what if I would have left sooner, it would have been so much better, you got to stop. Because all those things are going to trigger you to want to feel better. And to feel better, you escape. That's what I did. I got in an RV and I escaped. The pressure of me wanting to do something I know my rules say I'm not going to be able to do. So I had to take myself away from it. I've never been drunk before, but I get drunk in these markets because I get a bloodlust. I know what I can do in here, but I also know that you're not going to, well, just yesterday. I recorded the trade. I told you where it was going to go for ES. Tired. I could not really focus. I was tired, really, really tired. When I was driving home, the yellow line was literally vanishing, and I had to keep blinking. And okay, I'm talking about the yellow line on the left side of the lane. So I was passing semi trucks to get around them. Average speed 76 miles an hour. Not safe, but I wanted to get home. Like I wanted to get home and bed down here, and I just lost my train of thought. That's what it just did, really. But before I mentioned what I said, I'm going to need you to help me out here. What was the thing I said right before? What was I saying? Once you tweeted to me, I know exactly where I was. Folks are leaving me out here hanging. No, I was saying right before driving home, I was tired, but yeah, I know that the trade that I did yesterday, that's what it was. Nobody really mentioned it here, but I just remember what I was talking about. I told you what the ES was going to do in tweets. I said I'd like to see the new day opening gap, which is the difference between where Friday's, well, not Friday, but where 5 p.m. closing price is, and then the restart at 6 p.m. Eastern time. That's new day opening gap. Friday, we didn't completely close that in, and we traded lower, and we traded down into the gap of a fair value gap on the 5-minute chart, which set the stage for a rally up into the new day opening gap, and then that buy side liquidity pool. And there's a volume imbalance on the weekly chart, and I think I mentioned in the live session or Twitter space I did in Florida. I know I said it audibly. I'm wondering now if I said it to my older students, but I did talk about the volume imbalance on the weekly chart. So for the sake of those individuals that don't know what I'm referring to, if you pull up the ES chart on TradingView, the symbol is ESM2023. Click it to time frame of weekly, and then you'll see on the weekly chart Monday, August 15th of 2022. It's a down close weekly candle, and then the next candle is down with Monday, August 22nd. Okay, there's a wick that doesn't come all the way back up to the previous week's low. So there's a little bit of a gap there. That's a real gap. That's a liquidity void. That's a real liquidity void. And the fact that those two bodies of those respective candles don't connect, you want to have that entire range highlighted on ES because that's where we're likely to go. And if you look at the fair value gap that's on the March 27th of 2023 on that same weekly chart, the only thing we did was we traded down into that. And then that's why you see it going higher. Now, I also stated that we're going into May, and during the month of May, going into June, traditionally that's a seasonal tendency for it to sell off and move lower. I'm thinking that we might pump up into the high on ES for January 30th, that high or that wick on the weekly chart, that consequent encroachment. We've gone through it 2 subsequent weeks after that on the upside. So because of that, I'm favoring more the January 30th high, and then the volume imbalance I just gave you on the weekly chart. So that range, that small little actual gap between August 15th weekly low and the August 22nd weekly high, that small little gap up there. We could go up to that and how we trade there, that's what I'd be watching. But if we do have the seasonal tendency for May going into June, if you look at the relative equal lows on ES, those being December 19th of 2022 and the low on March 13th of 2023, there's sell side below that. So if we do have a weakness in ES and the seasonal impact or seasonal tendency does materialize going into the month of May into the second week of June, that's where it would draw to. So I'm kind of like forecasting the quarterly shift before it's in the chart. So I'm not saying it is going to happen, but that's what I'm anticipating. So therefore, I would like to see things get in alignment with that. But obviously, I can trade against that because it hasn't manifested itself yet. So what I was going to say, and I lost my train of thought moments ago, was yesterday I gave you an outline on Twitter where I thought I was going to go, new day opening gap, and then there's a buy sell liquidity pool. And because of my fatigue, the entry, I moved my stop up too soon, and it came down and stopped me out. But the conditions were still there. So I simply just re-entered, and I saw folks saying, what was it? What was the entry criteria? Why, how'd you get back into it? Whatever. The idea of what I outlined, that was going to be the draw on liquidity, and we had already traded it to an old new week opening gap high multiple times. We had 3 times that it traded lower on a 1 and 5 minute chart, so sell side is wiped out. So the inefficiency is going to be on the buy side. So reaching higher, how high can it go? To old new week opening gap, to the new day opening gap, and to an old buy side liquidity pool high, and higher. That's basically what I tweeted. So I recorded that and showed that example, and here it is. So I have ways of trading, getting into a setup that aren't going to be always explained to you. But the models that I teach, if you stay with that, I told you as a student, I told you to wait until the silver bullet forms. The silver bullet is highlighted in that fair value gap. That when I usually do a fair value gap, for bullishness, it'll either be like a light blue, or sometimes if I'm not using blue, it'll be green. If I'm looking for something that's bearish, it's just going to be some hue or color that's red. Okay, but I highlighted that fair value gap in the recording. That's the one that was going to be used for silver bullet, and you can see it does in fact deliver on that basis. It goes and runs up and goes higher. You're learning to be rule-based. I have lots of rules. I have lots of models. I have lots of approaches to trading. I'm not limited to that. And because I've been away from the marketplace, I have to get myself back in alignment. So if I see something, I'm gonna get in it, because I have 81 ways to get into a trade. So I don't have a fear of missing a trade. I never, ever, ever have a fear of missing a trade. You may not have all 81 of my entry mechanisms. You have a number of them, but you won't have fear of missing out, because I'm giving you time-based setups. Between 10 o'clock in the morning and 11 o'clock in the morning, there is a fair value gap that will reach for inefficiencies or liquidity. That happens every day. Every single day that will form. Between 2 o'clock and 3
Silver
o'clock,
bullet right there.
every single trading day, there will be the same type of setup. So there's your PM, silver bullet. True to form, always tuck them in real deep in these lectures, because
Right here,
the
we
weak ones
never really
won't
have
listen.
a market structure
They'll watch the
shift.
people that want to meet the 5-minute trainers. And they'll miss all the stuff that goes around that supports it. But the idea of fearing a missed move, there's no reason to fear that. How many, here's a question for you folks, listen. Put the pork rinds down, okay? Listen. How many trading days next week, 6 months from now, how many trading days are going to have a 10 o'clock to 11 o'clock? And how many of them are going to have a 2 o'clock to 3 o'clock window of opportunity? I know it's a trick question, but you sit down, you're going to have to prepare yourself for this one, but every single one of them have that. So why, pray tell, would you ever fear missing a move? That's what a neophyte does. That's a hallmark. For someone that says, I don't want to be in this trade. I know if I stay with it, I'm going to be a loss. But I know also, if I get out, it's going to move. What? That's what they're talking to you with. They're telling you those things. They're literally telling you, in no uncertain terms, they have no idea what they're doing. Why listen? Their results are not rooted in sound logic. It's just happenstance. And I had 9 months of happenstance. Initially, I had that. And it evaporated. So you want to have logic. You want to have sound logic as to why you're taking a trade. And you want to be doing it with a rule-based idea that you've worked with for months. That you have grown accustomed to. When it doesn't work for you because you're floundering in the beginning, you have no idea what you're doing, but you're not beating yourself up because you're not losing money. You're not wasting the mortgage money. Your spouse isn't going to be upset with you because you've wasted some money that should have been used for some other things around the home. If you just listen to me, I'm going to keep you out of trouble. Your spouse can't be upset with you because you didn't waste any money. I'm not charging you any money. I'm teaching you a life skill that is absolutely going to benefit you in more ways than you realize. But you can't do things outside of what I'm telling you to do and what not to do. If you do, you're teaching yourself. The results are yours. And when you fail, don't ascribe that to me. The folks that listen to me, that do everything I tell them to do and what not to do, and how to progress and practice and study and learn in a demo account. Stop listening to people complain about, I'm teaching you in a demo account. Why doesn't this guy trade with a live account? Why can't you be as accurate as I am? How about that? Okay, let's start there. How come you can't be as accurate as I can? Because until you get that fixed, I don't need to do anything else. So be comfortable with discovering who you are. Be comfortable with not knowing all the answers in the beginning, because you'll learn them. You'll find your own unique approach to doing this. With everything that everyone else has been exposed to with my content, you might not want to trade at 2022 level. You might use an optimal trade entry. You might just simply do a bullish breaker, bearish breaker. That's enough for you. During 10 o'clock to 11 o'clock, if a breaker forms, okay, there's nothing wrong with that. You just won't get the better fill that the fair value gap would give you. So it's a matter of letting your own personal tastes and your own personality dictate what you're going to do. That way you don't feel pressed into a mold and have the same feelings I had, where I can only trade what this guy said in this book. And if it didn't make sense to me, I wasted all those times forcing something that wasn't fitting me. It didn't fit me. And that's why I'm practical. I know I'm not the best mentor out there. I'm not. I have always maintained that that's something I wish I was better at. But nothing out there is better than what my concepts do. There's nothing better than precise. Timely, precise, precision, sound logic, understanding liquidity, understanding the algorithmic macros that really starts these moves. They're predictable. And you can rest assured that there's much more coming this year. And what I've already given you is more than you'll ever find in any other medium. No other teacher, no other resource, no other approach is going to get this much detail. It removes all the things you're worrying about. You're worrying about what happens if this and what happens if that. How about what if you just listen, follow the rules, and let time do its work? Let's do that. Humor me, okay? Spend this year doing what I'm telling you to do and avoid the things I'm telling you to avoid. And then come at me with your questions. Because I promise you, you're going to see results that you can't appreciate now because you don't know what's coming. You don't know where your discovery is going to be in yourself. And that many of them might be painful. But don't run from them. Don't hide from them. You don't want to be in a situation where you're trying to pray your way out of a situation that you put yourself into, and your conscience is telling you, get out of it. Just simply get out. If you have the thought process of, if I get out of this, or when I get out of this, I know it's going to move, you don't know what you're doing. You're not content with a model. So you're greedy. You're being greedy. I know if I get out of this trade, I'm in profit right now, but I know as soon as I close this trade, it's going to run. If you vocalize that outwardly, if you type that into any kind of social media, that is the surest testimony that you don't know what you're doing. You have work to do. Refine that. Why is it that you feel that way? What are you lacking? Targeting. Time of day. Day of week. Simple. But you can't appreciate that until you wrestle with it. And then when you come to terms with it and you understand, oh, well, I don't have to be concerned about if I get out of it and it runs, because the setups that I use, they're time-based and they form every day within a 60-minute window. What am I worried about? Like, you're never going to have another 10 o'clock to 11 o'clock period ever in trading. Like, there's never going to be another trading day that never has that time window. Even on holiday schedules, there's a 10 to 11 because they shut it down at noon. Silver bullet. That's why it's named that. But if you have a full trading day, you have one again between 2 o'clock and 3 o'clock. That could be your entire model. Why are you stressing? You're worried about stuff that has no real bearing on the success or failure of your future trading endeavor. You're making mountains out of molehills. Worrying about stuff that's eating up energy, time, and concern. When in doubt, stay out. When in doubt, get out. There's so many statistically provable, go back in time, don't just take my word for this. Go back and look at it. It's always there. Be content with enough. What's enough, ICT? 5 handles in the beginning. That I did not say stop at 5 handles and never get more than that. My audience members are people that don't know what they're doing and they've never done this before. But you can do exceedingly well with 5 handles. Imagine if you just did 5 handles in the morning and 5 handles in the afternoon. And you did that twice a week. What kind of impact would that have? Just with one mini contract. We're not talking about 5 contracts or 15 contracts because the funded account says you can trade that many. What would that do for you? A lot. What would it do if you just got one of them a week and you had to discipline to stop and you were consistent with doing that?
Oh,
how's that failure?
beautiful PM model.
But see, in your mind, you're already saying that's not enough.
Manipulation below 130.
Way more than that.
Sell side taken.
Incorrect. That's toxic logic.
We
You can't
get
think
market
like
structure
that in the beginning.
shift.
That's what
Then
gets
we get
everybody in trouble.
displacement.
And you're going to find
Then
yourself
we
in that
get
situation where
imbalance.
your heavens are like brass. And you're going to be praying, please fix this. Please help me get better at this. Please, please,
And
please.
then we
Even
see
atheists
buy
find a way to start talking to Jesus then. Completely avoidable. Completely avoidable. If you feel that way, if you feel completely disconnected from the market, you just can't focus, stop. It's going to be there. I promise you. I was on a road trip, came back, boom, felt confident, looked what I was looking for. There you go, the script. And I had a losing trade. You saw me bleed. It's okay. I'm right back in here. Patched up. Boom. Had a value. I read it in somebody else's YouTube channel comments. The video wasn't even about me, but someone mentioned me. And they're like, oh, yeah, he doesn't do this and do that when he's trading. And his examples, he doesn't even have the candle countdown thing. That's definitely delayed data. What? The things that people come up with as an excuse to simply not learn what it is I'm teaching for free is ridiculous. It's ridiculous. But that's human, right? People are human. You're human. I'm human. We all have our things, our quirky little things we have to deal with. Mine is wrestling with proving. Every single time I go out and do anything, in my mind, I'm expecting to hear my grandpa say, that was good. But I'm never going to get it. So that's what keeps me going. All the accolades, all the handshaking, the high fives, and the way to go ICT, keep going, that you all do for me, it's appreciated, but it's never going to scratch the itch that I'm looking for. Okay? So that's not the motivation. You aren't the motivation. But when you find success and you overcome your barriers, man, that's rocket fuel for me. When you're honest with me, and I can track, because I don't know all of you, but I have about a dozen of you on Twitter that are pretty consistent with posting things to me or whatever. Some of you, not among these dozen, but some of you always simply post where you did it right. And you've never said anything about how it was hard for you about that particular day, when I've said this day was hard. That to me indicates that you're sugarcoating and you're looking for outward, approval. That's not what you want to be doing either. You're inviting something that helps you feel like you're wearing a Band-Aid on a blister on the back of your heel. Because in privacy, you're really doing damage to yourself. And when you get something that worked, you're coming out and showing. Basically, what they accuse me of, if people don't like me, they'll say, oh, he's cherry picking. I outlined yesterday what the ES was going to do and delivered it. So I only operated in what you saw. And I showed you a day before trade with the bond markets. That way you can notice the same account. It wasn't just a reset type thing. So anyway, I saw a lot of you asking about bonds. I'll talk about bonds, in the fall, right before we get to November. But one market's enough. And to answer the folks that are asking about crypto, does my stuff work in crypto? I don't know. I have students that swear by it. I've never traded crypto in my life. I have no intention of ever trading crypto. So there's that. So hopefully I answered that for you. That if you've been waiting this long here, I should have said it in the beginning, but I want to get to that story about someone's getting held up at in South Carolina. Can you imagine? Can you imagine? Like, I don't know. Like that was a wild event. But be careful. Be careful in what you're doing in the market, but really be careful in public now. Don't walk around watching your phone, and don't be flashing, money or doing things. And don't go shopping by yourself, ladies. If you're going out and you're spending money, you're buying stuff, you don't know if you're being watched, followed back to your home. It really has opened my eyes up to the potential for things to happen to people. They're not being prepared, and we're going to just get more and more of that over the summer. I think it's going to get wild. So, what's the point of working so hard doing this and finding an extra stream of income if you can find it, and then just fall victim to someone else because you weren't paying attention? You have to be responsible. Respect the level of risk that's in the world right now. Just because we're in the United States doesn't mean bad stuff can't happen where you live in your neighborhood, right? So anyway, got that off my chest. I feel better now. I feel clean. Hope that didn't bore you too much, but you have to know when to stop and be comfortable with it. And if you feel like you're not able to find your way, everything you're trying to do doesn't seem to be working, don't force it. Take a week off. Simply just unplug. Don't even watch my videos. Don't watch my Twitter space or Twitter, what's it called, Twitter feed or whatever. Don't even look at my tweets. Okay? Deactivate notifications. That way you can't be enticed to look at what's going on. And take a week off. The markets are not going to change. The algorithms are not stop working. It's not going to stop working either. It's going to be there when you come back. But what's different is you're going to come back with a fresh perspective. You come in, it's like a car after being washed. It just looks good, feels good to be in it. And yesterday, I knew what I was looking for. I knew what to expect. I saw it, and there it was. Notice the difference between that and 2 weeks ago on that Monday and Tuesday. I was just giving you levels I wanted to see price gravitate towards. Versus yesterday, where I mapped it out, showed you a chart. That's different. That's different. That's knowing what you want to see happen in price because everything is indicating it's likely to do that. Versus, okay, we're looking for a draw on liquidity right now. That's tape reading. That's an understanding of getting a feel for where we're at, building a narrative. Versus knowing what the narrative is and saying, here's what it's going to do, and this is what I want to see happen. That means if I get what I need in terms of an entry, I'm in it. I got in it, fatigued, wanted to get through it faster because I was tired. I regretted actually putting the trade on. I was saying to myself, do I just let my limit order go and go to sleep? Because that's what I wanted to do. And I was thinking to myself, let me just stay with it. But I don't want to have any more risk than I have right now. And I put the stop loss up too soon, and it came to hit me. But nothing changed the trade. It's just I put it up too soon. So I was like, well, I'm just going right back in. So the entry criteria, for those that are wondering, was me simply just getting back in because the original idea that I used, which was trading only with opening gap, and the fact that we had 3 sweeps below, and the market likely to go higher as we traded down into that weekly fair value gap I mentioned a little while ago, and the likelihood of trading up into that volume imbalance on the weekly chart and running out the swing high. I look at my chart to make sure I get the right day here. January 30th. So January 30th is high. I think that going forward is the next draw, and then how we work within the volume imbalance between August 22nd, 2022 and August 15th, 2022's weekly candles on ES. So again, you can find out on ES M2023 on TradingView. I think that's it. So I've missed you all. I've missed talking to you. I have a lot of really good ideas I want to incorporate into the lectures and teachings this week. I have to do some video work. That way you guys can catch up, fill in the blanks or spaces that we had for April. So give you some more content and some lecture points. And we're opening up a new month in May. So seasonally, you want to be studying, does the market provide, and I'll share the seasonal tendency that I'm talking about. I'll give you the actual chart. You already have it anyway. It's in the core content on my YouTube channel. But I'm going to show you why I'm referring to what I'm referring to, and we can watch it real time and see if it pans out, which will be interesting. Until I talk to you next time, I've enjoyed spending time with you today. I'll be quiet until we get into Monday morning. So enjoy your weekend. Be safe.
Good.
the volume okay? Just wait for confirmation on audio. Everything's as loud as I can make it. Okay, thank you so much. So let's go back over to the chart here. I apologize, I'm not sure why OBS was not connecting. It was giving me a bit of a fit this morning. Alright, so we have a old new week opening gap at that 4086.75, which is also the March 6th opening price, which would be bearish order block opening price. So that's what we're seeing hit here. So that's what these levels are. Dollar index has almost reached the 102 level on the downside. So we're watching
That hourly chart is crazy. That's straight.
Very, very ugly morning so far. Pointed your attention to 40.79 and a quarter this morning on Twitter for that 5-handle run. And I mentioned 40.83, which is consequent encroachment of a discount wick on March 6th, 2023. And the other levels we have here in the chart. Admittedly, we have had a pretty impressive run since Tuesday. It's all one directional. And I'm not trying to pick the top in here. So we're going to be trading the intraday volatility with our tape reading today. Specifically reserving our attention to the 10 o'clock hour. So we're going to try to find our 5-handle run in that. And I apologize if I don't sound so eager to be here. I really don't want to be here. I have a migraine I've been dealing with since yesterday afternoon. And I appreciate all your suggested remedies, but I've tried all that stuff. It just sometimes happens. Alright, so we are looking
ICT has a migraine.
fair value gap here in the form of buy side, bounce, sell side efficiency. We traded down into that 905, hit the bearish order block on March 6th, the opening price. Look at your daily chart and you'll see that opening price. It's also an old new week opening gap low. I'd like to see it try to move up into that more. If we get above 40.89 and a quarter, I like 4104. It's a continuation on the upside. If we reject any possible correction of any kind, 4104, I like that upside continuing. I'm not suggesting that's the case here yet. I'm waiting more specifically for the 10 o'clock hour to begin. Giving up the first 30 minutes of trading in the opening range. I'm looking at the lows in here. Should be correct. I think sell side 72, 4072. All I'm doing is mapping out the morning right now. I'm not calling out a level that's going to...
Very curious to see if we actually do displace here.
Upside above the new week opening gap high here. That's an old new week opening gap. That's not present week, by the way. And let's take a look at where we opened up. I'll give you the opening range gap. Okay, that's where we opened.
Is he on a 1 minute chart or? Oh, he's bugging. He has it at 9.
But those that are asking how I do that annotation like that, that's just how I do it. And toggle the regular trading hours. Down in. Closing price rate. There. You probably wonder what that is. It's just an afternoon 5-handle run. Oh, yeah, he's hiding. You probably wonder. Closing price rate. There. You probably wonder what that is. It's just an afternoon 5-handle run. Oh, yeah, he's hiding. Alright, so opening range. Range gap. Okay, so we have a lot of premium in here. So even if we went down 1/3 or 1/4 of the range, that would be something to be mindful of. So one of the things you want to do is you want to have your range like this defined. Pull your fib up, get 25%, 50%, 75% of the range. I'm not suggesting we're going to go all the way down here, but we'll see what we get in the 10 o'clock hour. So back to electronic trading hours. So our range will be now on the chart. Okay, so we see opening range high, opening range low.
He
Keeps the chart really
used
clean
9 o'clock
and
though.
allows us to take a look at what may be a consideration for repricing to close in that gap. Sell side resting below these relative equal lows. If it were to go for that today, the gap closure would be something to be mindful of too. And that's assuming a whole lot, folks. I'm not suggesting that's in the cards at all yet. Like I said, I'm submitting myself for the first half an hour of trading today, waiting for more information and being completely willing to miss the move. I have this this range here. I want to see if it becomes an inversion, fair value gap. So in other words, it would be, or it offered support here, trade up to new opening gap low, and March 6th opening price, which is bearish order block. We had a nice reaction so far. So the levels we're watching now is the opening price that was this morning, which is right here on this candle. So we're watching if there's any sensitivity to keep price lower. So far there's no gap in this movement lower. And if we get below this fair value gap, will it act as resistance and breaker right here. All one-sided since Tuesday. Only small consolidation was in the evening hours last night. My local time between 6 and 11, and then we started extrapolating to the outside. Apart from the levels I was mentioning yesterday, if you're experiencing some difficulty in reading price action or submitting to what's available in price action, this is a very difficult market. It's one of those markets where you have to know where it's going, higher time frame, and get into something that would otherwise be unconventional, and just hold it or sit on your hands. And it's very hard for a new trader or student or someone that's trying to make their ends meet. They have to do it with their live trading and such. It's hard to have that impulse quenched. It's hard to sit still, in other words. So you go in here and start looking at things. And it's becoming very difficult with all the things that's going on, all the bank stuff and geopolitical stuff, de-dollarizing, which somebody talked about last year on Twitter Spaces. So I'm looking at all of my other charts to keep myself from getting disoriented, because I know every time I've messed around with this OBS and trying to toggle, sometimes I go back to a chart and I lose audio, and I don't have the patience today to have done something like that. So I'm going to stay on this chart and I'll just refer to things I'm seeing on my other monitors. Admittedly, if I were being honest entirely with you, I would tell you that I'd like to see the dollar index go a little bit lower and allow that new week opening gap high to be traded to 4089 and a quarter for ES. That's what I'd prefer to see. Not that it can't turn around and correct here. It's Thursday. We've had a one-sided range since Tuesday. I had to double check, make sure it was Thursday, by the way. My head's pounding me so bad. It's hard to focus. So if you take a look at your NASDAQ chart, pull that up and pull up a 1 minute chart and show essentially from 7 o'clock this morning to, I can do it here. Let me just do this. Okay, so here's this morning's trading so far on the NASDAQ. It just keeps reaching higher, 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 and down. Okay, Dow's rather blunt-ended on its highs. And back to ES. You can see how we're much more jagged on the upper side, reaching for buy side on ES. And I'll talk through them one more time. Just you're paying attention to the way the highs are delivered here, respectively between the three averages. So ES, you've had multiple highs higher. I don't care about the higher lows. That's not what I'm referring to. I'm specifically taking your attention into how we have these higher highs. And then in the Dow, we don't see that. And in NASDAQ, it's similar to ES. So to me, because we're on Thursday, and this is like a note for your journal, day of week characteristics, we've been one-sided, algorithmically delivered, all been straight up, hardly any pullbacks, if at all, just smaller consolidations and going higher. So that's a very painful train to stand in front of if you try to short that. As my son found out, that's not fun to do that. And where they end up, where they stop, is a very hard read. So you have to demand a whole lot more from the marketplace to offer a, I don't want to say a reversal pattern, because I don't want you to take what I'm saying here is a precursor to I'm calling the top, I'm not calling the top, but I'm anticipating, and I teach my students to anticipate, the New York session on Thursday generally tends to create the opposite end of the range. So what we've been doing this entire week has been just powering higher, just keeps digging higher, 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 higher. It's gone to logical levels I've mentioned in my Monday analysis video on YouTube. I specifically aimed for the buy side. I did not have any sell side mentioned in the chart, even though I had discount arrays mentioned. I said this is the side of the marketplace I'm interested in going forward. So you've known since Monday evening that I've been looking for upside. I mentioned on Twitter how, and I've mentioned it other times in other lectures when I've gone on around about it, the observations I've made as a mentor teaching other people how to read price action and dealing with many different personalities. Hang on a second, just want to double check. Alright, so dollar has a little bit of a imbalance here at, let me tell you where it's at here. It's going to be on the 5-minute chart for Dixie. It's going to be 5-minute chart, DXY on TradingView. And it's the Thursday 8:30 candle. You want to annotate that as a fair value gap. It's a SIBI, sell side imbalance, buy side inefficiency. So that has my interest right now. If the dollar can correct into that, that would allow for ES to try to reach some measure of sell side or a discount. So dollar higher to there. I'm not suggesting it's there. I'm not saying it's an entry right now, but as we stay in this little narrow range that we're in right now, as we enter the 10 o'clock hour, that's something I would anticipate that. But right now we're just waiting. More or less just waiting for the time of day to line up with what would be better in terms of price delivery. But I was mentioning, over my years of doing this and teaching, I've had a lot of interesting personalities come my way. Some of them very pleasant to work with. I have a lot. Most of my students are just like that. But invariably, you're going to meet people that are just cut from a different cloth, and they're just very stubborn, argumentative, or contrarian by nature in every aspect. And I'm something of that. When I first started, I wanted to do my own thing, my own way, and everybody wants to do that. And I have a lot of respect for people that do that. But as I mentioned in discussions about what it was like when I was coming up and learning how to read these charts like this, when I first learned certain things that were repeating that weren't really in my books, I started to share them with my uncle, and I would tell him, look, let's just watch gold tomorrow. Let's watch soybeans tomorrow. Let's go in with these expectations. And he would go in there and trade it opposite, like he would try to fade it. And we're trying to just really just tape read, okay, practice. I'm trying to convince him, and he goes out there and does the opposite with real money, and then has an attitude and starts to punish me, in our conversations, like I caused it to happen. When I said, this is where I think it's going to go, and you went the opposite. Why'd you do that? Well, it's because I want to be able to do this on my own. Then my oldest son, who I tried to talk into trading anything but crypto, he got into crypto, and he's lost over $20,000 doing the things I told him not to do. Okay, I know there's some of you that are listening that are crypto traders, and you probably make money. Listen, I'm not a crypto guy. I'm not a crypto professional. I don't know anything about it except for I wouldn't want to trade it. So I've been pretty consistent with that. So he's in the red, 20,000 trading crypto against his dad's advice, but he wanted to do things contrary. He wanted to do it his own way, And there for a while he was making a little bit of money, but then all of a sudden, it went against him, and he's got all kinds of issues with the Coinbase drama that went on. So, long story short, my son that is now involved in trying to learn how to do this, he is pursuing a model that he's carving out. So he's very reluctant to stay to the rules, and the conversation pretty much went like this: I need to do it on my own, Dad. I need to see it on my own. If you just tell me everything, I'm not learning like that. I want to just try it my own way, and if I fail, just let me fail. And I'm struggling with that as a dad, because I feel like the dad is walking behind him. And I know some of you are like, what does this got to do with anything? If you like that, just get up the road, go watch somebody else, because nothing's happening in the charts I like. When it's there, I'll talk about it. But I feel like I'm that same dad that's behind him, and he's just learning how to walk, and I'm right there making sure he doesn't fall off his head or hurt himself, but letting him feel like he can do it on his own. This is something different, though. This is my entire life. I know what I'm doing with this. I know how to teach it. And the stubbornness in him, which comes from me, admittedly, I'm not oblivious to that, but trying to do something just to confirm what I've told him would happen if he just didn't listen. For instance, we're looking for higher prices. He wants to short. He wants to do it. He has to do it. He has to push that button doing that. And it's very frustrating because I don't want to steer him into a argumentative relationship over charts like my uncle. It's very frustrating for me because I don't want him going through what is available to everybody else when they don't listen, which is temporary failure and setback. So when you're shorting something when it's predominantly going to go higher, regardless of what you think you see in the chart, it gets right back to how these candlesticks are Rorschachs. They're ink blots. When you go to a psychiatrist, which I've never been, but when you go to them, standard practice in the past was they would show you these ink blots and they would ask the person, what do you see? And they would more or less manifest their own view about what it is that's in their head, really. And they force that inside of the image of the ink blot. Well, these candlesticks many times operate like that, especially if you are emotionally stimulated to the point where you have something to prove, or you're desperate, or if you're a gambler. And unfortunately, that's what creates that learning curve that's much steeper for some people that come to either me or anyone else that teaches technical analysis. Whether their analysis concepts work or not, it's irrelevant. The concept is that most people have this ingrained characteristic. They want to do it opposite. And I don't understand how that, I understood for myself why it was like that. I didn't trust anything. I didn't trust anything at all in the books after a while. So then they made me a contrarian. So I don't take anybody's word about what they think causes prices up and down. I just discount all of it and say it's all nonsense, which makes me abrasive to some people, and they don't like me because I'm very strong-willed in that regard. But my son's struggling with that in his early stages, and he wants to just now prove he can do it on his own too soon, like this is a video game. And I'm having a real hard time trying to be, I don't know, the word escapes me, but I'm struggling with the dad in me versus the inner circle trader. Because the inner circle trader is in me saying, all right, you so-and-so, you're going to get chopped up and you're going to feel it, and then you're going to feel stupid, and you're going to complain to me about why you didn't listen to me. But I don't want him to go through that because I know those things are major setbacks and they're barriers mentally. Because then you start worrying about, am I going to do that in the future? When, if you follow the rules, the likelihood of that happening is less. So, and I've had students in my paid mentorship who paid me to teach them, improved daily, weekly, monthly, for years. I said where the market was going to go. And over 90% I'm accurate. It's documented. There's no denying it. And I had people in there from every intake. Every time I opened up a mentorship enrollment, some new group of people would come in, and invariably there'd be some in there that would be telling me they can't make it work. And come to find out, they're doing the opposite of what I said in the commentary, which makes no sense to me. I don't understand that. Like, I don't understand. Like, if you're paying someone, like, for instance, are you going to go to Tiger Woods if he offered the opportunity to mentor you on how to play golf better, how to drive better, how to putt better? And as a reminder, folks, I know some of you don't like to hear these stories, but look at Christ. Is it doing anything yet? No, so just relax. The idea of going to someone that knows how to do something, it's proven. You've seen me do this many times openly, calling things on Twitter, my group, my private older students. They've seen me for years outline market in great detail and watched it pan out. So as a mentor, it's still a struggling point for me to understand why individuals, knowing full well that there is a track record of consistency and accuracy, and that same source tells you this is where you should focus on price. This is where the next draw on liquidity is going to be. And if it's above the marketplace, why? Why do these individuals fight that and fade it and then complain that they can't do it? What are you complaining about? Why even complain? Like you're looking for some external responsibility for your own actions when it was you that did it. Like you're doing it. So it's almost like borderline insanity. That's what it feels like. From an observer's perspective on the outside, it borderlines insanity. You're doing something, expecting a different result from what statistically has been proven. There's consistency in what I'm suggesting is going to happen in the market, and it's very hard for me to wrestle with that now. Because I've had now 2 sons exhibit that, and I've tried everything I can to avoid that. And they've seen me do this. They've watched me call it. They've watched me paint it out for them. Tell them, look, this is what's going to happen. And then something goofy happens with this boy. He gets in this pursuit of getting funded. And it's like, I'm going to do it my own way. And I'm like, you're making this harder than it needs to be. And I'm trying to be very patient. I'm trying to be very unlike myself, let's put it that way. Because I'm not typically a patient person. I may seem patient, but I'm extremely impatient. So I try to do the best I can in terms of not drilling him like I would someone else. Like any of you, if you did this, I'd be blunt with you and just say, you're the problem. You need to fix it. You're not doing what you're being told to do. Out of all my kids, he's ready all the time. Ready for a competition, ready for an arm wrestling match. He's bigger than I am now and stronger, and he likes to show it to me. So it's just one more thing where I want to see him be better than me at this, and I believe he could be, but he has to allow himself to be taught, and I don't know what type of threshold he has to hit before that breaks in him and he just listens. And maybe that's the reason why he hasn't shown any interest up until now, because he knows that maybe subconsciously he would carry on like this. And when there's something at stake, now it's a prize, right? It's a prize, it's a trophy. If he can do this on his own, which, what's the chances of someone going against where I'm saying the market's going to go, and they haven't traded, they haven't had any experience, they have really no idea what they're doing, but they have the moxie to just go ahead and try it. And I try to explain to them, I said, even if you were to do it correctly a few times, or even get funded, doing it opposite to what I'm telling you, that doesn't indicate anything except for happenstance, coincidence. That's not skill. That's just, it just happened. And the chance of you consistently doing that, going against the things I'm teaching, it's not, you're not gonna have a favorable outcome, let's just say it that way. So, maybe that's the reason why I have a migraine. I'm stressing over this boy, he's gonna give me gray hair. Look for this level here, expect it to go down to here. And then I'm calling the higher levels, and he's pointing to other things that's below the marketplace. I'm like, why are you looking down there? He goes, well, there's a gap there, Dad. That's that thing that we're supposed to be looking for. Did you not listen to me? Did I explain this in a different language that you don't know? We're going up. We're reaching up. So why are you going to go short? Because there's relatively equal lows down there. There's self-stops down there. Okay, but they're not going to have to be taught or reached into right now. It has unfinished business above us. So, I don't know. Just pray for me, because I'm having a hard time dealing with it. It's easy to deal with, basically strangers. I can just be harsh with you when it's necessary. When it's your flesh and blood, it's not so easy. Because I want to make sure that I don't be hot-headed like I was with my oldest son, because I would really scold him and say, look, you got to do this, you got to do that. And I guess he was just like, well, I'm just going to go do crypto. And that way I'll show you. And that didn't work out well. I don't get it. I don't get it. Alright, so we were able to almost reach up into that 40.88, which is consequent encroachment of an old no weak opening gap, which is what these levels are, okay? We're at 1 minute after 10. Dollar index is still just meandering around its low of the day. The Dow futures, let's take a look at that real quick. It's really slid lower, as you would expect, because it was the one that was failing to make that higher high, or higher highs, when the NASDAQ was able to make the higher high. And ES, made its higher high. So we have SMT divergence after digging a little bit deeper into a premium new week opening gap. The opening range gap high, which is 930's opening price here. I'm not going to see, do we get below that? I'm not interested in chasing this higher, so that way you know. It can go higher, and I will miss that move. I will not engage that, I will not touch it, I will not look for it. And I'm okay with that. If it goes higher, if it goes to 4,100, I don't care. I have rules I have to stick to, and if I'm wrong, because I followed the rules and didn't take a trade, and missed the move, to me, that's fine. It stings a little bit, my ego and my pride, but it doesn't hurt. It doesn't hurt you. Being wrong does not hurt you. Doing things wrong in a trade and abandoning the rules, that's painful. That hurts you, because it either undoes the positive things that you built up in your model and you following that model, or it starts the beginning processes of bad habits. And bad habits are something you want to make sure you don't want to do those things. Feeling impulsive, feeling impatient, I gotta push the button. Whatever ICT says today, I'm going in there. I need to get my phone account passed, or gotta get my rent money. Today ain't one of those days, just so you know. If you look at how price has been behaving, like it's a lot of whipsaw in here. Even though it's going to levels that we can anticipate, the clean, real low risk, just precise points of entry, they're not as obvious right now. And I know when I say things like that, right away you're thinking, oh, here it is, that's the sign that they're changing the algorithm. It's not happening. Or it starts the beginning processes of bad habits. And that thing I eat trade and miss the move, to me, that's fine. Go higher. And I will miss that move. I will not engage that, I will not touch it.
Loki, I'm end stream. I'll have a market review later. Yeah, I'll be back later. Little 10-hour shift here, eh? Little 10-hour shift. I'll be back tomorrow for sure, and I appreciate you guys. I'll see y'all in the next one.